editors can't. Our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editors Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360, real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, my colleagues Alex Matthew and Hiral Dadia. And guys, not a bad day yesterday. I think maybe a bit of a quiet start today for the rest of the world. But if the momentum were to continue at the broader end of the spectrum, I don't think too many people would be complaining.
Yeah, I agree completely. We saw a little bit of a cooling off towards the end of the session, and in fact, in the Asia Pacific region as well, you're seeing a little bit of red on the screen, maybe profit taking kicking in. I mean, on a day after the index itself goes up by 5%, you can't really blame anybody for taking money off the table. I think that might be visible in trade today as well.
Yeah, and exactly what Kush was indicating as well in yesterday, right? That, you know, the moment you see those higher levels, I think people will book some profits, and that's evident. But I think it's healthy consolidation that we are seeing right now.
Yeah, absolutely. And there's quite a bit to talk about on the global stage. Let's get straight into that. US President Donald Trump saying that the Iran deal is all signed. And this is exactly what he said. The comments came during talks with the French president at the G7 summit. The BBC also quoted US officials as saying that the deal is signed electronically. In fact, listen in to what he said at that conference.
I think a lot of great things are going to happen in the Middle East right now. And very importantly, the oil is plummeting down and the stock market is shooting up like a rocket today. They're like record kind of numbers. And the oil has taken its biggest plunge, and we're into the low numbers. Not quite back yet, Kevin, to the extent, but we're getting close to the numbers we were before it all started. And the main thing is that Iran will not have a nuclear weapon. They fully agree to that. And we've done a great job. And hopefully it's going to be a good relationship and we're going to get along. And if we don't, we go back to where we started.
Okay, let's hope we don't go back to where we started. But Trump talking about the stock market going up like a rocket, I wonder if he was referring to SpaceX because it's heading higher as we speak. But he is signaling that Iran deal progress is taking place and says that the Middle East outlook is improving. The deal, by the way, is signed electronically, as I mentioned, between Trump, J.D. Vance, as well as Iranian Speaker Mohammad Baghir Ghalibaf. What is in the deal? And there's quite a bit of conjecture about this. Iran and US deal is currently just a memorandum of understanding. The MOU is only 1.5 pages long, and it is a very general document. Technical negotiations are set to start this week with Iran. And Iran, in that MOU, is to commit itself to regional peace and stability, including stopping the funding of terrorist organizations. And Iran is said to also have verifiable commitment to not building a nuclear weapon. All of that is based on an interview that J.D. Vance, the US Vice President, did with CNN. Now, there is still one leg of this entire conflict where there are question marks and there is a little bit of pressure, and that is the Israel end of the conflict, and that is the Lebanon question mark. Benjamin Netanyahu held a press conference just a short while back yesterday, and what he said was that Israeli forces are set to remain in security zones in Lebanon, Syria and Gaza. Those forces are set to remain as long as necessary, so no timeline given, and retain the freedom to act against attacks. Iran will not be allowed to obtain nuclear weapons with or without a deal, is what Benjamin Netanyahu said. And finally, let's take a look at the markets, because Wall Street rallied on Monday in line with those global risk assets. Nasdaq Composite gained 3%, the Dow ended with gains of close to 1%, and the S&P 500 went home with gains of as much as 1.7%. Markets in the Asia-Pacific region, as I mentioned at the start, had started off a little mixed. In fact, if we do have those hot pods, it would be great to pull those up. So two of them, Nikkei as well as Hang Seng in the red, Shanghai just about flat. By the way, the 10-year bond yield in the US ending at 4.47%, marginally higher, because the market is watching for outcome of the Fed's policy meeting on Wednesday, that is tomorrow. And the current meeting of the Fed is the first chaired by Kevin Walsh. Of course, traders are expecting that the rates will be held steady, and the US dollar is something to watch as well. It hit a 10-day low against the euro and sterling, and Brent crude hovers around the $83 to $84 per barrel mark. One last update: Nvidia has announced on Monday that it would raise $25 billion through US bond issue, and this is the first since 2021. So a lot of people raising capital in order to fund capital expenditure. We've got David Roche, a strategist at Quantum Strategy, joining us this morning. David, very good morning to you. It seems there's quite a bit of cheer, and we were speaking not too long back about what you think will happen with this conflict. And I don't think that we're out of the woods yet. Would you agree?
Yes and no. Look, we've always had the principle that in discussing financial markets, what matters is whether the tankers and the oil is actually moving. And the likelihood is that the tankers and the oil are going to be moving. And what that does is give markets some certainty about the availability of energy, not hitting the kind of inventory supply cliff in the middle of summer. And you get lower oil prices, lower inflation. And you're not going to get a stop in the global economy. So in that sense, this is different. Now, where this is not different is that it seems so far, and we haven't seen any final document, and I certainly wouldn't take the Vice President's word on this as being the Bible truth, we have not seen any documents, so we do not know what happens with the control of the Straits, what happens to nuclear, what happens to the Iranian proxies, and what about money. The most important thing I think to note in this, from our point of view, is that this deal gives Trump what he wants: lower oil prices. Of course, he created the higher oil prices himself, but he's going to now say that he gave the world lower oil prices. So he gets that political acumen. And the second thing that it does is that it brings the Iranians into the dollar flow, because it allows the Iranians to trade and export oil. If you take those two factors, neither the US will go back to war, nor the Iranians will go back to war. So that is what is different. And the result of that being different is that both the parties, the US and the Iranians, have an interest in keeping this going, because it keeps the oil going, and that pays them both.
David, interesting point that you make right now as well, that yes, all parties are interested. Good morning, Hiral. So my question to you is, now if the peace deal holds, because that's the question and that's the dilemma right now, will it actually fuel a, what would I say, a sustainable deflationary boom? Or do you also see that release of the trapped cash that's ongoing right now, specifically from a market's perspective?
Look, I don't think the key element in this is releasing Iranian cash. I think that'll come very slowly because Trump doesn't want to be accused of doing a deal like Obama flying dollars in aircraft to Tehran. He wants to make sure that if Iran gets money out of this, it gets money out of this by exporting oil and being a part of the opening of the Straits of Hormuz, because Iran itself is a beneficiary from that. If you go down the road from that, it's going to take approximately 3 to 6 months to restore maybe 5 million barrels of extra production from the Middle East. And that is a normalization which is quite slow, but it is nevertheless a normalization, and the markets will look forward to that. And then you have to come to the fact that there are 130 million barrels of oil in storage on land in the Gulf, and there's another 115 million barrels of oil in storage on trapped ships in the Gulf. And that oil is going to come out, which will get you over the period between normalizing shipping and normalizing production and today. So essentially, you do get a quite quick improvement in the supply side, and markets will see that and like it.
Fair point. David, there is a brokerage house which has done a US trip, spoken to a bunch of investors, and it seems that money for now will not move to markets which do not have AI, DRAM, etc., etc. India falls squarely in that bucket. Can the markets still do well because oil prices have come off, or will it need foreign flows necessarily for Indian markets to outperform meaningfully from here?
Well, look, I think the most interesting point in what you say, which is a key question, is if you look at AI and you look at SpaceX and all the rest of this stuff, you look at the IPOs, you are moving into a position where equity supply is going to be in excess. We have lived through 5 years in which you could argue that there was not enough new supply of equity. Now there's got the heap of new supply of equity. And the question is, are the flows going to be maintained to actually stop the market becoming, getting indigested and starting to fall because the supply is in excess of demand? I don't know the answer to that question because it's not really my domain. But I would say one thing. I think that the AI boom will be prolonged by the fact it does not have to hit the reality of a severe oil shortage curtailing the activity of the whole world economy during the summer. That obviously would have been such a hit to AI because it is an economic player within a broader economic context. That would have been a huge hit to AI, and that is off the table. So essentially, while AI is a bubble, it can probably go on being a bubble for longer because of what has now happened in the Middle East.
So lots to watch out for as well, David, but thank you so much for that. And again, thank you from the three of us for joining us this early in the morning, this early, overall. But I think you're in Brussels, right?
Yes.
Okay, thank you so much for that. Always appreciate it. But overall, if you see in terms of Indian markets as well, today you're seeing that up move of 35, 40 points in terms of what implied open is indicating. But yesterday as well, we did see a gap up opening. And then largely throughout the day, there was consolidation that happened during the session. Now, as Alex was mentioning as well, there was profit booking in that latter part of the day. And you did see that happening near the psychological mark of that 24,000. The moment we were somewhere near 24,000, that's where you started to see profit booking happening. Now, indices have managed to close in the positive territory, and the sentiment overall has remained supported by easing geopolitical tensions as well as the sharp decline that we've seen in terms of Brent prices as well. Now, despite surrendering a portion of their intraday gains, the benchmark indices have ended the session firm. Nifty 50 almost a 230 points gain is what we've seen, close to the 23,850 mark. Sensex as well, similar kind of gains coming in there. You've seen resistance at 24,000 once again. Sectoral front, interesting moves in terms of Nifty real estate. That was the top performing sector. and you've seen strong gains coming in terms of cement and auto stocks. In contrast, pharma and healthcare, that's where you did see some bit of profit booking as well, but that's after the recent outperformance. All the other major sectoral indices ended in the positive territory. Your broader markets, they also remain pretty much resilient and clearly outperformed your benchmark indices. Your mid-cap index as well as the small cap, gains of little over 1% is what you saw. And there was broad-based participation across the board in terms of the rally yesterday.
Yeah, let's see if there is an encore today. Very unlikely, but let's wait and watch. But, headline numbers may stay flat, as is evinced in multiple brokerage notes. And I think we gave you a sample of what Jeffries is saying. Maybe we can pull it up again, just to tell you why the Nifty move may not necessarily be very, very interesting, because Mahesh Nandurkar, for example, went to the US, spoke to 50 plus FPIs, and he's saying that India is a consensus underweight for FPIs and it's unlikely to change in a hurry. I mean, this is being kind, right? So let's say it won't change for the next 3 months or 6 odd months, or until the outperformance becomes so stark that people say, "Abhi wahan pe kahan paise dale FPI?" In the AI plays, and therefore maybe look at India. The FPI is apparently saying that the relative valuation is a concern, and they would want clarity on AI DRAM to peak before betting on India. I mean, just exactly the point that we just made right now, right? That the relative valuation should change materially between India versus the rest of the world, if you will. We hope that means that those markets get melt up instead of India coming off, if you will. And he's of course also outlined where is it that money may come in. So churn towards newer ideas and hard assets are likely. I think infrastructure forms a part of his list and a few other sectors. So keep them in mind. But the headline point again that I'm trying to make is that the Nifty may not really go anywhere else. There might be other pockets to look at. But you expect more good news soon, right? The India-US deal, maybe a cabinet reshuffle for the better, sector-specific excise and ADD and anti-dumping duty announcements. So all of that will keep sectoral things in play. And of course, something that we've been speaking about for such a long time, not everybody else has been, frankly, nothing new, that stock-specific action will likely to be in focus every day. And guys, I just thought that because we speak about it so much about stock-specific action, maybe we should highlight a stock-specific action, right? Yeah. And what's very interestingly that happened yesterday, there is a company called Bhai Kakaji Polymers. I had not heard of the name before this, okay?
Likewise.
Yeah, exactly, right? It's an SME stock, by the way. But the interesting piece is Motilal Oswal Financial Services purchased about 6 lakh shares, which is 2.8% stake in the company for about 11.76 crores at 196 rupees a share. Now, the point being, this Bhai Kakaji Polymer is a 423 crore market cap company, manufactures and trades a wide range of plastic and polymer-based things. But even in the SME space, right, the company's had an ROE track record, 3-year ROE track record of 27%.
Wow.
So that is great. It trades at 18 times PE, and this is after the stock rallying from 155 on June 8th to about 198 as of yesterday. But the emphasis is that I'm trying to make is that marquee money or smart money is also going for very, very bottom-up ideas, and they're not shying away from betting on really small names as long as there might be a story.
Yeah, and there should be a story, and we have to be very careful, just viewers, in terms of whether it's SMEs as well.
Yeah.
So I'm sure Neeraj would have given that caveat.
100%. Don't follow a smart money. Do your own research. But I'm just enumerating that we're talking about stock-specific ideas every day.
I mean,
this is an example.
The flow of institutional 25% in the last 5 days as well, and it's a recent listing. If I'm not mistaken, it listed in 2026.
I have no idea. I'm just highlighting this because it's a stock specific.
It's not about the stock. It's about the idea that people are venturing further and further into the market, in the broader end of the market. Not just, and we've been talking about micro caps, but this is an example of an SME. So that's, I think, quite interesting.
And I think one more thing that we need to mention about is the SpaceX IPO. I mean, the 2 sessions of gains that we've seen, what was interesting that I was reading is the interest that Indian investors have shown in the US stocks. There were reports indicating that the trading volumes on platforms like Vested Finance and In Money have surged almost 20 to 25 times, or percentage, sorry. 20 to 25%. Wow. So, but that's also a good amount of interest for India being generated when you talk about the US markets, only because of that one IPO which has come right now.
True.
Okay, so that's with regards to individual stocks that we're talking about. But overall, we've entered today's weekly expiry session, having gained nearly 700 points across Friday and Monday. And the swift up move from last week's lows, that is around 23,150, that has actually resulted in some bit of buyers' exhaustion at higher levels. Now, we've briefly crossed 24,000 intraday, but could not sustain above those levels. And the next leg of up move is something that the markets are waiting to unlock. If you talk about the price action, it's suggesting that while the sentiment is turned positive, traders are remaining cautious near key resistance zones, that is 24,000 to 24,100, and that remains a critical hurdle. Now, a decisive close above this zone could actually trigger a move towards 24,300 to 24,500, and the buy on dips remains the preferred strategy as long as key support levels hold. You're seeing support coming in at 23,800, and you can see the other levels as well. In terms of Bank Nifty, continues to act as the market's primary locomotive. Immediate support coming in at 57,110 as well, and a clean clearance of 57,450 would open the path directly towards 57,636. So that's with regards to what the factors are indicating. But let's go across to Sharad, who's standing by to take us through all the F&O cues today, taking into consideration its expiry. Good morning, Sharad.
Good morning. A little bit of technical cool-off we can expect a little bit in the day's trade. And of course, this is happening after 2 days of strong rally. But there's an interesting data I'll point out. Right now, the opening cues are suggesting a minor increase, in the opening cues. The Asian markets also opened, you could say, kind of mixed. And we can see a little bit of pullback or a consolidation in the day's trade. This is how the setup is looking for both Nifty and Nifty Bank. Also, looking at the numbers, especially the FIs, is a very good data. After 13 straight sessions of big selling, now we are taking that as a buy. FI cash, it's a very small amount, but nevertheless, it's a positive data point. FI cash of 200 crores of inflows coming in. When it comes to the shorts in the system, minor increases happening. Yesterday, it was 88%, and now it's around 87%. But nevertheless, we are seeing a good improvement, at least when it comes to the FI exposure to the Indian markets. But let's look at how the open interest is moving around. And there's that 24,000 levels. That is where the major concentration is coming in, and if that 24,000 level of resistance is broken, then we can see a good up move, at least 200-300 point, as pointed out earlier. Apart from this, let's look at the stock specific actions. What's happening here? Open interest gainers. I'd like to point out Tata Power. A little bit of long build up is happening after a long time. Volume is coming in this counter. Also, as your capital market stocks like Motilal Oswal would be in focus yesterday. There was, of course, some broking upgrades also coming in this counter. Open interest losers, let's see what's there in focus. Of course, Shriram Finance, that's where the short covering was happening, and we are seeing a good momentum, especially in the CV play. Chola Finance also making it to the list, and we had covered this earlier as well. So there might be a good momentum in these counters as well.
Very interesting, and certainly something to keep a watch out in the rest of the week as well. Today, of course, is the weekly expiry. Let's talk about individual stocks and the developments that have come in overnight, and one of them has to do with GMR Airports. This is, now, it's not as bad as it could have been. It's not as bad as it has been in the month of April as well as in the month of March, because those disruptions had a bearing on air traffic. It saw considerable improvement in the Delhi air traffic, and Delhi passenger traffic rising as much as 15% in May, and the domestic traffic as a result of that rising as much as 8%, even though there was degrowth in Mopa as well as in Hyderabad. International traffic has grown by only about 0.4%, and that, of course, has been more affected by geopolitical conditions. So, it's important to track, particularly from the perspective that because of the month of May, you have FY27 year-to-date passenger growth that now stands at 0.5%, which is at least an improvement from what you saw in the month of April. Patel Engineering, the company has received a small order, but it's something to keep an eye on. 123 odd crore rupees. This is a letter of acceptance for a Tasgaon lift irrigation scheme in Maharashtra, and the company's share in that contract is valued at 51% of the total contract. And the third piece is Larsen & Toubro and JP Morgan weighing in. It is a stock that has gained about 4%, 5% on Friday, 3% in trade yesterday, and JP Morgan has gone ahead and maintained its overweight and hiked its target price to 5,060 from 4,570 earlier, so quite the hike in the target price. The stock currently trading at 4,169. What it says is that the Middle East deal removes tail risk. The Middle East ordering and execution has been by and large normal so far. The five-year strategic plan targets growth with ROE and aims to make L&T future ready. FY27 guidance is healthy with H1 impacted by war. L&T remains well positioned to benefit from these opportunities as well as capex in India. Now, we did have a bull versus bear case in the closing show yesterday, and it should be on social media. It was by my colleague Parth, so I'd invite you to go and check that out. More than anything else, guys, it's not the size of the order book that is the question mark for Larsen & Toubro, because it stands at well over 7 lakh crore. And so
large
therefore,
number,
and so therefore it is about execution. And really, that has been the big conversation point in heading into FY27.
FY27 execution is going to be the key. But interesting strides that we are seeing in the world of AI right now, where you have HCL Tech, which has actually backed Sarvam AI, and this is where they are leading a $234 million funding round in the company. They have been leads as strategic investors with $150 million, and they've acquired almost a 10.46% stake. Now, in terms of Sarvam AI, all of us know that it's India's sovereign full-stack AI company, and they've raised $234 million in Series B. If you talk about the post-money valuation, it stands at around $1.5 billion, and at 315 times FY26 revenue. If you have to talk about value, that's the valuation at a revenue of around 45 crores. They've said that the company will be accelerating Sarvam's goal of building an end-to-end sovereign AI ecosystem for India and beyond. Now, what will it actually mean for HCL Tech? It develops industry-specific language models for its global enterprise client base and will accelerate sovereign AI solutions for the government and regulated industries overall. Morgan Stanley, they've maintained an equal weight. They have a target price of 1,410. What they're saying is that the investment in Sarvam AI may provide a strategic advantage around the theme of sovereign AI and governments and regulated enterprises globally. However, with a minority stake, the financial impact will be very limited for HCL. And there could be a flip side risk to the current investment becoming obsolete under the assumption of a low success ratio. Nomura has maintained a buy as well. They have a target price of 1,600. And what they're saying is that this is the first of its kind investment by any Indian IT services company in a sovereign AI company. I think this is an interesting one to watch out for. Bandhan Bank, the board has approved sale of NPA portfolio from its housing finance segment, and the total principal outstanding of 300 odd crores is sold to an ARC. The company is aiming to clean its balance sheet, reduce its gross NPA load, and accelerate capital recovery. This will help Bandhan enhance its net interest margins and ROAs going forward. And very lastly, Northern Arc, that stock has been in focus over the last couple of sessions as well. They've entered into a strategic co-lending and debt investment partnership with Yes Bank, and their objective is to expand credit access, boost digital retail micro-lending, and create an alternative debt investment product from here on. So you could probably see some action here as well, Neeraj.
Okay. 3 other names and 3 more names from my end. Very quickly, very short one today. GIC, there is an OFS to sell up to 5% equity stake in the company by the government, of course, at a floor price of 352 rupees per share, since it's about 6-7% lower than the current price of 387, or slightly more than that lower. One would expect some strong reactions today in GIC, so keep an eye out for that. Keep an eye out for Craftsman Automation. It's a very large QIP that the company has launched, Craftsman. I think 8,000 at a price of 8,966 rupees per share. They've launched a QIP for raising up to 2,000 crore. Now, we've been talking about how auto ancillaries are doing very well. Craftsman does multiple things, of course, in that ecosystem, but the 10% odd dilution for a QIP means that they are looking for capex and in a meaningful way. And lastly, from amongst the Vedanta Group companies, the one that saw some buying and from a noted name, Vedanta Iron and Steel. It's a of course, there's a price as well to that. But PI Opportunities AIF 5 LLP, which is the investment vehicle of Premji Invest, has purchased 4.83 crore shares of Vedanta Iron and Steel for about 101 crore at a price of 21 rupees per share. Let's see if there's some traction there today.
Very interesting. Interesting set of stocks. But you know what? We have to slip into a very quick break. But as we do, take a look at some of the other stocks that we've maybe not mentioned in the watch list. And we'll be back on the other side to discuss some of them.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer.
Back with India Market Open right here on NDTV Profit. Pull up the implied open and you will see about what, maybe 30, 38 or 39 odd points. So good going. Now I'm going to do something and let's see if people recognize what it means. Who does that?
Of course, Kush Bora.
Kush. Kush Bora would be a happy man simply because Kush, as much as I was in disbelief, but the trading call turned out to be spectacular. So kudos on that. Let's start by talking about what do you think now happens, particularly on the Bank Nifty, because the other piece is that, as Alex was marking yesterday on the show and I was doing closing yesterday, that a lot of banking stocks, heavyweights, came off from those highs. So it's an interesting mix of names out there at the indices levels.
It is. First up, thank you so much. मेरा तो Friday आज ही है. I am done for the day, for the week, signing off. No, but thank you so much. This means a lot. Look, as much as I want to take credit for मैंने बोला हो गया, let's be honest, मेरे बोलने से कुछ नहीं होता है. It's just the way the data was popping up, correct? And that's, I'm just glad कि हाँ जो reading की वो सही निकली more than anything else. Right now, Neeraj, if you ask me, the view is actually very similar to what it was yesterday. Slight change on the Nifty, but I'll come to that. Let me just give you the summary of what the data is actually looking like. You rightly said, we did see profit booking from higher levels, 24,000 hit kiya, फिर वहाँ से cool off हुआ. Similar pattern observed in a lot of stocks. You know why? I think because largely the trade was not yesterday or day before. The trade was actually about, 7 to 10 days prior to what happened yesterday, right? So where the build-up was, and we saw the momentum picking up in a lot of these names. So yesterday was the day when you actually went out and booked profits in a lot of these names. We saw that happening. Structurally, it's not so bad for Nifty right now. 20-day, 50-day moving averages conquered, falling trend line resistance taken out. And most importantly, remember we spoke of the PCR at 1.4 yesterday, correct? Massively into overheated territories. That is now at 0.99. So क्या यहाँ से buy करें? Not sure. I'll tell you why. Almost single-handedly, okay, that PCR was knocked off and cooled off by the 24,000 call option strike price, which has a massive, massive open interest build-up. Today's the weekly expiry. If the Nifty goes to that level and manages to close above it, there could be a short covering rally. I would give it a slim probability. The market, especially Nifty, needs further triggers to move past 24,000 and with momentum. So for me, Nifty, the structure remains positive. Positive biased consolidation is what I would say is on Nifty, but a buy would only come above 24,000. Now over to Bank Nifty. What a stellar run, right? Especially in the last month, more than 6% gains on the Bank Nifty versus less than 1% gain on the Nifty in the last 1 month. Now bulk of the move has already come about. Bank Nifty though closed above the 200-day moving average only for the second time after the war started, but this one still seems a more meaningful bet. You rightly identified ICICI, HDFC, take a host of names. They cooled off from the higher points of the day. In fact, ICICI ended in the negative, right? So that's just profit booking. Structure remains positive. Buy on declines. 56,500, 56,800, that's the zone. If you do get it close to those levels, the risk-reward ratio becomes that much more attractive. So Nifty buy above 24,000. Bank Nifty buy near 56,500, 56,800 levels on declines.
But 24,000 not very likely today is also the takeaway, right? What are the individual stocks that you're liking?
Three of them, all three on the long side, and to be very honest, I was looking for a short trade, but the risk-reward ratio in a lot of these names didn't seem as meaningful. So the point being that I'm slightly cautious on the stock-specific action as well, though that is likely to continue even when the Nifty consolidates. M&M, this one's turned positive on the daily, on the weekly setup. Now you've got that fillip of the war. Is it safe to say it's over? the war getting over now, right? So a positional bet
not safe at all.
Not safe at all, right? Yeah. So a positional bet on M&M nonetheless, with the kind of moves that it made yesterday. 3260, 3390 are your targets. 3000, 2950. That's your support zone. That's the stop loss. Kirloskar Brothers. This one's making good moves. You've seen a healthy volume accumulation on this one. I think this could continue. 200-day moving average also conquered. 1795, 1816, these are your targets. 1715 is where you keep that stop loss. And the third one is a continuation. Equitas Small Finance Bank. We discussed this for targets of about 78 or so. That's been hit. Now onwards to 81 and 84. Stop loss bumped up to 76.
Index? Sorry, I just have a quick follow-up. Index-wise, I know we don't often talk about the Nifty Next 50. But as large cap stocks, Nifty 50 has underperformed the broader markets. But if you're looking at large cap stocks, would you at all look at the Nifty Next 50? Reason being is that it outperformed yesterday. It gained, 2% or thereabouts. And the weightage of individual stocks is quite low. The largest is 4%.
Very interesting observation. Give me some time to study and come back on this, Alex, for sure. But a quick view is that even this is at the cusp of a resistance. 72,000 to 72,400. That's the resistance zone on Nifty Next 50. So I will watch for this. And there are negative divergences emerging, which means the strength in this one too is waning off. But like I said, give me a day or two. I'll come back with a deeper study on this.
Parag bhai, good morning.
Good morning.
What is your sense of where is it that the activity will continue? Where is it that you are finding favor? Because it's clearly a bottom-up market.
No, I would say that my view is very clear that, of course, I was fully invested 2-3 days before this event and going into the event, and I have not yet booked profits yesterday also. It's a buy on dip market. The market will keep doubting whether this is going to end or not, this West Asia war conflict and all, till 19th, and I hope on 19th it gets cleared. So market will keep doubting, and as Kush rightly said, from last 10 days we are moving up. So we'll consolidate a bit, but it's a buy on dip market for me for sure. For the sectors I like financials and all, it's a buy on dip market. And so, for example, clearly if you see L&T, for example, right into that when we were at the peak of crisis, the stock price fell to around 3,300. And now we are back to 4,200, right? So 1,000 rupee rally in L&T kind of stock. So ICICI Bank from 1,227 to 1,327 if I take yesterday's close also. So I would say that 8-10% rally has happened in some large caps. So it might consolidate for a week or so, but it's a buy on dip market.
Okay, so buy on dips market, and you mentioned about financials as well. Anything that comes to your radar, something that you've just identified now, let's leave aside the likes of an ICICI Bank or any of the other financials, but any smaller names, because I think yesterday we were talking to Manav Chopra as well, and technically also what he's indicating is that there is more juice in your mid cap or small cap banks, or probably, it can be PSUs or privates, but anything where you're finding value there?
So I'll tell you, ICICI Bank to start with, Axis Bank, Kotak Bank, HDFC Bank actually now at 1.5 times book with 1.9% ROA, I think scores very well. I would say then RBL and City Union Bank are the smaller banks which I have in my portfolios. And one particular space where I have only one stock in the portfolio, which is other housing. But I think this affordable housing space, which did very well in Jan, Feb, March quarter, is also doing very well in April, May, June quarter. Disbursement growth I am hearing from my channel checks is about 25% YOY. Of course, it has to do with lower base effect also. Last year Q1 was weak, but still I would say 25% disbursement growth for companies like Aadhar Housing, Home First, Canfin Home, which trades at just 1.4 times price to book on FY28. The disbursement growth about 25% is looking very good with fantastic asset quality, no problem in asset quality, which Q1 seasonally is weak for them in asset quality and disbursement both. So there's a new space which is again coming up, which is very attractive in my view.
Mortgage lending.
Yeah, mortgage lending. But NBFCs. Basically fully secured, mostly against houses, self-owned occupied property and some LAP.
Got it.
Loan against property.
Okay. All right. It's time for an NDTV Profit exclusive, and India's crude sourcing strategy is shifting with Russian imports at a 2-year high and new suppliers like Venezuela and Kazakhstan gaining share. Let's go across to Sesha for this very important story. Sesha?
India is significantly increasing its reliance on Russian oil, with supplies hitting two-year high at about 3 million barrels per day in June and accounting for about 53% of India's total imports. Now that's a strong jump from 1.9 million barrels per day in May, showing a rapid pivot in sourcing. Now at the same time, India is also broadening its supply base. According to Kepler data assessed by NDTV Profit, Venezuela is gaining ground, shipping about 181,000 barrels per day, which is nearly twice India's intake from the United States. Interestingly, Kazakhstan has also surged, delivering around 303,000 barrels per day in early June, its strongest flow ever. Now, these shifts are reshaping India's crude map, with Kazakhstan now firmly among the top suppliers alongside Russia, the UAE and Saudi Arabia, as refiners continue to chase discounted and reliable barrels. But Middle East flows remain uneven, especially from Iran and Kuwait amid the West Asia tensions. Overall, India imported about 5.7 million barrels per day in early June, underscoring steady demand even as sourcing patterns have changed. Now, coming to the policy direction from New Delhi, it has remained consistent. India will purchase oil from wherever it is available at competitive rates. Now, while India's diversified oil sourcing has helped keep supplies of petrol and diesel stable, higher global crude prices have pushed import costs sharply higher, and in response, India has prioritized supply security over price volatility. Now, a potential peace agreement between the United States and Iran after more than 3 months of conflict is expected to bring some relief, particularly for the energy sector. Now, it could ease flows from the West Asia. However, a full return to pre-war supply levels may take time. Back to you.
Okay, thank you so much for that. So India is ramping up Russian crude purchases as well. And overall, when you talk about the crude basket or sectors that get impacted, on the back of lower crude prices, are seeing some positivity. We've spoken about all of these, but Kush, coming to you, if you talk about OMCs, with the moves that we are seeing right now, do you think there is still an opportunity right now where you're seeing a little bit of strength on the charts, or, just a blanket avoid?
See, the honest answer is a blanket avoid. Because the trends aren't as sustainable, they aren't as reliable, and they often tend to falter at the slightest piece of news. All of that said, yes, there is traction right now. Agar aap karna chahte ho, so maybe you can consider, actually I'm so divided right now between some of these names. I would rather avoid, but there's still some traction in HPCL. It's got, a good gap up opening. 200 moving average also comes in at about 425. So maybe if you want to consider that, but like I said, I have a lot of other sectors to focus on with a more sustainable, uptrend.
So Parag Thakkar was talking about very good numbers and interactions with housing finance names, right? There are 4 or 5 names out there in that bucket. Is there anything out there that from a charts perspective looks like a good positional or a short-term trade?
Yes, there is Piramal Finance and there is Samman Capital. Samman Capital has run up quite a bit. That's the only concern. But other than that, if you ask me structurally, Samman Capital looks good. Positional bet, 170 stop loss and targets of 190, 200 plus. And even Piramal Finance, this one, by the way, structurally, this has got a very steady upward sloping channel. So this is the one that I will also have on my radar. If I had money, I would divide between the two. Stop loss at about 1900 and targets of 2100, 2250 plus. So these are the 2 names that I would keep on my radar for sure from that space.
Okay. Well, keep that in mind and keep in mind, some of these businesses are now being taken by investment bankers to the rest of the world to showcase their business. I believe Samman Capital is in Singapore now, or just in 1 or 2 days, to meet a slew of investors as well. But that's usually the kind of cupboard that you hear at 8:45 from Sumit Sarkar. So without much ado, let me get him in to try and understand what is it that dealing rooms are telling him about individual names or themes today. Sumit, good morning.
Good morning, Neeraj. Firstly, it's Pidilite Industries that remains in focus. Now, there are buy flows on FI desk. Dealers indicate that the company has taken price hike across the board for most of its segment, and this coupled with lower VAM, which is one of the key raw materials for the company, should benefit Pidilite Industries going forward. For Tata consumers, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter. Dealers indicate that Tata consumers is better off in the first quarter compared to other FMCG names and could outperform going forward. For Coal India, there are buy flows on the large HNI desk. Dealers are expecting some MSCI related flows owing to the increased free float post the OFS done by the government. For Jyoti CNC, there are buy flows on the large HNI desk. Dealers are expecting some new order finalization announcement very soon to come in for Jyoti CNC. And lastly, when it comes to Tenneco Clean, that stock was down 3% yesterday in trade. There are sell flows on the large HNI desk. Dealers are expecting a block deal very soon. A large FII might look to exit Tenneco Clean this week is what dealers are indicating.
Okay, so interesting names that we're picking up. Thank you, Somit, for that. You know, Pidilite Industries, we've already been talking about it with Parag Thakkar. But apart from that, Tata Consumers is what I want to talk about, as well as even for that matter of Coal India. Anything that you like, Parag Bhai, from any of these two? Because Coal India, the momentum has been there till the time the power industry has been seeing some kind of gains. But now you're talking about gasification also that is coming in. Are you seeing a segue there?
So Tata Consumer and Pidilite both are my portfolio stocks since long, and I remain very constructive on both names. Tata Consumer, there is a structural margin improvement. Pidilite, there is a superb margin improvement possibility because oil falling and VAM prices falling, and both of them are great franchises. So first of all, both of them are portfolio names. Coal India we don't have in the portfolio, but yeah, I would say that I have been bullish since this war has started and the LNG shortage and gas shortage we have seen, and India has a lot of coal. So definitely India is for India, coal is a go-to energy resource, and so everything related to coal chain, entire coal chain should do well. Of course, there's an MSCI thing which Samit has brought in, that is also valid. So Coal India might have a short-term tailwind.
Speaking of tailwinds, Pidilite and a bunch of those crude sensitives, of course, you've already spoken about the OMCs, but I want to specifically ask about Pidilite. Buy flows on HNI desk is what Somit is pointing out, but do the charts support that?
They do. In fact, 1550, 1560, you know, that zone was a resistance zone, still remains, by the way, for Pidilite. In fact, if you go back just about a year, 12th May 2025, that week, from there on, there were multiple attempts to cross that threshold. It's not been able to. Now it has. Parag Bhai has been very vocal about it for a while now. You've already seen that momentum come in. So if it sustains above 1550, I think this is not just a trade that is done. I think this is a new trend that is starting on the stock. So yes, if I had a position, I would continue to hold. If I didn't, I would keep a stop loss just under that threshold of 1550. So around 1525, you keep your stop losses and hold. I do like one more name, by the way, which Somit mentioned, is Jyoti CNC. It's close to long-term support zones, but it's starting to see some kind of reversal traction. So this could turn out to be a good bet with a very favorable risk-reward ratio for long positions. Stop losses at 625, 630 zones.
Okay, so that's Jyoti CNC. I mean, the AI theme has been playing out. You have HCL Tech, which has gone ahead and invested in Sarvam. They've taken about a 10.5% stake. We'll talk about it with Parag Thakkar as well. But Adani Enterprises has doubled down on its artificial intelligence infrastructure ambitions through a potential alliance with Jabal. Now, the partnership could actually help build a domestic AI hardware ecosystem and position India as a key player in the global AI supply chain. Parth joins us with the key details. Parth, good morning. What do you have for us?
Good morning, Hiral. So Adani Enterprises has made an alliance with Jabal in which they will be targeting AI infrastructure. Now, we all know about Adani Enterprises, but Jabal is a leader when it comes to AI data center build out, not throughout the whole world. In fact, they recorded a revenue of $29.8 billion in the financial year 2025. Now, this partnership is going to build AI hardware ecosystems in the country, and the focus will remain on global AI data center opportunities. Now, moving on to understanding how big this opportunity is. So the AI infra market which they are targeting is about $3 trillion in the whole world. India's AI data center capacity stands at 5 to 8 gigawatts by 2030, and over 50 billion of investments will be flowing into AI, cloud and data centers. The domestic AI hardware demand will also pick up in India because of this tailwind. Now this matters a lot because it will support Adani's 5 gigawatt AI ready data center ambition, which the company has put out, and it also strengthens India's Make in India push for AI hardware exports as well as domestic production. It will position India in the global AI supply chains, and Adani will move deeper into the AI infra value chain. So a really nice positive coming in for the company.
Thank you so much for that part. Talking about the entire AI theme, Parag, by your view, Adani Enterprises and alliance with Jabal, you're talking about a data center AI hardware ecosystem that is being built. You're talking about what HCL Tech has done with, an investment of close to about 1,400 odd crores in Sarvam. How are you looking at both of these?
So I have always said that play these new themes through old names. So basically it is either Adani or Bharti Airtel, those kind of names through which you can play this data center theme, because at least they have a proven execution track record and a full access to capital. Because in this kind of businesses, I'm not saying you should not back up startups and all, but I'm saying that it is better to stay with these guys who have proven execution track records.
But quick one on HCL Tech. Would you say this is not a very good move?
No, it's a good move, futuristic move, and whatever HCL Tech management might have thought best for the company, they have done it. It's a futuristic move, and 1,427 crore for HCL Tech is nothing. Right? It's a 3 lakh crore market cap company with more than 20,000 crore cash. So I would say that it is just venturing into something which is futuristic, which they could not have built on their own.
Okay.
Yeah. Okay. Just before take that break, though, flashes on your screen. BOJ has hiked the overnight call rate to 1%. Now this was largely priced in, so no big surprise there, but it could support gradual yen appreciation as well. So a lot of, for Japan individually, a lot of benefits. Does this have a meaningful impact on whatever people worry about the yen carry trade? I doubt that. But we'll talk about this in detail on the other side of this very quick break, because we need to slip into one. Stay tuned, we'll be right back.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence, and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Welcome back. You're watching NDTV Profit. This is India Market Open. And I want to talk about a couple of stocks, both on different sides of the spectrum. Kalyan Jewellers as well as Tata Motors. In trade yesterday, you had Kalyan Jewellers that gained quite considerably. And you're wondering, what is the connection between a jewelry company, in case you didn't know, and the announcement of an easing of geopolitical tension? Well, that's exactly what my colleague Mahima is here to tell you. And Varsha will also tell you about what has emerged from the annual report of Tata Motors, where it's not looking very rosy for Jaguar Land Rover. First to you, Mahima.
Right, so Alex, as you rightly mentioned, yesterday Kalyan Jewellers closed almost 11% higher, and this is because it has a significant exposure in the Middle East, and the news with regards to US-Iran peace deal will definitely benefit Kalyan Jewellers. Now, if you talk about the exposure, they've got around 38 showrooms in UAE as a whole, plus Middle East has contributed around 10.4% to their overall consolidated revenues in Q4 itself. In terms of the revenue growth, as far as the Middle East is concerned, for Q4, the same-store sales growth still stood at around 34%. Studded shares stood at around 15%, which came down from 19%, so it was impacted. There was a lower base of revenue that because of which the quarter saw growth, but the commentary did suggest that Middle East business, of course, was impacted because of the geopolitical crisis. Plus, in terms of their overall outlook for the Middle East business, they've said that they are, considering calibrated expansion in the Middle East, and this will happen via capital light franchisee model that they've, always told for. In terms of what this peace deal basically means for Kalyan Jewellers is that, because of this entire crisis, and Prime Minister Narendra Modi had said that, he had requested Indians to not buy gold for a year, and because of that, now that the peace deal is underway, there is INR which will appreciate on the back of that. There might be a reversal in what Prime Minister Narendra Modi said, and that could benefit demand for Kalyan Jewellers as well. So this is the overall view of why there was a significant uptick in the stock yesterday.
Thank you so much for that, Mahima. In fact, the other one that we're talking about is Tata Motors as well, in terms of the passenger vehicle side of it, where they've come out with their annual report. Varsha, what are the key takeaways that you're picking up so far? Because there is trouble in terms of JLR, but anything else that they've highlighted in terms of FY27?
Yeah, so overall, the annual report talks about a sharp setback, which was largely, led by the JLR weakness, but valuation has also taken a hit with down really 35%. But, chairman has actually admitted FY26 2026 was a tough year for JLR, but focuses now on new launches, a premium house of brands strategy, and faster EV transition. And companies now betting on a stronger FY27 recovery and aiming to lower break-even levels to improve profitability. CEO PB Balaji is also cautious on near term, but confident on recovery, and also. According to him, JLR brand remains strong, and the key launches like Range Rover Electric and new Jaguar are expected to drive revival. However, challenges remain significant. Tariff, geopolitical and regulatory risks continue to impact markets. EV demand is still uncertain globally, and the China pressure and supply chain risk add to margin worries. So overall, FY26 annual report shows a sharp setback, largely led by JLR, but they are expecting faster recovery when it comes to FY27.
Okay. Thanks a lot for that, Varsha. The pre-open rates have kicked in. Let's mark them. I mean, we'll probably see a flattish start onto the headline numbers, but individual names will be in focus this morning. So watch out for GIC because of that 5% equity stake sale at a floor price of 352. Maybe there is some bit of a dampener there, 4.5% lower. Craftsman Automation has a QIP, not a very steep discount, but it's a large one, 2,000 odd crores. So that's a large capital raise that they have to do. Maybe that stock is in focus today, about 1% higher. Siemens and Titagarh Rail. Siemens has received a supply order from Titagarh for the Pune Metro. Maybe Siemens is marginally higher. Maybe Titagarh, who knows. Flattish for now though. GMR Airports, the domestic traffic growth was about 8%, largely because of what's happening at the Delhi airport is what they have said. The stock is up about 1.7% higher. Kotak has raised the target price here. Yes Bank, Northern Arc, Vedanta Iron and Steel, L&T, wherein brokerages have turned constructive. So a lot of stocks in focus this morning. We'll get in, I think, our guest Ruchit Jain in just moments from now. Okay, Ruchit is there with us. Ruchit, good morning. Thanks for joining in. Ruchit, are you trading the Nifty today after 2 days of an up move, or would you focus on specific stocks?
Yeah, hi, very good morning, Neeraj. Well, Neeraj, I think the trend for the index too has turned positive after this forming a base around 23,000 mark. So there are a couple of things. If you look at this 23,000, which was the recent swing low, it was exactly the 61.8% retracement of the previous up move that we had seen of 2,200 points. And the good thing is that if you look at this up move of last 2 or 3 days, it's not like the month of April where more participation was seen only from the mid caps. But rather here, even the frontliners have started gathering volume. So look at the banking and NBFC space where relative underperformance was there. But this time they have been acting as leaders. So I think since the momentum is more in the large caps also along with the broader markets, this time I think the index also should do well. Initially, we are expecting an up move towards 24,500 where the 200 DMA for the index would come. And ultimately for positional traders, the potential targets for Nifty is coming around 25,500. So I think the risk reward ratio in spite of this up move of last couple of trading sessions is still favorable. So at current levels or on minor dips, if we get towards 23,800, 750 range, one should look for buying opportunities. Initial target should be around 24,500 at least.
Okay, so Ruchit, good morning. That's with regards to your view in terms of Nifty and overall as well. But if you have to look at stock-specific action in today's session, if there is any buying opportunity that emerges, what would your top picks be?
Yeah, so a couple of recommendations I would recommend to go long from here. One is Eicher Motors. So I think auto as a space ahead has a good risk reward ratio over here. Last 4.5 months, we have not seen any kind of trended up moves in the frontlining auto names. And yesterday Nifty Auto Index, if you see, was a relative outperformer within all the sectors. So I think here clearly, with the falling crude oil prices, the sales numbers being good. So I think auto stocks could do well from current levels. Eicher Motors technically has given a breakout from an ascending triangle pattern. So at current levels, I advise to go long with stop loss below 7,400 for potential short-term targets around 8,000. And within the large cap space itself, Grasim is one stock which technically is looking quite bullish, a bit slow mover, but the charts have changed quite positive over here. in the recent results season, when the quarterly results were announced, the stock gave a breakout from about 1.5 years of consolidation, that too with very good volumes. Now that has turned the structure positive, and we believe that after 1.5 years, the stock has given a breakout. So this should lead to a good momentum on the upside. So keeping a stop loss below 3,070. From a trading perspective, the target seems 3,350, but from a positionally, the stock has potential to rally towards 3,600 as well.
Okay, all right, so those are the individual picks that Ruchit has for us this morning. It's time for the big brokerage call of the day, and to go across to Sharad. It's Incred on UPL. What are they saying, Sharad?
Well, Alex, it's a big downgrade coming in for UPL from Incred, and looking at the numbers, they have downgraded it to hold from add, and it's almost a 30% downtick from the target price of 1,082 to just 659 rupees per share. Now, they've stated that the agrochemical business is under pressure, and UPL's post-patent agrochemical portfolio is also under pressure, especially from China's overcapacity and the exports. Apart from this, they have the key molecules are also witnessing some pricing pressure. 3-4 names are there, and the growth and margins also might remain under pressure in the medium to short term, and the valuations are also justifying that there might be a derating at play, and that is why we are seeing almost a 25 to 30% cut in the target price.
Wow, interesting. Okay. Well, but in line with how the day seems to be, Sharad has a hold report as the key brokerage call today. Not surprised there. By the way, amongst other things, I think there's a Macquarie note on pharma, which is also very interesting, because Macquarie's pointed out that a lot of pharmaceutical names have given some fairly positive commentary. I believe the Macquarie conference is on right now, and hence they've outlined 3 or 4 names on the mid-sized pharma names, which are very good. Now, the interesting thing, and Parag Thakkar come in on this one, the commentary that has come in from a clutch of mid-sized pharma names post Q4, after knowing about the conflict, etc., is all pretty solid. Kaplan Point has said that the best is yet to come. Maybe 3 or 5 years is going to be this period for Kaplan Point. Natco Pharma expects earnings to compound at 15 to 25% annually starting FY27. Gland Pharma, mid-teens growth over the next 4-5 years, a step up in later years. Ajanta Pharma, high teens revenue growth, EBITDA margins to be at 27%. Some of these mid-sized pharma names, Parag Bhai, and not the Sun and the Reddy's, are actually giving some very solid growth commentary.
Yes, and they have delivered also.
Yeah.
Some of them have delivered also.
Yeah, but this is post Q4 for the next few years.
So, for example, I am very vocal about it. I am very positive on Mankind, Ajanta and Ipca.
Okay.
Yeah.
Ajanta Pharma is guiding to high teens revenue growth, with EBITDA margins expected to stay healthy at 27%.
Correct.
So why an Ajanta over maybe a Gland or a Natco or a Kaplan Point?
No, because that I have not evaluated.
Okay. So what's the peg for Ajanta?
Okay. So Natco Pharma, the price is very attractive. The biggest uptick in Natco Pharma was Revlimid, which is behind. So now, like Dr. Reddy, in Natco Pharma also, one has to look for which other drugs are going to drive that growth. Right, so it will be very interesting for me to study that report also.
Yeah, but so what Natco is saying, Parag Bhai, is that after FY27 will be the base year after the current adjustments, which I think they are referring to Revlimid.
Yeah.
And then 15 to 25% compounding.
Yeah, so what products are going to drive that growth, that I need to understand.
Okay, so why Ajanta then? Yeah. Tell us.
So Ajanta is a simple formulation company exporting to US, exporting to Africa and India, of course. So, and they are into cardiology, ophthalmology, and they have been reporting very good numbers, about 30% ROCE company. Of course, promoters selling keeps on coming. That is something which I need to find out why they sell. But I would say that these 3 companies have particularly, I would say Mankind, for example, after that acquisition, now it is turning around. That acquisition also, now they'll reduce the debt also. And of course, within the large caps, Torrent is an undisputable leader.
Okay, so, and incidentally, the healthcare and the pharmaceutical pockets were underperformers in trade yesterday. Would like to see how they do today and over the course of this week. But a stock that has actually gained quite considerably over the last couple of sessions is Larsen & Toubro. 3862 was the price at the end on Thursday. It closed at 4169 yesterday. It is currently at over 4,200 from what I can see. There you go, 4205. Do you ride that rally higher? Would you enter at this point or no?
Can I just come in quickly on that pharma discussion?
Sure, of course.
We've discussed so many pharma stocks, right? Ecums, Shilpa, Medicare, Ajanta Pharma also was a pick. Yesterday we gave Marksans Pharma as a pick. You want to know something interesting? In the last 1 month, Nifty is up about less than 1%, Bank Nifty 6%. You know where the pharma and the healthcare indices are? Pharma index actually was down about 1.47%. And so was the healthcare index. Only goes on to suggest exactly what Neeraj was saying, that the mid-level names or the smaller names are actually doing fabulous, and the big boys are just starting to consolidate, perhaps even correct a bit. Hence, I didn't have a call on Sun Pharma or Lupin, right? I mean, that's the way our system is designed. It just throws up wherever there is strength. Those names didn't pop up. So despite there being an underlying, inherent strength in some of these mid-level names, the top boys are not doing well. So that's where your focus should be. So just to reiterate, Marksans, Shilpa, Ajanta, these are some of the names that we've already discussed. So that perhaps completes the technical discussion on the pharma space as well. L&T, very bullish. The stocks actually run up quite a bit. It was on the cusp of a breakout, but because of the war, that just fell through completely. In a way, it's a good thing because then the risk-reward ratio becomes that much more attractive. Instead of 4,100, you did get an opportunity to buy the stock at about 3,600, 3,800 levels. Even now, the broad trend remains positive. It's a good idea for a positional bet from these levels. Stop losses, I would suggest around the 3,900 mark, 4,500, 4,750 plus kind of levels, positionally very much on the card. So very constructive on L&T.
Okay, so that's a positive view coming in terms of L&T as well. Let's get in Ruchit. Ruchit, I'm seeing Nalco, Hindalco, a few of these metal names, at least in pre-open, are seeing some bit of pressure in today's session. After the kind of surge that we've seen, what are charts indicating?
The Nifty metal index itself is indicating that metals as a space could be in a corrective phase for the near term. Or if not a price-wise correction, at least a time-wise correction where they may not participate, in the markets, overall markets rally. So I think metals as a space, from a trading perspective, I would stay away. And Nalco, stocks like Nalco, which has already given a breakdown below its 250-day MA recently, can see some consolidation or a relative underperformance.
Okay, Schneider Electric gaining again, and well, it's not a 10% gain, but it is 2.5%. The question is, would you book out after that stellar gain that you've had in the recent past?
I would continue to hold. I mean, I wouldn't buy into it. Actually, it's not a bad idea to buy also because, whatever the excess cooling or overheating was there, that got cooled off and on the back of heavy volume. So whatever profit booking had to come in seems like it did. So if you want to buy, I would suggest a small quantity and a tight stop loss, and that should be at about 1150 odd levels. But if you have a position, I don't see a reason why you should book out. You should very well continue to hold. Just keep trailing your stop losses as the stock moves higher.
Okay, well, 9:12. Let's try and nail it down to that one top idea. I usually do it in the crunch moment, so maybe we'll try and differentiate it today. Right? And Ruchit, I'm going to come to you. You've given us a couple of stock ideas already, but the pre-open rates have just settled. Maybe there is a different stock, maybe it's a reiteration of the same stock, but what would be your top call for this morning?
So Neeraj, we spoke about the auto as a sector. I think along with the auto, certain auto ancillaries could also see a good outperformance. Minda Corp is one stock which is coming on my radar from the auto ancillary space, where the stock has given a breakout from its, I think, last 2.5 years of consolidation yesterday, that too with better than average volumes. So I think this is one stock which can relatively do well. From a day's perspective, one can expect around 688, 685, but from positional perspective, I think 720, 730 could be there on the cards.
One eye on the currency as well, by the way, because it's making its way further towards that 94 mark. It is 94.5 right now. But Kush, one individual stock that you're liking this morning?
Yeah, I think let's make auto the theme for the day. So I'll also pick something from that space. M&M is something that we've discussed as a positional bet. So to reiterate the targets, 3260, 3390 and a stop loss at 3000.
Okay. All right. Parag bhai, one...
No, I will go, if auto is the name thing to discuss, because they will definitely benefit, because I think Bajaj Auto, I'll go. Bajaj Auto has not rained in last 2 days. And I think the shareholders' approval for buyback up to 12,000 where promoter is not participating is anytime due.
Of course, outlook is significantly longer
for the Bajaj Auto
than any of the trading ideas.
One top call, 10 seconds.
Well, I've already shared from the auto names. So I will say both Eicher and
Minda is Ruchit's top call and he really likes it, so keep an eye out for that one. But here's how the markets are starting off this Tuesday morning. Don't expect a Monday. Let me be honest with it. I don't think we'll get that, but we're starting off okay, about 0.25% higher for the Nifty. Banks almost in the same league, mid caps almost in the same league. Small caps, are they doing something different there? Advanced decline ratio is actually a lot better. Yes, 0.5% up for the small cap index, not bad going, and the Sensex is actually doing pretty strong, or reasonably strong relative to the Nifty maybe. Let's get the heat map up on the screen and show you what's moving in the large cap space. Is it even Stevens? No, more green than red. By the way, we missed talking about Hindalco, but aluminum has crashed overnight 5%, as a result of which Hindalco is the top loser today on the Nifty, down about 3.5%. No surprise there. Infosys is down. There is some bit of weakness in HDFC Life. Shriram Finance sees some profit booking from yesterday. Dr. Reddy's, Ultratech are some of the others. But the gainers, HCL Tech, well, it's an investment of 1,400 odd crores. Is the street seeing this as a company trying to be completely compatible with the modern AI trends? Maybe, but it's up about 2.5%, so big start there. Bajaj Finance, another 1.5% today. Tata Consumer, HUL, Nestle, so that means that FMCG is kind of doing okay. SBI Life is up 0.8%. Interesting, because the mis-selling guidelines and then the bank up channel piece that has been thrown up could actually be negative for some of the life insurers, but this one is doing okay. Titan, Adani Enterprises and NTPC are amongst the others. Tech isn't doing all that bad, because Infi may be in the red, but TCS is in the green. And last update, Interglobe Aviation is lying absolutely flat today after a rah-rah move yesterday. But the takeaway, Alex, has to be, I mean, either you look at HCL Tech on the upside, but otherwise, aluminum prices cracking and Hindalco being down 3.5%.
I was just going to use that, and you actually used it, so you spoilt my fun. I was going to say no rah-rah moves today, but then there you go. All right, but see, that's the benchmark Nifty 50. But take a look at the broader markets where there's a little more resilience there. So pull up the mid-cap index and the small-cap index. Let's see where they are at. About 0.4% for the mid-cap index. Pull up the small-cap index as well. About 0.6%. And Neeraj already marked this for you, but the advanced decline ratio shifting just a tad bit more declines now than there were a couple of minutes back. But keep an eye on that and see how it pans out through the day. I wonder if the sectoral heat map is going to throw up the same amount of green than you saw on the Nifty 50, and in fact it is significantly more. The one pocket of terrible weakness, and likely on account of what Neeraj already pointed out to you, is the metal index, down about 1.5%, a significant correlation between the underlying commodity and the metal index as a whole. So if aluminium cracks overnight, you can be sure that Nalco, Hindalco and a couple of other stocks also will lose ground. But FMCG is doing good. You have Realty as a pack that's up and about. In fact, we'll have to see where this takes us, because a DLF, for example, was up and about in trade yesterday, quite considerable gains. Let's see where that moves going forward. I wonder what Kush and Ruchit have to say about those names. Consumer durables looking okay. IT is up and about on account of HCL Tech, both doing okay. But let's talk about individual counters now. And Adani Enterprises, of course, you saw 0.5% gains. I wonder what it's doing right now. This is on account of the joint venture with Jabil for AI and data centers. A little more interest now, up about 1% or thereabouts. Pull up GMR Airports, a positive update for this particular counter because it's improved its air traffic numbers, gains of as much as 8% or thereabouts. Patel Engineering, this is an order win that they have gotten, 4% gains, 126 crores the total, but then half of that is what their share is. They're doing okay. Vedanta Iron and Steel, significant interest from marquee buyers, and it continues to buzz and trade. Yesterday as well, it was on upper circuit. Today as well, there are no sellers in the stock, so keep an eye on this one. Craftsman Auto as well as Wari Energies in focus on account of fundraise approval. Craftsman, it's not, it's not losing too much. It's in fact gaining about 0.5% or thereabouts. Keep an eye on this one in trade today. Northern Arc has gotten into an MOU. Hero pointed this out to you. This is with Yes Bank to have certain products that they will develop together, so watch out for this one. Jyoti Laboratories, it's set to initiate legal action against Henkel. Pull this one up, it's 1.2% higher. Niva Bupa, HSBC Funds is a buyer in the stock. The stock is up about 1.3%. GIC This is one of the big losers on account of the OFS. It is 5% low. Remember that the price was actually 352 or thereabouts. So it was bound to lose a little bit of ground. That has indeed taken place. Madras Fertilizers, negative development for the stock, but it's not doing too much, up about 0.4%. And finally, Bandhan Bank has announced that it will sell some non-performing assets. Absolutely flat. Nothing really happening with this particular counter. But Hiral, that's the long and short of it with regard to fundamental movers. I think anything beyond this that is moving the broader markets?
Nothing major. I think you've mentioned all of them, but Devyani comes to the forefront from that list. 8% up move is what you're seeing on that one, as well as Sapphire Foods. Let's pull up that one on the screens as well once again. And the question is going to be how much do they stabilize? Both these counters seeing some smart moves. Himachal Futuristic is also up in trade. You have Dr. Lalpath Labs is seeing some gains of around 5 to 6%. RR Kabel, yesterday also there was some bit of buying interest coming in on that one. That stock is up nearly 3% as we speak in today's session. And your Aegis Vopak and Aegis Logistics, if you pull up a 5-day chart of both these counters, you'll see the kind of strides that both of the companies have made in terms of stock price performance in today's session, in overall session as well. So interesting names there. Kush, a quick view on the charts. Aegis Vopak Terminals and Aegis Logistics. I think they've demerged recently, so I don't know if we will be getting a chart view on that one, but anything?
So Aegis Logistics was our call, before, thankfully, before this big move came about. Now it's very safe to say that, go out and book profits. This is deep into overheated territories, 3 days of massive volume upticks, but now starting to wane off. You're better off taking money off the table. A quick couple of stocks that I want to mention, Axis Bank and Bank of Maharashtra. Now, the reason I mentioned these is because these were our calls, a few days prior. Both of them have gone on and hit the target too. So you're better off booking profits right now. Phir se re-entry dekhenge when the tide turns, but right now they're in a profit booking mode, so you don't want to be the last one holding on to these. So book profits there. And I like one segment that you've mentioned, Hiral, the RR Kabels, of the world. A very good run up in some of these names. Even now, I think there is steam left. So if you have a position, you should continue to hold. If not, you could still consider, a position in something like an RR Kabel with a 100 rupee stop loss. The entire space, by the way, like I said, is seeing some traction. So yeah, this is one space that I would keep on my radar, and book profits in the banking names for now. We'll see, as and when the tide turns for a re-entry.
Okay. I was asking about the real estate space and whether that strength would continue. Ruchit, weigh in here, because the index as a whole is gaining, but individual names, would you ride the rally?
Yes, I think Nifty Realty has also been one space which has gone through a decent time-wise as well as price-wise corrective phase over last few months. And the risk-reward ratio at current level seems to be favorable for some of the names within the sector. I think sector as a whole can do relatively well. But if you have to do stock picking with the sector, then a couple of names that we like, one is Phoenix Mills and second is Prestige Estates. Well, Phoenix Mills, relatively, if you see with during the corrective phase, the stock has not corrected much. So already an outperformer within the sector where the momentum is resuming. And Prestige Estate is one name where technically an inverted head and shoulders pattern has been formed, which is generally formed at the end of a downtrend. So I think these couple of names can do well if the real estate as a space rallies higher.
Mm-hmm. Okay. Just a couple of other places that might be interesting. There is some talk of how the government focus on renewables is going to be full on, and therefore spaces which haven't rallied thus far and might rally is the question I had. So first on the charts, Kushbura, to you, are the wind energy companies, for example, Suzlon, Inox, Inox Green, etc., forming any kind of bases?
So Inox Wind was, Suzlon was for sure. The only thing is there is not enough momentum yet. There are definitely reversal signs on the cards, but like I said, the missing momentum is the only missing piece of the puzzle. If you do want to consider, then I would suggest go with Suzlon for now, technically better placed, and a positional stop at 53. Could take a while because immediate resistance at about 58, and generally, like I said, momentum indicators positive but neutral. So the momentum is missing. But if you want to be preemptive with a stop loss at 53, Suzlon is something that you can consider.
Okay, so interesting names. in terms of the renewable side of it as well that are buzzing. Apart from these names, few of the stocks which are Lalpath Labs is another one I want to talk about. 7 to 8% up move is what you're seeing. Diagnostics, healthcare, yes, there is a little bit of traction. But Ruchit, on the charts, anything that you like?
Lalpath Lab is looking good, but the only problem for the stock, if you look at historically, is the follow-up move, which has to come. So, a bit of a volatile nature we have seen in the past as well. Whenever the stock rallies by 8 to 10% for 1 or 2 days, the stock again gives up those gains. So, as of now, yes, that's a breakout within the sector, looks good, but I won't be very aggressive on creating fresh longs over here. And the follow-up move for next 1 or 2 trading sessions would be important to see.
By the way, aluminum that pulled back. Parag bhai, this might be a whiff in the pan and not necessarily a sustained downtick, but there was a sharp downtick in aluminum yesterday. It's having its impact on Hindalco too. What happens next?
So basically Hindalco, as we spoke, I am holding on to only one metal name stock, which is JSW Steel. Hindalco, I have been always, I said that we have booked profits in Hindalco. But I would say that, the metal, aluminum itself was down yesterday 4.5%. Even Nalco was down by 8% in US. So this was expected move. I think it should fall lesser than Nalco because Novalis is the part which is a pure conversion business and not totally dependent on LME business. But I think Hindalco is a good buy on dips below 950 or so.
Got it. All right. Gentlemen, on that note, Kush, Parag bhai, as well as Ruchit, thanks so much for joining us this morning. Pleasure speaking with you as always. Quick check, markets holding on, 23,900 plus and benchmark Nifty 50. Broader markets looking just a tad bit stronger with gains of about 1/3% for the mid-cap index, 0.5% for the small-cap index. Time to go across to Gautam Shah, founder of Goldilocks Global Research. Gautam, thanks so much for taking the time as always and pleasure speaking with you. Good morning from where we're at. And the question to you is, with this positive development over the weekend and the fact that it seems to be holding for now, what is the view on the Indian equity markets? We're seeing a pop. Does that continue, or do you expect that people to take money off the table now?
Good morning. I think the market saw these developments in the last couple of weeks because we had a situation wherein global markets corrected quite a bit. And in that period, Indian markets were quite resilient. In fact, we had a perfect storm scenario when we were at the lower end of the range around 23,100. And in that period, the way the market held out and the way the banking sector made a comeback tells me that at least we are out of the woods for now. I think for the last 15 months, India has been underperforming versus the rest of the world. But when we look at the ratio charts of India versus the world, there are indications that this underperformance is probably coming to an end or has come to an end. This only means that India will now move with the rest of the world. However, we are still not looking at significant gains for the Nifty and the large caps. I do believe that we will see a breakout above that level of 24,000, which I think is a very important resistance. And once we can overpower this number, I think we are looking at 24,600 and 25,500. So probably for the first time in 3 months, I'm a little less cautious. I think this move of the last 2 days is quite durable. This rally is durable. And the comeback in banking and the fact that the technology sector could potentially be bottoming out here tells me that the Nifty will do well. But the real opportunity and the parallel bull market that is playing out is in the small caps and the micro caps. And I think that's where alpha will be made.
Very interesting. Gautam, good morning, Neeraj here. And the reason why we wanted to talk to you so soon, because you kind of hinted at this. In 2 days, the markets did what they haven't done in 2 months, if you will. And the rupee is now stabilizing, which also helps the mood, right? Even if flows don't come back. You said a very interesting thing, that while the bank Nifty and the IT indices come back, the move is, or the major move might likely still be at the mids end of the market, right? Will it be thematic out there, or will it be very, very bottom up and therefore difficult to identify pockets? I know you can't stocks, and hence I'm forced to ask you this.
Honestly, it's been quite rewarding to just buy the basket. If somebody just bought the small cap or the mid cap or the micro cap basket in the last week of March, you would be up 27% in a matter of 2.5 months. And people talk about India's underperformance versus the rest of the world and the fact that there is zero return on the Nifty. I mean, the idea is to be in the pocket which is performing. I mean, that's part and parcel of every market environment, and that's what has really happened. Everybody's so obsessed in trying to find what the next Nifty trend is. Is it really going to go up big, or is it going to go down big? I think nobody can accept the fact that the market can stay in a range, stay in a sort of time correction phase, which is what is playing out for the large caps and for the Nifty. And while this happens, you have the other part of the market, which is 70% of the rest of the market actually doing well. So honestly, you don't need to pick specific names within micro caps and small caps, but if at all you want to, I think these are all economy proxy names like PSUs, power, energy stocks, and then selective metal stocks, I think, and capital goods stocks. I think some of these stocks can really stand out.
Okay, interesting name segments that you're talking about, Gautam. The question now is, I'm sure someone who's really invested long ago who wants to probably book profits in certain sectors which have probably made money, where would you say you could book money and then look at really sectors and within the sectoral space as well? Would it be the mid caps or the large caps?
Well, firstly, I continue to believe that there is no major opportunity in large caps even till the rest of the year. They will give you a high single-digit returns, but nothing special and nothing substantial. Real opportunity remains in the small caps and the mid caps. And I think the place where we have recommended profit booking in the last 1 month is metals. Now, the metals index has been our favorite for about 9 months. While the metals index was up 40%, many other sectors in the market fell quite a bit, but we got an indication that it's a little overdone. So I think our focus is now moved to completely energy, pharma, capital goods. I think these are some sectors and some pockets that will deliver supernormal returns.
Sorry, interesting you say energy. I'm just coming in because there's also a news flash, by the way, viewers on the screen, that reports are suggesting that the government is seeking assessment of old wind turbines, and therefore there could be replacement orders, I presume, and which would actually mean positives or larger order flows. The government is looking to replace the old turbines, and therefore for Suzlon, Inox Wind, and a clutch of others, there might be some interest here, and including introduce more efficient models. So keep these stocks at the back of your mind. I heard you say energy, Gautam. Is it new renewable energy names, and therefore maybe the Inox and the Suzlons come into focus, maybe the JSW Energies, Adani Greens, Adani Energy Solutions, and some others come into focus? Or is it the traditional energy names which are at the top of your mind?
Honestly, you pick any name that you mentioned, and I think you'll make money over the next 1 year. And the reason I say this is because the same thing happened with chemicals 5 years back. When the chemicals bull market played out, everything was a beneficiary for about 3 years. Many stocks moved up to 3x, and some of them moved up 10, 15x. So I think energy, is a structural mega theme. I think the government understands it. The market understands it. Smart money seems to be following it. The charts are looking well placed. We have seen a bit of a correction in the last 2 weeks, but I think this is a buying opportunity. So across the board, I think energy is a theme that you could look at, and you could actually make a basket of the top 7 names. It might make a lot of sense.
Okay. I do want to ask about what you said on the metal pack though, Gautam, because I was curious whether you're tracking the underlying commodities as well and what trends you're seeing there, because aluminium overnight, there was a pretty sharp gash. Do you see that continuing? Is that the reason why you are unwinding or looking at the metal pack a little less favorably?
Well, I think a couple of weeks back, we got the first indication on the charts that the rally is a little overdone. As I said, it's up 40% in the last 9 months. Many of these stocks have had great runs, and now you're seeing the base metals come off a little bit. I think this could be temporary. So my view is not based on what has happened to base metals last night, but I think on an overall basis, I think they have got into profit booking mode. And now as the market moves into a new phase of probably sustaining above 24,000 and doing well, I'm sure newer sectors will come and participate. In fact, I'm firmly of the view that the IT sector is close to its bottom. I've been bearish on it for the last 18 months, but for the first time in a long time, we've started to say that these are good levels to basket buy IT. I think most of the negatives are in the price. The AI disruption is in the price. Companies have said what they have to. I think they realize what they need to. And I think the market understands that as well. So at 27, 28,000 on the IT index, I personally feel that if you are an investor with a 2 to 3 year mindset, you can only make money.
Gautam, quick one when it comes to financials. A lot of interest emerging with regards to your mid-cap and small-cap, private side banks as well. Is that what you would be betting on versus the PSUs?
I actually still don't think there is a major opportunity in financial services. Even if the bank nifty goes to 58,500 or 60,000, it's nothing great in percentage terms. In the US, you have $2 trillion, $3 trillion companies going up 50%, 60%, as if they are a micro cap. So in that sense, Indian financial services stocks will not deliver serious returns. We still have our own headwinds. I'm not trying to say that the Indian markets will get into a bull trend, a mega bull trend once again. We will continue to oscillate in a sort of a band. So financial services is not a great opportunity. But if I have to choose, I will still go with the PSU names because I still feel that PSU is a big opportunity. The dividend yield is kicking in. Government has shown its intent. The charts are very good. The ratio charts are excellent. So I think PSUs over private is where action should be in financial services.
In spite of the 23% up move that we've seen in the last 1 year in terms of PSUs versus private banks doing nothing?
Yeah, I think so. I still feel that there is a huge valuation mismatch, which is still getting corrected. The fact that SBI has outperformed HDFC Bank, I think is a clear message from the market. And I think this trend is likely to stay for the rest of the year. And in today's geopolitical world where anything can happen anytime, I'm very comfortable with PSUs over the private names.
That's with regards to banks, but thank you, Gautam, so much for joining in. Always a pleasure to speak to you as well. We'll quickly slip into a short break. On the other side, we'll connect with hospitality industry expert Sanjay Sethi as tourism play back in focus post end of a West Asia conflict, and that's where you've seen some bit of an action as well.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company.
Back with India Market Open right here on NDTV Profit, where the US-Iran developments could be key for the tourism and the travel sector as well. A lot of people believe this is now the sector which is consolidated for such a long time that the sentiment change could help. Now, before we bring in industry expert Sanjay Sethi, let's first go across to Mahima for setting up the conversation for us. Mahima.
Right, Neeraj, so as you rightly mentioned, because of this development, of course, it's most certainly very positive for the entire travel and tourism space. Now, if you look at the trends so far in terms of where demand stands, demand remains strong, but growth had moderated in the last 1 or 2 quarters, and this is on the back of the geopolitical reasons. Domestic travel still continues to be the key growth driver, but foreign tourist arrivals is something that's remained sluggish. Now, with regards to occupancy, that remains healthy anywhere between 65 to 68, 70 odd %, and March did see weakness because of West Asia tensions, but April has seen recovery in terms of where occupancy goes. Supply dynamics, addition remains measured. A lot of brokerages are expecting that industry expects 8% supply CAGR versus 9% demand CAGR throughout FY31. Lastly, in terms of medium-term structural positives, the hotel upcycle, of course, remains intact, and wedding, events, leisure travel remains strong growth drivers. So this is the overall view of what trends are indicating for the travel and tourism space.
Okay, well, let's get in somebody who, Mahima, thanks for that, and let's welcome in Sanjay Sethi. Now looks at the hotel sector as closely, I'm sure, but without the stress of managing the day-to-day profitability. And therefore, Sanjay, it's great to get you today. Thank you so much for being with us. How do you assess what happens to growth for the sector if indeed the conflict were to come to an end? Because that would be one trigger, but over the slightly longer term, we've seen that the businesses or the stocks have consolidated, even if there has been growth in the last, let's say, 24 months.
Good morning, Neeraj. A pleasure to be back. Yeah, you're right. I think the last couple of months have been a little bit of a downer, but the industry is resilient. We're seeing domestic demand continue to stay strong. In fact, whilst I don't have the main industry numbers as yet, the April numbers, which I thought will be lower, have actually come out better than expected. And I'm looking at the average room rates across the country right now. And Goa, Bangalore, Ahmedabad, Mumbai, Pune, Chandigarh, and Cochin have actually performed significantly better on the average room rates in the month of April. On the occupancy side, I see Goa has done extremely well. Mumbai, Hyderabad, Kolkata, and Gurugram have done well too. the cities that have struggled with occupancy in the month of April were actually Bengaluru and Cochin. And not surprisingly, given that, especially Bengaluru, which has a very high element of foreign tourist arrival or foreign footfalls as far as business travel is concerned, that it hasn't done as well. I think May is going to be significantly better. My assessment is that whilst April grew at about 5-6%, May is likely to grow at double-digit numbers for sure.
Sanjay, before I ask you my question, I must say that I have a complaint. This is Alex here. It's over 6 months, and the Christmas cake that you made with Neeraj around Christmas time, I only got to see it on the screen, and I didn't get a taste of it. But so that's my complaint. But having said that, I want to get your opinion on the MICE space, which is from the context of what Prime Minister Narendra Modi said about oil prices being high, about various other things, and work from home, all of that. Is that a pocket where you will take a little time to recover, or are we likely to see a very robust improvement there now that it seems to be dissipating?
My guess is that second half will be very, very strong. There is pent-up demand that's been created on account of the last couple of months. I see a very strong H2 for the industry, subject to, of course, the Middle East or the West Asia conflict, now sort of easing off. As far as the cake is concerned, we got to fix that for sure. Maybe we can do this at home together.
Sure, I look forward to that.
Okay. Sanjay, good morning. This is Hiral here. The question over here is now, all this while, because of the West Asia crisis, what everyone was anticipating was that, yes, there could be impact on the international front, but domestic, there could be some bit of green shoots that could be emerging as well. Resorts, that was the theme that is being played around. So if you have to look at the hospitality sector from a domestic market perspective, what are the trends indicating right now?
Well, the trends indicate that the holiday market stays strong. May and June has seen some great occupancies across the holiday destinations. Rates continue to grow. Business travel, as far as domestic is concerned, was on a bit of a wait and watch. I think it's come back now.
Okay, so specifically in terms of the domestic tourism, because there was an anticipation that this would see, in certain pockets, this would see a greater degree of demand because people will choose purely from the perspective of travel, not to the West Asia region and certain other pockets that there was a cloud of uncertainty on, and also the depreciation of the currency and the expense therein, domestic tourism would get a fillip. Do you see that trend continuing towards the end of this year as well?
Yes, I do, because most of the international travel typically for Indian outbounds is from now right up to October. And I think that's going to be, some part of it is going to be diverted to domestic destinations. And that's why we see stories, not very pleasant one, of huge traffic jams in Ladakh and Leh over the last few days. But that's just an indication that people are spending more of their holidays within India now. And I believe the MICE segment will also see a very robust rebound in the coming months.
Sanjay, for long, at least we out here on the anchor side or the anchor table have debated whether the growth will be in the premium room categories or in the mass categories. That debate always stays for real estate, affordable housing versus luxury housing, and the same for the hotel rooms as well, right? I'm trying to understand, where is it that you see the next leg of growth to be large? Will it be in the premium categories or otherwise?
I think it's going to be all around. Probably the sweet spot is likely to be just below luxury, upper upscale sort of category, because that's where the foreign tourist outbound travelers will probably migrate to. And therefore, I see demand going up there. Business travel in India largely travels in that segment, upscale and upper upscale, just below luxury. And therefore, I continue to believe that will stay strong. And I think it's very true for MICE also, except weddings, which tend to lean towards luxury hotels. The non-wedding MICE business tends to be more in the upper upscale positioned hotels.
Sanjay, 30 seconds, but you would have done a fair bit of traveling recently for people who are looking for those ideas within India, right? Because you spoke about how maybe people are doing the Indian circuit, which is the very interesting, offbeat, unknown destination, or even a known destination, but you really liked it that you did recently. 30 seconds, please.
So, last couple of months, I've done the traditional Goa a couple of times. We have a home there. Done Mussoorie, done Dehradun. But what's been interesting is the offbeat locations around Goa and Mussoorie, which was really fun to go to. And I think that's going to play out very well. I've heard great news from Kashmir, by the way. Pahalgam and Srinagar are all packed, which is wonderful news for us.
Wonderful news for us. But off-beat destinations around Goa, around Mussoorie, viewers, that's a cue if you're thinking of a holiday and want to think of offbeat destinations. Sanjay Sethi, the final word on travel, literally, if you will, for me, just gave you a couple of things. Thank you so much, Sanjay, for joining in today. Really appreciate your time.
Thank you.
Alex,
Pleasure.
you got an invitation to his house for baking the cake. So you turn out trumps out here.
I win. At least I'll get to eat the cake this time. you got to make the cake and eat it. So generally that's not possible.
You remember Sanjay was kind enough to send five big cakes to the office.
I missed it. It was Christmas time.
Yeah, it was.
All right, it's time to step in a very quick break. But on the other side, we'll bring you an interesting chat that Neeraj had with Jayesh Mehta of DSP, as well as the former SEBI member Anant Narayan, on the outlook for the rupee and policy cues going forward. Listen in.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. down the stories shaping the world. From markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world. From markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Back with India Market Open. Indian markets are at a crucial juncture, from bond index inclusion hopes to currency stability and foreign flows. I spoke with Jayesh Mehta of DSP Finance and former SEBI member Anant Narayan on the rupee outlook and policy cues. Let's listen into a slice of that conversation. What happens next? Possibility of the Bloomberg index, etc. Maybe some flows coming in through this window, but otherwise inflows, at least on the FPI side, don't seem to be a reality for the next 6 months, at least based on my conversations with FIs. So what happens next?
So, of course, Anand has, laid it very, very clearly. But, for me, I have been always different thinker for India, right? So, and the same thought I had in 2013. And that's what we saw the problems. So coming to, yes, I completely agree, right? And in that part, I would say the forward, that 1.5% premium, that's something matters. But expecting, debt flows to come to India because of interest rate differential and all that, it's not really India's story, right? The India story is all about equity flows. So whenever we try to protect currency and by raising rates, that's something we did in July 2013, right? In spite of a lot of negatives and negatives being told, somehow it was still done, and we saw the result, right? So taper term May 2013, it happened 3 weeks. There was huge selling, and then after this, it narrowed down. It remained silent. Then 15 July, we just raised 200 basis points, and at that point of time, it was told foreigners are invested in banking stock. Raising 200 basis points is going to be a major outflow. It's not going to help you getting debt flow. And that's what actually happened. So 15 July to 10th August 2013, you saw so much of outflow again, for the Teta trend. So I think for us, it's more about the equity story. And that's where if you look at maybe Bloomberg index, another $25 billion will come. You see some traders will come in. But beyond that, the debt market, what I see, the players, particularly the hedge funds and others who buy debt in India, is when they see interest rate falling down to maybe that's where they can make some capital gains, or where they're seeing that currency is appreciating. So this is buying a bond is the easiest way to be long INR, right? So that's something they would do it. But otherwise, on a natural interest rate differential, not really too much of interest. So I think the story for India, and again, you look at the equity investment, it's 70 lakh crore, right, by the foreigners. That's what is really, really important.
So let me try and simplify this for viewers, Jayesh. Can the rupee, let's try and break it up into 6 months, maybe 18 months if you don't want to do 12 months, and then 36 months. What does the rupee do, according to you? Build a hypothesis and tell us what will happen to the rupee. I'll not hold you to it 6 months down the line because it's a difficult one. Me too.
So I genuinely believe we are, from the foreign flows, we are an equity flow country, right? We have the growth. We have the GDP growth, the best GDP growth. Of course, right now, the wind is against us because the global theme is AI and stuff like that. But that's one part of it. That's actually, I would say, it's a very small part of it. That doesn't mean, last week, in spite of when we are saying AI thing and all that, right? Last week, if you see some of the block deals, right? Some port company and all that has been bought by big FPIs. So why did they buy, right? There's no AI in that.
Yeah, but that's very bottom up, right? Per se. As a nation,
so what I'm trying to say, it is not that because we don't have AI, you just don't touch and buy India.
Okay, fine.
So that's something we need to build on, right? So that one is the AI challenge. But that again, if you look at AI challenge, right? If you look at what we have been taught globally, right? Or from the beginning of the career, fund managers do index allocation. I think from the time passive index allocation in terms of industries, what is the industry exposure they want to have, right? So if AI or banking, something is doing well, you don't go 100% there. But what has happened in last 10, 15 years, a huge passive fund which have grown. And they follow the index. And index methodology has now changed, getting market cap into it. And therefore, if you look at index per se, it's not following industry diversification.
Right.
Right? And from that perspective, the funds also are not following industry diversification. Not all of them, but passive ones.
So what's the hypothesis then?
So that I
have 6 minutes on the show.
I'm coming to that. So even with that, that will happen when the index changes. Right? Like we saw recently the index, MSCI index change, and there's a weightage change for, Korea, Taiwan has gone up and India has gone down. So it should impact only to that extent, maybe 2% more, not beyond that. But we have been seeing continuous flow out, right? And that's what we need to address. See, these are all stories being made, right? Like, we said valuation was high, now that we say India AI is not there because we are justifying the outflow.
जैश आप दवाई बता रहे हैं, मैं आपको बोल रहा हूँ मुझे पता नहीं है दवाई मिलेगी कि नहीं. आप hypothesis बताइए, what do you think will happen to the rupee? Build your hypothesis, tell me.
So I think
1 minute.
Okay, I think the currency will appreciate. I hope that RBI does not intervene too much while it is appreciating. Let it appreciate. I think parallelly, we have now time in hand. We have got time and ammunition in hand. We need to figure it out and plug this outflow. Unless you plug the leakage, there is no point. But at least now you bought time. Rainy season is over. You got, you can plug your leakage before the next rain comes in.
Anant, you agree? 6 months and then we'll move to 18 months.
So let me give you the overall picture. Very quickly first, on the point about interest rates and currency. I think it's a straw man argument to say, should you raise interest rates to protect the rupee? Nobody's suggesting that. All I want to say is that if the interest rate differentials are too low, as they were in 2025, it aggravates the problem on the external front. Recognize that. Sure. I'm not saying do an interest rate difference. So let's keep that aside. Look, I think, and I'm not saying this because I'm a biased Indian, I think India's prospects are good for the following reasons. One, our earnings are looking remarkably good, right? Yes, the Nifty is not looking great, BSE 30 is not looking great, but the overall mid-cap, small-cap, the overall listed space is looking fantastic. Employment numbers are not looking bad, including in IT services. The GCC story seems to have some legs. On AI, with all this fear about AI, I think India will actually do well on the application layer. And I genuinely believe that there are plenty of reports, including the Stanford report, which says that. Now, having said that, we can't take this for granted. There are a few policy steps that I would love to see taken in order to ensure that these leakages are plugged. And I'll tell you what they are. First one, on FPIs. I think the government needs to be commended for removing the withholding tax and capital gains tax on bonds, which they have done. This residence-based taxation framework has to be extended to equities as well. Currently, we are continuing to charge withholding tax on capital gains on, trading in listed securities in India. This makes us an outlier. The government has recognized that for bonds. By the way, the same principle applies for equities as well. Sure. Now, I know this could be a hole for, the revenues at a time when the fiscal deficit is a problem. Maybe you increase STT for that. Go back to the old regime of having an STT for, FPIs and not really a capital gains tax. This is not exempting FPIs.
Sure.
This is merely telling them you pay whatever you're due to pay in your respective countries. The second one, which I think is a big one, look, one of the reasons why we have struggled with this imbalance between debt markets and equity markets, where debt markets are suppressed and equity markets are overvalued, is because people like Jayesh and me, we don't see the value in putting money into fixed income. Now, if you change your domestic taxation such that the difference between the tax treatment between debt and equity was made less, remember we had in the indexation benefit of our debt funds earlier. What that will do is ensure that the money goes into both debt markets as well as equity markets. Equity markets are not overvalued. That in turn will allow us to bring in both FDI and FPI, both into equity markets and into debt markets as well.
Okay, all right. So that's interesting points being raised about the bond markets as well as the currency market. As things stand right now, though, the currency at 94.6 and holding. Let's take a look at the equity markets as well. And you've lost a little bit of ground on the benchmark Nifty 50. Now just 0.2% higher. 23,900 is where we're at, and let's see whether we hold on to that. And the broader market's also giving up just a tad bit of ground, but holding it higher than the benchmark Nifty 50. Let's jump straight into a group of stocks that is how do I describe it? It's making something from something that you throw away, recycling stocks. I'm minting multi-baggers. I wonder if Varsha has a better way to describe this, because these stocks are actually doing particularly well. Varsha, how would you describe them?
I would, say spinning wealth from waste.
There you go.
Well, all these recycler stocks, if you see, they are in focus. Let's see why these companies have generated huge wealth for shareholders. One is, of course, EPR norms is shifting share to organized players. Because of EPR norms, now the burden is on the producers to take care of the waste, and hence you are seeing a compulsory customer for recycling companies. Strict recycling targets have seen improving volumes, visibility. EV growth has led to demand for recycled metals, strong ESG theme attracting institutional flows, increase in value-added products, in all recycling companies and strong PAT growth across leaders. All these are the reasons why these companies have generated wealth. Let's see how much of these companies have generated wealth. 3 companies in focus: Gravita, 15x returns in last 5 years, Pondy Oxides 8x, Tinna Rubber almost 30x. Now, talking about the profitability for these companies, look at Gravita India. In last 5 years, CAGR revenue has been 25%, 46% of profit CAGR. For Pondy Oxides, if I were to talk about, you have 24% revenue CAGR, 67% profit CAGR because of tax and of course because of the higher margin products. Even for Tinna Rubber, the growth has been fantastic at 33% revenue CAGR and 238% profit CAGR. Now talking about why these companies are in focus, because Gravita has been expanding into lithium and copper. Pondy Oxides is scaling lead plus copper with exports. Even CMR, the recently listed company, is largest aluminium recycler. Tinna Rubber is one of the largest, Asia's largest recyclers of end-of-life tires. So all these companies are in focus. And why investors continue to be bullish? One is the more stringent norms. People are more becoming environmentally conscious. Even tangible returns can be seen for these companies. The companies are guiding 25% growth CAGR. Gravita is expecting 25% growth plus higher value added products. Pondy is targeting 20% growth with more than 20% of ROC. Even if I were to talk about CMR is riding aluminium and EV demand, and everyone is talking about the value added products which will lead to higher margin and of course higher profitability for these companies. But the key things to watch, the risk, I would say, one is of course the valuations are no longer cheap. Commodity volatility will impact margin, and execution risk is a new capex. So overall, a good returns, a fantastic return these companies have given, but you also have to look upon the valuations, which are pretty much expensive as of now.
Oh, okay, thanks a lot for that, Varsha. So interesting piece of research out there as well, and some of these are indeed promising stories, if you will. Let's see how the promise works out. Okay, just bring up the markets for a moment and how we are faring. Remember, we started about 0.3-0.4%, if you will, or 40 odd points in the green. We are holding out about 0.2%, so 48 odd points. Not bad, not a bad start, not a bad first 1 hour of trade really. The broader markets could be doing okay. Individual stocks could be in focus. The wind energy names, maybe some of the aluminum names could be lower today, by the way, because Hindalco and Nalco could well be cracking. Suzlon, by the way, is up 6.5% now. And Inox Wind, let's bring that one up also for you. Let's see what that stock is doing in trade. That is up about 3.38%. And viewers, for people who are tuning in right now and want to know why, it is because there is a report which says that the government may actually consider refurbishing, if you will, the old turbines, and therefore there will be new orders to the likes of Suzlon and Inox. So keep them at the back of your mind and study them a little bit. Okay, more news and updates. Assam government has tightened its excise rules with stricter revenue mandates and compliance norms for liquor license holders, while easing norms for indigenous brewers. The state had also introduced a new Assam-made liquor category. Mahima is here with more details on the same. Mahima.
Right, so Neeraj, overall, there are 2 key takeaways to start with. First is that they have kind of introduced a minimum guaranteed revenue for the government, and the second is that they want to push more in terms of where local brands go. For the minimum guaranteed revenue, what will happen is that your license holders of IMFL, beer, country liquor, plus wholesalers and retail shops will have to pay a minimum guaranteed revenue to the government on a quarterly basis, and non-payment will attract a 10% penalty plus 1.5% monthly interest on dues. Plus, they've also laid down some rules with regards to distance of liquor shops, stricter minimum gaps between retail outlets. They've also established rules with regards to bottle sizes, serving rule, etc., and also have given rules with regards to license shifting restrictions. No shop can lift from rural to urban areas, etc. Now, they've also given bigger relaxation when it comes to heritage alcoholic beverages, where manufacturing license for indigenous beverages will be granted exclusively to local people, and for a lot of these fees have also come down. So this could possibly bring some negativity in terms of demands and volumes for companies that sell alcohol there. So this is the overall update coming in from the Assam government with regards to where excise duty goes for alcohol.
Got it. Thanks so much for that important update. All right, let's bring in Ajay Srivastav, Managing Director of Dimensions Corporate Finance Service. And Ajay, thanks so much for taking the time. Good morning to you. I'm certainly in a good mood based on what we've seen in the markets over the last couple of days. Are you?
Oh, we are always in a good mood. Always in a good mood. And I think, if I don't show my good mood, I won't get what everybody comes to the channel and says, invest now, invest through us. So that won't happen if I look down, right?
Okay, no, but do you actually believe that?
No, I actually believe it because I think our diversification into the global markets has done wonders for us and the customers. And I think even if you look at India has underperformed, but the rest of the world has done absolutely magnificently. So, precious metal has gone down, but has done very well over the last 2 years. So on balance, if you're a diversified portfolio, I think you've done wonderfully well given what's happened in the market. If you're India focused and mutual fund focused, I think you have a lot to grieve in the market, and you have a lot of, I think, issues with the people who manage this Indian money in the mutual fund. So perhaps India focused, 100% India focused investors have lost out quite a bit in 24 months.
Yeah, in 24 months. So the question is, does that cycle turn though? Because these are all cycles at the end of the day, Ajay. And if things have looked good or relatively so in Q4, and then there was a disruption on account of the war, and now if that is moving into the rearview mirror, does that cycle turn?
I wish I could share the optimism, because the problem that we've looked at the markets is not today's problem. If you look at the 10-year CAGR of BSE Sensex or NSE, it's just about 10.8%. Yes, mid-caps have done wonders. Some of them have done wonders, some of them have collapsed, I'll leave it aside. But the fact is that our problems and our story of being, underperforming is not from the war. It's much, much before that. This fundamentally, there is issues in the economy the government is trying to fix, but the fact remains that we substituted jingoism for economic policy, and investors fell for it, and therefore we're paying the price. Even today, even as we sit today, I wish I was more optimistic, because our valuations are absolutely, in most cases, large cases, they're beyond belief. Even in today's world, we got P's of 70, 80s. Now, where I wouldn't buy a P of 80. Today, Microsoft is at 18 at this point of time. A chip company would be at 60, 70 or 40. We have got retail companies, we got all odd companies at 40, 50, 60, 70 P in this country.
Sure. But equally, Ajay, I agree with you. And in certain pockets, there is certainly that argument to be made. But there are several pockets in which valuations are not as challenging.
Yeah, but valuations are a function of what people think growth is going to be, and the ownership. India, the most important thing is not just about growth. Who owns these stocks? And therefore, you've seen, irrespective of what you feel about the large caps, wherever there's large FI ownership, it's just going down. Every time Indians come to buy the shares, the FIs just sell the shares in the market. So if you see our bellwether in the market, HDFC Bank was the bellwether of the market. We had a miserable management decisions of merger, and you see the result of that. Indians didn't penalize them. Indian mutual fund kept holding it. Clapped when the merger was announced, and we were wondering what the hell is happening here, guys. And you see 5 years later down the line, that stock has given zero returns to shareholders.
Fair.
So it's
fair. So Ajay, based on everything that you said, you seem to be very negative India. Is there nothing that you find attractive?
Oh no, I'm not negative India at all. I'm just saying you got to be careful where you invest in India. You got to be specific. You got to have a very smart fund managers who are willing to move out. India has got good stories. Auto is a very good story. CDMO is a very good story of India. We got several pockets of good stories. There's no doubt. Auto, we are the world champion. CDMO, we are next to China at the end of the day. So nothing. It's just that our valuations make it difficult for investors to make money out of India. So it's not about that you're negative or positive. It's about the fact that you are here to make returns for shareholders, which are incremental on the debt return side. Like for instance, I'll tell you what's happened in FCNRB overnight. We got now most banks are giving 6.5% dollar rate of return. Now, first of all, existing FCNRB guys will obviously move to 6.5%. But if you're an Indian investor doing an FD at 7.5%, and if you have a child overseas, you rather remit the money to him under LRS, ask him to put the money for you in the US dollars, you get 6.5%. So sometimes the warp-sided economic policy that I'm not going to give the interest benefit to my local guys, but I'll give it to the guy who comes from abroad. Okay, we need dollars. So what do? If I have an LRS opportunity, I would just go give the money to my son and hopefully the daughter-in-law doesn't take the money away. That's a caveat for most people. Sometimes the money just disappears, right? The daughter-in-law might shop on their money. But leave that aside, I think we'll just go put the money through America or wherever your son is and take $6.5% return guaranteed. So, so sometimes I wonder, India is treacherous market at the end of the day. That's the bottom line, Alex. It's not a clear cut. You buy, you sleep over it, and you'll get a good return over 5 years. Yeah, we got to be alert, alive,
which is why we need to keep having these conversations on an ongoing basis, and we invite all views. Ajay, as always, unfortunately, I cannot keep this conversation going because I have to wrap the show. I apologize. I will spend more time with you the next time. Thank you so much for taking the time.
All right.
All right. Well, unfortunately, we have to draw this to a close. It's been an absolute pleasure from Neeraj, from Hiral, and myself, and the team that put the show together. Thank you so much for watching. If you've got questions, keep them ready. Up next is Ask Profit. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360, real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. on Editor's Cut. Our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook. This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me is Somit Sarkar, and this is a show that gets all your stock related queries answered. For viewers who are tuning in, you can either give us a call or send us all your questions on the WhatsApp number that's flashing on your screen up there. While you send us your questions, let's take a quick look as to how the markets are doing. The Nifty 50 is holding up. Almost at its day's high point, up by about 0.4 odd%. 23,900 levels is what we're tracking for the Nifty 50. Though the VIX is up almost 5.6%, indicating volatility as we speak. The Bank Nifty, almost flat day of trade for the Bank Nifty, hovering around the 57,200 levels. Let's try to pull up the Nifty heat map and see as to what are the counters that are buzzing in trade today. You have HCL Tech, of course, on the back of that Servam AI deal, up 3.5%, followed by Nestle, up 2.3% as well. Tata Consumer also doing fairly well. You have Bajaj Finserv, TCS, Bajaj Finance, HCL also doing fairly well in trade today. But on the flip side, you have Hindalco, which is losing ground, down by about 3.7%. JSW Steel, Tata Motors, Tata Steel are some of the other names that continue to be under pressure. Let's try to pull up the sectoral heat map and see as to what sectors are doing at this hour, and see as to what changes have happened since yesterday. You have IT, of course, topping that chart, followed by media, FMCG. Realty still seeing some gains coming in today, up by about 0.7 odd%, but metal is seeing profit booking, down by about 1.5%. Let's also pull up the mid cap 150 and the small cap 250. The mid cap 150 is up by about 0.3 odd%, slightly underperforming the benchmarks, but the small cap 250 is up by about 0.4 odd%, almost in line with where the benchmark goes as we speak. So that's with regards to where the markets go. But let's start taking your stock-related questions, and to answer them, we are now joined by Tapan Doshi, who is a research analyst at CA-Tapan.in, and we are also joined by Swati Hodkar, who is the AVP Technical Research at Nirmal Bang, joining us now. Welcome to both of you, and a very good morning to the both of you. The first one that we have is on HDB Financial. Our viewer Prashant is holding 100 shares at the levels of 701. He wants a technical call on this one from a 1 month perspective. Swati, I'll come to you on this one. Your view on HDB Financial?
Yes, my view is definitely positive, Mahima. I believe the rally which we are witnessing after the breakout of at least 690 levels, the volumes and the price are going in hand in hand. I believe that the stock has a potential to reach up to at least 740 to 750 levels. So you can hold on your long positions. If you want to keep any kind of a stop loss, 670 acting as a crucial support levels. As long as it stays above those levels, 740 are the likely target in the near term future.
The next query is coming in from Sharath from Bangalore, and it's on Vedanta Aluminium, the recently listed demerged entity of Vedanta. He has around 128 shares. He got allocated from the demerger. He wants to know whether should he continue to hold this counter for the next 2 years. Tapan, any view on Vedanta Aluminium?
Yeah, if you see Vedanta Aluminum is been no down circuit today also, but overall I'm quite bullish on the Vedanta Aluminum, no, because they have a good capacity also in future also looks good. Capacity almost 3 metric ton and they're going to expand. Even if you see that they are going to cut the cost also, margin hopefully will improve as the base price going go up. See, aluminum prices drop. That is one of the reason. But if you can hold for 2 3 years, I think this is a good stock. If it comes down, maybe 10 20% down again, he can average also for the long term.
Okay, all right. The next one that we have, by the way, for viewers who are watching just repeating, you can also call us on the number that's flashing on your screen up there. The next one is on Neuron Labs. V. Murli from Bengaluru is holding 10 shares at the levels of 16,750. He wants to know from a short-term perspective if this is a good hold or not. The stock, of course, is seeing a downtick of around 1.9% today. But Swati, what would you recommend?
My current view is little bit cautious because on the daily chart we are witnessing a negative divergence, and also the interesting fact that today it has given a breakdown of a 20 days moving average which comes to nearly by 16,900 level. So as long as it stays below that level, I believe that the selling pressure is likely to be seen and likely to be continued towards 16,500 to 400 level. So I will suggest to exit your long position at the current market price.
Okay. The next query is on the next query is on Vedanta again, and this is on Vedanta Limited. K Guru from Chennai wants to know whether is it a right time to enter this counter from long-term perspective. Tapan, any view on Vedanta right now?
See, Vedanta valuation is fair currently, and if you see the zinc prices and the silver prices, if in future goes up, this company will be directly benefited, especially by the silver prices. So it will be quite a volatile. Again, and as the already demerger happened, I think I'll go with this stock also. But no, you can expect a modest up from here. I think at this level, I think you can add it, no problem, and at deep also you can add it, but it should be a long term, 2 3 years at least.
Okay, the next one that we have is from Dr. LVK Raju, who's writing us from Hyderabad. He's holding around 1,000 shares of IRFC since a year. He wants to know whether he can continue to hold, sell or book his losses. Tapan, what would you recommend?
Well, I'm not too much positive on this stock. No, this stock, if you see, overall, no, this company is not able to perform as such. Again, no, they are going to diversify to the non-rail sector also, but we have to see whether they're able to hold the NPAs or not. If you see the cost pressure is also there. Again, AUM growth is expected, but it will be slow. Again, no, we have to see how the government orders they will going to get it. Sorry, government entities, how they're going to take loan from them. So we have to wait for it. So my take is better stocks are available in this same sector. There they should go.
It's coming in from Vinny Malhotra, and he wants to know whether is it a good time to buy Inox Wind. Fundamentally, there was a news report which indicated that the government is looking to replace old wind turbines, and this could lead to more orders coming in for Inox Wind going forward. But Tapan, what's your view when it comes to Inox Wind?
The valuation is quite good. If you see, the stock has already come down a lot and the wind sector demand is going to accelerate. Of course, their execution was not so great, but in coming years, 1 or 2 years, I think management is quite positive. Order book supports the growth and hybrid projects also they are getting. Only the working capital is an issue and policy changes we have to keep in mind. But yes, at this valuation, I'm okay with this stock. You can buy at this level.
Okay, all right. So that's the view coming in on Inox Wind. The stock is up 2% as we speak. But we've got Balaji calling us. Balaji, a very good morning to you. What's your query about?
Hey, hi, my mom. Good morning to NDTV Profit and your team. I'm a regular viewer of our channel and I appreciate all the views and the expert advice.
Thank you so much, Balaji. We really appreciate your comments and thoughts. Go ahead, ask your question.
Yeah, I would like to ask, I'm holding 300 shares of IRCDC and considering this stock based on the central government policies, budget, transport and logistics theme, is it good to hold?
Okay, all right, got your question, and I believe that you're looking at this from a long-term perspective, so I'll stick with Tapan again for this one. Tapan, IRCTC, what's the view like?
Well, I think it's a mature business. The growth is not such great, and I feel they're much more depending on the railway sector, and that it is going by 4 to 5%. Of course, the ticketing department is doing well. Tourism is going to go up, but again, the government controls comes into picture. My take is that if you really want to go into railway sector, better is I think Jupiter Wagons or Titagra Wagon will do much better in railway sector compared to IRCTC. That is what I think for long term.
Okay. Yet another caller query coming in from Sambhaji Nagar. Sudhakar, you can go ahead and ask your query.
I'm holding 260 shares of SBFC Finance at 57 rupees from IPO.
Okay.
What should I do? Take a sell or hold?
Can you hold for long term?
Yes.
Okay. Tapan, any view on SBFC Finance?
Well, if you see for SBFC Finance, the credit growth is expected to be strong and branch expansion they are doing. The only problem is the funding is a problem here. Competition from banks is there. Operating leverage, hopefully they will improve. So I think in future return ratios will improve. So currently it's a hold from my side.
Okay, hold on SBFC is the view coming in from Tapan. But viewers, time to slip into a very, very short break. But don't go anywhere. We'll be back with more queries on the other side of the break.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show. that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters.
Welcome back. You're watching Ask Profit, and we've got a caller waiting by. Bhaskar, I think, is calling us from Hyderabad. Bhaskar, a very good morning to you. Go ahead, ask your question.
Good morning. I'm holding PG Electro Plus. 500 shares at 550 price.
Okay.
I want to know the technical 3 months duration.
Got it. Okay. Bhaskar, got your question. I'll take this up with Swati. Swati, what's the 3 months view for PG Electroplast? He's sitting on losses of around 13,000 rupees right now.
My view is positive at the current market price because the stock has given a very strong consolidation breakouts and the volumes and the price are going in hand in hand. The immediate target is at around 550, and if it's break those levels, then 575 80 levels can be seen. So you can definitely hold on the long position. Downside, it has a very good support at around 505 rupees. So you can hold on.
Okay. The next query is coming in on Grow. And it's from Saurabh Shah. He wants to know whether should he buy already. Okay, he already has 500 shares of Grow bought at a price of 204 rupees, currently sitting on a loss. He wants to know the short-term view on this counter. Swati, anything on Grow?
Yes, the view is positive. Today we are witnessing some sort of a profit bookings because already the counter has given a very strong momentum rally from 190 to almost 210 levels. So profit booking cannot be denied, but it has a very good support at around 190, and then again we will see some sort of a reversal from the support levels, which will take a stock towards to 220 levels. So the short-term view is positive as long as the counter respect the support of 190 levels. So you can hold on the long positions.
Okay, shifting from focus for a moment, let's get in Sharad to understand what's been buzzing on the FNO side of trade.
Well, Somit, a little bit of consolidation is at play. We had earlier pointed out as well, but largely the technical setup remains positive for the markets. Nifty also looking at what's the sell-off happening. This is of course Tata Steel, Maruti, Axis Bank. That's where a little bit of sell-off is coming in. But let's see what's the long build-up happening. Which stocks are there, or is there any sector rotation at play? Yes, Suzlon Energy, a lot of wind energy stocks are buzzing in trade, positive news flow development, and a good reversal coming in the EMS stocks as well. PG Electroplast, look at that, that's up 7%. Apart from long build-up, let's look at the short covering candidates, and this also includes Cainstex. We had discussed earlier about the EMS players, and Tata Consumer also seeing a good value buying. So, but definitely a little bit of churn happening from FMCG. A long unwinding for AU Small Finance Bank and Shree Cement, no major trade to be honest to be made from here. And for short build-up also, Nalco and Hindalco, most of the metal space, we are seeing some kind of a reversal and a sell-off happening as well. It's a basket selling, to be honest. But these are the stocks which should be on a radar in the FNO space.
Okay, all right. Shah, thank you so much for getting us those details. Moving on to the next question. We've got a question on a lot of capital goods names, and our viewer wants to know if for the next 4 to 5 years, if he or she has to go ahead and invest in one of these names, what would that name be? The options are CG Power, GE Vernova T&D, and Transformers and Rectifiers. Tapan, would you divide your money into any of these and make a basket out of it, or would you choose any one of these?
No, I think all the three stocks are good. Of course, the valuation is on a higher side, but talking about CG Power, no, that semiconductor unit is going to come into operation. And again, for G Vernova, no, the overall transmission business is doing well. So third stock, I forgot the name, but that is also good. So overall, I think whole basket is good. So just distribute among the and go for long term. I think this will do as our theme is doing well, and also semiconductor theme.
The next query is coming in from Ravi from Vijayawada, and it's on Gabriel India. He wants to know whether is it a good price to buy Gabriel. I believe he must be asking from long-term perspective. Tapan, any view here?
Well, Gabriel India has done well overall, and if you see, and the premium vehicle demand is there, and then EV suspension opportunity is quite big. Again, they are coming with a new product launches, capacity expansion is there. The only thing is that the few of the OEM concentration is there here, and raw material volatility is there. But at this level, I think already on a higher side, so just wait for 5-10% dip, but for long term, it's a good stock to hold.
Okay, all right. So that's the view on Gabriel India, but time for our rapid fire round. Tapan and Swati, try to keep your answers as short as possible. The first one that we have is on Cohen's Life Sciences. Our viewer has bought it at the levels of 469 and 600 shares is what he or she is holding. Swati, your view on the charts?
I will suggest to hold on by maintaining a stop loss of 420 for a target of 460 rupees.
Okay. The next query is on data pattern. It's from Siddharth from Noida. He wants to know the technical view on this counter for the next 1 month. His buying price is 4,300. Should he continue to hold? Any view on this, Swati?
Yes, the stock has given a flat pattern breakout, looking for a target of 4750. Beyond that, 4900 levels can be seen. Downside, 4300 is the good support levels.
Okay, the next one is from Satyan. He's asking about Mostrip. He said he bought it for a momentum pick, but now it is stagnant. From a short-term perspective, what is the target, or should he exit seeing the charts? Swati, what's the view like?
No need to exit the long position. The stock is under the formations, looking for a breakout of 225 rupees. Upside target 240 to 245. You can hold on the longs.
Okay, the next one is on Sagility India. Our viewer has bought it at an average price of 48. At 466 shares is what Abhishek from Mumbai has bought. Wants to know whether he can continue to hold or not. Tapan, your view from a long-term perspective?
No, hold.
Okay. The next one is on KFin Tech. Shankar from Dubai has bought around 75 shares at the levels of 981. He wants to know whether he can buy more, average, or continue to hold. Tapan?
Yeah, he can buy more around 800.
Okay, the next query is from Raghuram Patro. It's on HFCL. He's holding 102 shares. He wants to know the next view for the next 3 to 6 months. Swati?
I'm looking for a target of 220 to 240, so you can hold on the long positions.
Okay, the next one's on Suzlon. Srikanth wants to know whether he can continue to hold this. His buying levels are 59 rupees. Tapan, your view?
Yeah, hold for long term. Good stock to hold.
Ashish from Delhi wants to know whether it's a good time to buy Tata Steel for the next 2 years. Tapan?
No, not now. Just see the cycle. So wait for one more quarter.
Acme Solar or Vikram Solar, which is a better bet to buy at the current market price? Murli from Hyderabad wants to know. Tapan?
Acme Solar is a better prospects.
Tapan, the next query is for you. The viewer wants to know whether should he buy Shriram Finance at current levels.
Yeah, he can.
The next one is on Walk Hard. Prashant wants to know if he can go and accumulate more or sell. He's bought it at the level of 3250. Is that correct? Doesn't seem so, but Swati, your view on the charts for Walk Hard?
My view is positive. As of now, it is under the consolidation phase, but 2200 are the likely target in the short term video.
Swati, the next query is for you. It's on Fortis Healthcare. Sasthamani from Coimbatore is holding few shares of this counter. She wants to know whether should she hold or sell.
I will suggest to hold on, but maintain the strict stop loss of a 960 rupees. If it's break that level, then again we might witness some sort of a selling pressure, which will take a stop towards to 900. So maintain the stop loss.
Okay, Karnataka Bank bought at the levels of 173. Continue to hold it for a year or so, Swati?
Yes, definitely you can hold on this particular counter for a year, and so I'm looking for a target of 320 to 340 levels.
Got it. That brings us to the end of this first rapid fire round, and time to spin a very, very short break, but don't go anywhere. We'll be answering more queries on the other side of the break.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit.
Welcome back. You're watching Ask Profit, and we've got A. Mohan who's waiting by and calling us from Warangal. A very good morning to you, A. Mohan. Go ahead, ask your question.
Good morning, ma'am. Good morning.
Good morning. Go ahead, ask your question.
So my query is that I want to buy BSC. So long back I bought it and I got some profit also. So now I want to buy 25 shares and just is it right time to enter?
Okay.
Just I want to know.
All right. Okay. Got it. I got your question. I'll take this up with Swati. Swati, do you think it's the right time to enter to see some profits going forward?
Not at the current market price, because we are witnessing a profit booking from the last 10 to 15 trading session. Now it is hovering nearby the 20 days moving average, which comes to nearby 4,000 levels on the downside, 4,080. I believe any dips towards to 4,000 or 3,900 will be the attractive level. Risk reward ratio will be a favorable. Any dips towards to those levels, you can definitely take a fresh long positions.
The next query is from Arvind Manjeshwar and it's on HDFC Bank. He's holding 100 shares, bought at a price of 800 rupees. He wants to know whether the stock could bounce back over the next 1 to 2 years. Tapan, any view on this?
See, now if you see, the main problem for HDFC Bank is the name is actually, there is a pressure on name. And now if you see, deposit growth is also quite slow. Loan growth is expected to accelerate and ROE improvement is there over the years. Retail lending is actually gaining momentum slowly gradually, but the credit deposit ratio is on the elevated side. So my take is, from here, if he wants to go a long term, I feel ICICI Bank will be a better option than HDFC Bank.
Okay, all right. The next one that we have is from Narayana, who's writing us from Guntur. He wants to know the target price for ONGC and whether it's a good buy at the current level. ONGC or Lodha, two names that he's talking about. Swati, any of these that you like on the charts right now to make an entry?
The charts, I will go with the Lodha. Reality counters are really doing very well from the last few sessions. If you look towards the Lodha weekly chart, it's under the formations of the inverse head and shoulder pattern. And I believe that upside it has a very good breakout of 940 levels. As of now, it is under the constructions of those patterns. But once it gives the breakout of those level, I believe the counter is likely to enter into the 4-digit of at least target of the 1,075 to 1,100 rupees. So you can definitely go long in the Lodha compared to the ONGC.
The next query is from Kumar from Hyderabad. He's holding 100 shares of Amara Raja, bought at a price of 1,081. He wants to know whether can he hold this counter for a long term. Tapan, any view on Amara Raja from long term perspective?
You see, Amara Raja has been one of the underperformer. Lot of expectation was there, but not able to deliver. From here, I think the valuation looks okay to me, no doubt. I think automobile sector is doing currently well. At this level, no, nothing to lose. He can stay for more 1 quarter, 2 quarter. I think valuation looks okay, so he can stay. Hold currently.
Okay, all right. The next one that we have is on Ashok Leyland. Our viewer Anoop wants to know whether to sell or hold this one. His buying price is this is 149 is what he's saying. Swati, what's your view on the charts for Ashok Leyland?
My view is positive, Mahima. I believe definitely he can hold on the long position. As of now, the counter is under the profit. 172 is a likely target in the near-term future because the stock has given the very strong breakouts and the RSI is also showing a positive crossovers from the oversold zone. The momentum is still intact. If you want to give a profit stop loss, 154 is the support level which can act as a stop loss for a target of 172 rupees.
Okay, the next query is from Ishwar from Kolkata. He's saying that he's already holding Coforge and OFSS, that is Oracle Finance, in his portfolio. He wants to know whether should he add HCL Tech as well in its portfolio. Tapan, any view, any guidance that you could give him?
No, I think both these Coforge and Oracle Finances are better compared to HCL. I think these two companies, Coforge and they are doing quite well, and comparatively guidance is much more better than all the big fours. So both Coforge and Oracle, I think that is the way to go. I'm bearish on the large caps as TCS, Infosys, and all that.
Okay, all right. So that's the view coming in on all these IT names. The next one that we have is on Procter & Gamble Hygiene and Health, and this is from Sunny, who is writing from Karnataka. He's bought 37 shares at an average price of 11,700. Not sure if the stock did touch that or not. But Swati, any view on the charts for this one? Did it touch that levels? If yes, he's sitting on a significant amount of loss, though the quantity is less. What would you recommend?
Just to hold on this particular counters because I believe 6,000 is acting as a very good support level. So as long as it stays above those level, you can definitely hold on the long positions, and the immediate target will be at around 7,200 to 8,000 levels.
Next query is from Narendra Duggal from Punjab. He's holding 100 shares of Polymed, bought at a price of 1,700 rupees. Should he add more or sell? Swati, any view on this?
Not to add at the current market price because the average price will not come down so much as such. Wait for some more time. Any dips towards to 1,400 to 1,350 will act as a good average road price, and the immediate target after that will be 1,620 to 1,700 levels.
All right, okay. So that's the view coming in on Poly Medicure. I think we've got Bharat who's calling us from Andhra Pradesh. Is that correct, Bharat? Hi, a very good morning to you. Go ahead, ask your question.
Good morning, madam. I am holding 800 shares of Quadrant Future Tech at the price of 423. Can I hold or sell?
Okay, got your question. Swati, it's comparatively a very small company, 600 crores of market cap. Any view on the charts?
My view is positive, but the counter has already given a very huge kind of a rally in the last two trading session itself, and it's nearby the selling buying price itself. I will suggest to hold on the long position, but please maintain the stop loss of 400 rupees. If it's break that level, then we might witness some sort of a profit booking, which will take a stock back towards to 370 to 380 levels. So as of now, hold by keeping a strict stop loss of 400 rupees. Immediate target will be 440 to 450.
Okay, the next query is from Ahmed from Delhi. He is holding 200 shares of Gaudium IVF. He wants to know whether should he buy more, hold, or should he exit this counter. Tapan, any view on this?
Well, here I think the stock is okay, but the problem is the guidance and all of management is not so great. Again, this is the stock where a lot of volatility will be there on the profitability part. So my take is you can hold the stock, but don't add more.
The next one that we have is from Neelam, who's writing us from Jaipur, asking about Polycap. She's got around 6 shares, bought at the levels of 6857. Book profits, hold for more for the next 1 to 3 months. Swati, what's the view like?
I will suggest to book the profits at least partial profit at the current market price, and second partial you can hold on by maintaining stop loss of 94.50 levels. A breakout above 96.50 will only witness some sort of a buying in this particular counter, which will take stock towards to 10,000 levels. So at the CMP you should book the partial profits.
The next query is from Prasad Balari from Karnataka. He's holding 322 shares of Reliance Industries, bought at a price of 1,354, and 40 shares of Hindalco, bought at a price of 1,099. Any target price on both the counters, Swati, Reliance and Hindalco?
Definitely, Reliance looks very attractive at the current market price because it had touched the channel supports of which way we have plotted from the last 5 years. So it's a very good support levels. For a short period of time, I'm looking for a target of 1,450 to 1,500. So you can definitely hold on the long position into the Reliance. Talking about the Hindalco, the view is a little bit cautious because the counter has given the breakdown of the 50 and the 100-day moving average. We might witness some sort of a selling pressure in this particular stock. If you're looking for a longer term horizon, you can hold on to average out price. I believe 960, 950 levels are the good levels to take the average out price, and the immediate target will be 1,050 to 1,100 rupees.
Okay, the next one is on Triveni Turbine. Zeenat from Ranchi has got about 100 shares at levels of 610. She wants to know whether she can continue to invest, remain invested in this one, or switch to something else. What would you suggest, Tapan?
At Triveni Turbine, if you see, this stock has been gone up a lot recently, and if I see the profitability and all that, that is okay. But this year they are actually having a struggle on maintaining the margins, and if you see the PAT has gone down a lot. But I think the future looks okay to me. I think next 2 quarters things will recover. So at this level, I think you can hold the stock.
The next query is coming in from Sunny, and it's on Jyoti Structures. I don't believe you might have a technical view on this, Swati. Jyoti Structures?
Yes, I do have, but as of now, the counter is just hovering near its 200-day moving average. The longer term view is definitely positive, but for short period of time, with the stock will be remain under the selling pressures, and downside it might test the feet of 11 rupees on a. So wait for some more time for longer term horizon, at least for 2 to 3 years. This counter is really positive. We are looking for a target of 17 to 20 rupees on the high side.
Right, so that's the view on Jyoti Saxtras. The next one is on PG Electroplast. Edwin from Kerala is holding 100 shares and he wants a view on this one. We already took a technical view from Swati, but Tapan, your view on PG Electroplast?
Hold this stock. No, I know this last quarter was not so great, but I think no, management is quite positive and their excess of inventory will be, I think no, they'll be reading off. So I think things will be better and the margin pressure what they have will be, will be going off. So yeah, at this level, the stock is okay to me. Please hold this stock.
Next query is from Vijay from Chennai. He wants to know the short-term target on Avenue Supermarts. Any view on this, Swati?
Yes, view is positive in this particular counter, on the verge of giving the breakout of a downward sloping trend line, well placed above short-term moving averages. Upside, I'm looking for a target of 4,300 levels. So you can definitely hold on the long positions.
Okay, so that is the view coming here on Avenue Supermarts. But you know what? NDTV has done it again. The Reuters Institute has ranked NDTV as India's #1 in reach, both offline and online, reinforced its unmatched leadership across television and digital. For the 6th year in a row, NDTV tops the India Reach rankings, leading where the country watches, reads and follows the news from television screens to digital platforms. NDTV dominates weekly reach across categories, setting the benchmark for trusted journalism. And this report once again underlines NDTV's position as India's most reliable and widely followed news brand across every screen, across every format. NDTV remains #1, continuing its undisputed leadership in the Indian news landscape.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world. from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the
Welcome back to Ask Profit. We've got Shankar who's calling us and waiting by. Shankar, a very good morning to you. Go ahead, ask your question.
Good morning, madam. Madam, special thanks to you. Your experts' advice, I always admire your presentation of companies and kudos to you. And Shushank, who has helped me a lot today to get me put on this call.
Thank you so much. Thank you so much. It means a lot.
Madam, special thanks to Shushank also.
Sure.
One more thing. I am holding 20 shares of Apple 3i at 1620 because I bought it at a high price. And the add now because the prices are correcting. I'm holding almost a year over. Whether it is can I add or it's a good company, financially profitability, everything is fine.
Right. You want to hold this from a long-term perspective, Shankar?
Yeah.
Got it. Okay, all right. Thank you so much, first of all, Shankar, for your kind words. Means a lot to us. I'll take this up with Tapan. Tapan, any view on Affle? Recently it also announced a pact for strategic ad colony assets for Android, iOS, etc. Any view on this one? Because last time when there were brokerage reports coming out for their picks for 2026, this remained among this name remained common amongst a lot of these brokerages. Should he add more is what his question is, and continue to hold because he's sitting on slight losses?
See, at that time, the valuation were already quite stretched. Now it is little bit normalized. And if you see, the dependence is much more on the ad spends. And again, the competition from the global giant is immense. Again, the privacy regulation, the government regulation is impacting. But I think from here, digital ad spending remains strong and AI-led targeting capabilities that Affle is increasing. That is a good thing. It is an asset-light model overall. So at this valuation still, I feel if he wants to get in maybe 10%, 5-10% down from here, he can enter for the long term. But check the quarterly result because here the de-rating is happening. So check the quarterly result also. But 5 to 10% down, you can add it if you want.
Okay, all right. So that's the view coming in on Affle. But time for our rapid fire round. Try to keep your answers as short as possible. Tapan and Swati. The first one is from Varun Mathur. He's got around 76 shares of Swiggy that he bought it at IPO price. Wants to know if he can continue to hold, sell. Tapan, your view?
Sell on rise.
Next query is on. The next query is on Cupid, Raju is holding 200 shares. Should he continue to hold or sell, Swati?
Definitely hold on for a target of 175 rupees.
Okay, the next one is on Solar World Energy. From a long-term perspective, is this a good hold? It's a small company, Tapan, but any view?
Currently hold.
Annapurna from Hyderabad is holding 100 shares of Ipca Labs, bought at a price of 1630. What's the short-term view on this, Swati?
The view is definitely positive in this particular counter. I'm looking for a target of 1620 rupees on our upside.
Okay, the next one is on United Spirits. Ashok Pai from Bengaluru wants to know if it is a good buy at the current levels. Swati, your view?
I would suggest to hold on for some more time. Any dips towards to 1230 can be a good level to take a long position.
Next query is for you, Tapan. It's on Sedemac. Suresh from Indonesia is holding 75 shares of Sedemac at a price of 1872. Should he buy more, hold or sell?
Hold.
Okay, the next one that we have is on Tata Power. From a 2-year perspective, is this a good buy? Tapan, your view on this one?
Yeah, you can add.
The next one is on Angel One, and it's for you, Tapan. Chandan Jain from Hubli, Karnataka wants to know whether should he buy more Angel One from long-term perspective.
Around 320, 310 level you can add.
Okay, the next one is on Sanofi. Our viewer has bought it at an average price of 44.28. Average continue to hold from a long-term perspective. Suman wants to know. Tapan?
Yeah, please hold.
Swati, the next query is for you. It's on Grasim. Bhaskar from Bangalore wants to know the short-term view on Grasim.
On this particular counter, definitely view is positive. Looking for a target of 3250 to 3300 levels.
Kala Precision, is this the right time to make a fresh entry into this one? Swati, your view?
Not at the current market price. Wait for some more time. Any dips towards 2000 can be reviewed this particular counter once again.
The next query is for you, Tapan. It's on Sterling Wilson Solar. Dipti from Chennai has 276 shares, bought at a price of 650. Should she average, sell or hold?
Hold, but don't average.
Okay, the next one is on Nalco. Our viewer has got 3000 shares. Wants to know whether to continue to hold. Bought at the levels of 359, by the way. Raghu wants to know whether they can continue to hold from medium-term perspective. Swati?
I would suggest to hold on by maintaining a stop loss of 350 rupees for a target of 380.
Swati, the next query is for you on BLS International. It's from Jaya from Bangalore. She has a few shares at an average price of 278. What's the short-term view on this?
My view is cautious, hold on, but stop maintain strict stop loss of 260. Any rise up to 280, 285, you should exit this long.
Okay, the next one is on NTPC Green. Viru Prakash from Bengaluru is holding 1000 odd shares. What can he do next from a long-term perspective? Tapan, continue to hold?
Hold, but I feel NTPC is a better option than NTPC Green.
Tapan, the next query is for you from it's on KPIT Tech. Raju from Hyderabad has 15 shares, bought at a price of 1389. Should he hold, sell or buy more?
Sell on rise.
Alright, okay, so that brings us to the end of this rapid fire round as well as Ask Profit. Tapan and Swati, thank you so much for taking out the time and helping us answer all those stock related questions. By the way, before I go on to the break, NDTV has done it again. The Reuters Institute has ranked NDTV as India's #1 in reach, both online and offline, reinforcing its unmatched leadership across television and digital. For the 6th year in a row, NDTV tops the India Reach rankings, leading where the country watches, reads and follows the news from television screens to digital platforms. NDTV dominates weekly reach across categories, setting the benchmark for trusted journalism. This report once again underlines NDTV's position as India's most reliable and widely followed news brand. Across every screen, across every format, NDTV remains #1, continuing its undisputed leadership in the India news landscape. Alright, so of course, like I said, with that, we're completely out of time with this edition of Ask Profit, but do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. down the stories shaping the world. From markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where we get you all the hottest companies and interesting stories about them. And is there any alpha to be made? Let's start with the first company today, but before that, I'd like to give you some hints. Try to guess it. Of course, there are just a couple of players in this industry. You'll guess it by now. Fourth largest electronic retailer in India, and yes, they are in the listed space. Founded in 1980 at Hyderabad. Interesting history they have. And stock is up 29% from March lows. Also, another hint is the mutual funds hold 19% stake in this company. It's pretty interesting. And the company in focus is EMI, not the monthly payments, but Electronic Smart India. This is what we are talking about. But why are we calling this company in KYC? The main question is definitely on their expansion plans, the premiumization, and first of all, the FY27. They have stated that there's an operating leverage kicking in. So we need to understand how much does it translate into margin expansion. And speaking of that, they are largely south-based, Telangana and Andhra Pradesh. Now they are moving their business in NCR region as well. We'll try to understand that expansion. And will the premiumization of the products go ahead? And if that happens, it's a very single-digit margin business. Will that change the profile of the company? And because of that, we'll try to understand what's the growth outlook ahead looking like for EMI. The expected product mix, will there be a change? Will there be more foreign brands coming in? A lot of questions would be asked on that perspective as well. So these are the key questions we will be asking the management, and management is Premchand Devarakonda. He is the CFO at Electronic Smart India. But let's understand what's this all company all about, what's the business model like, and is there any alpha to be made here? It's the fourth largest electronics retailer in India. Also, the company was founded in the year 1980 by Pawan Kumar Bajaj in Hyderabad. Interesting history. Network of over 200 stores across more than 80 cities. So it is expanding, but remember, it's largely concentrated in Telangana and Andhra Pradesh. And now it's expanding in NCR, and also they're looking forwards towards Western UP. Over 8,000 SKUs they have across 100 plus domestic and international brands. So interesting, company, 83 mature stores and 140 non-mature stores. Now, what does a mature store mean? Mature store means stores which are operating for more than 4 years. And as the mature stores come in, the operational leverage starts kicking in. The MBO brand, which they call it, this includes Easy Kitchens, Bajaj Electronics, Kitchen Stories, and even Audio and Beyond. These are the brands. If you are there in Hyderabad and Telangana, you know these brands exist. They're larger partners. They have mobile business as well as Apple, Sony, LG, Samsung. So across appliances and mobiles, they are functioning. Also, the Q4 updates, it was a double-digit growth across all the categories in the fourth quarter. Decent operational update coming in. SSG growth at 12.1%, seeing the current situation. It's definitely there. Value retail is something which the street was quite bullish on, but not now. A couple of years back, they opened 4 new stores in the fourth quarter. And the bill cuts, it's like an operational parameter that has gone up to 20% on a year-on-year basis. Average ticket size on the higher side. Compare that with the industry, that's around 23,287 rupees per spend. Also, the store sales makes how things look. A mobile is very interesting, 44%. It's a fast moving inventory product. Of course, we have small appliances as well as large appliances as well. Large appliances roughly 43%. So high ticket size is something which the company is dealing in. The cluster margin, South, it's a stable business, but in the North they are trying to penetrate, and that is why the margin pressure is there. The ROE pressure will also come. I'll explain you those numbers in some time, but we'll try to understand more. What may work for the company? The company is going into high potential markets like the Western UP, a very strong purchasing power in that area. Multi-brand outlet, that's the MBO for full form. They are offering better margins in niche categories, and they are going into that as well. Higher average selling prices amongst peers. We have seen that they have their own brands also. Foreign brands are coming in, and of course it's preferred distributor also for the larger brands. So good name coming from South, trying to make a name in the North. But what may not work, there's a lot of competition in North India, so the company needs to take its time to get some market share there. The unit economics needs to improve for the northern markets, and that's what we have seen. Hopefully that can come as well. Lesser coverage from analysts, and this is a little bit of concern despite having so much stake in the DIs as well. So this is the entire picture for Electronic Smart India, but let's try to understand the KYC ratings, what matters, income statement, balance sheet, cash flow. The basics is already there. We get in the return ratios, how the shareholding things have moved, and whether the stock has made money or not for the investors. Also, we have the valuations and the outlook, where we try to understand what happens. Let's talk about the income statement. The first one, largely it's a kind of a neutral movement, nothing much to look at when it comes to the profit that has been impacted. But remember, the company is going through an expansion, and the Q4 numbers also tend to be a bit mixed. The margin profile of this business, if you have a look at it, there isn't much of a change. It's a single digit margin profile for these businesses. If you could just show the margin profile, how things have moved, and it's quite stable, and largely it's going to be like that only unless they change their product mix. So it's a neutral rating when it comes to the income statement. Let's talk about the balance sheet, how things are moving. And balance sheet, remember, it's a high working capital business, so you're going to see the borrowing levels on the higher side. The cash levels are pretty decent for the size, around 50 odd crore rupees, but there's a lot of changes happening. And of course, in the summertime also, we see the larger appliances. That's where the churn starts happening. So it's a neutral rating when it comes to the balance sheet. Let's also talk about the cash flow. Is there any change happening here? And let's get in the numbers for the cash flow. And for FY26, you see a good cash flow from operations is coming in. It was largely flattish for FY24-25, but a good jump. And because of that, the working capital ratios also have improved. Look at the cash flow operation to PAT ratio, and even the net cash flows overall, despite investing and financing activities coming in, is still in the positive. So I'm going to give this a strong thumbs up when it comes to the cash flow. Return ratios, the expansion which is happening in North India, that's putting a little bit of pressure. And remember, there was a fundraise also where the promoters reduced their stake as well, and that's what we are seeing in FY25 and 26, where the return ratios, the ROC numbers is coming down. So net, I would give a thumbs down when it comes to the ROC numbers. Shareholding, largely neutral. We had mentioned that the promoters had around 73% stake, and that has been falling, coming in at almost 65% stake. But for FIs, they increased their stake and again they reduced it. For DIs, they have actually increased it. So there are some mixed trends coming in the overall shareholding. So I'm going to give this a neutral rating as well. Let's try to understand the street cred, whether the stock has made money for the investors or not. That's the big question. From March lows, of course, there has been a good up move, up almost 29%, but still from 2025 highs, it's down 33%. And from last 1 year, it's down 16%. Last, you can't say 5 years, the listing happened in October 2022. The stock has given return. It's quite decent. It's 86 odd %. But of course, the investors do want some more returns. So it's a neutral rating for the one side. So I'm going to give this street cred a neutral rating. Let's talk about the valuations, what's happening here. Two major players are there, and look at the valuation gap, almost a 50% valuation gap coming in. 12-month P, it's around 40 times, and if you compare that with Aditya Vision, a lot of retail interest, value retail going in, that's at 62 times. So definitely this is cheaper than Aditya Vision going ahead, and because of that, I'm going to give this valuation a strong thumbs up. Lastly, let's talk about the outlook. The expansion of the international portfolio is something which the street is looking at. And also, if you look at it, the improving unit economics in North India, that is where the management commentary is coming, and operating leverage, that's expected to play out in FY27. That means a lot of ratios are going to improve, and the new geographies, especially NCR, Western UP, that's where the expansion is taking place. So a lot to cover, to be honest, if you want to become a pan-India player. And of course, they'll try to optimize the supply chain and inventory management as well. So it's a strong thumbs up when it comes to the outlook. But let me give you the entire KYC rating for the company, how things stand. Largely the numbers, income statement, balance sheet have been quite neutral. Cash flows I liked. Return ratios, of course, there will be a little bit of pressure. On the other hand, if you look at it, shareholding street cred has been neutral, but valuations very attractive as compared to peers, and outlook shows a strong strength. The final rating for the KYC is coming to 5 out of 8. It's largely in line with the numbers we generally give on a historic basis. But to understand more, we are joined in by Premchand Devarakonda. He's the CFO at Electronic Smart India. And interesting trivia about him is over 30 years of industry experience, held leadership positions in L&T Group and Coromandel Fertilizers, and of course he joined the company as the CFO in the year 2019. But the conversation will continue with him just after a short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360, real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence, and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories, shaping the world. From markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters.
Welcome back to KYC, and now we are joined in by Premchand Devarakonda. He's the CFO at Electronic Smart India. Good afternoon, Premchand sir. It's always a pleasure to have you at NDTV Profit. The first question I'd like to ask is, you have mentioned in the fourth quarter, though it's a bit mixed, that the FY27, the operating leverage starts coming in. Now, what does that mean? Does that change a little bit of margin profile of the company? Because the business model as such is a single digit EBITDA margin business model. Does that change now?
First of all, thank you very much for giving me the opportunity. See, definitely as the store throughput improves, so we'll definitely have the operating leverage. So that will definitely improve the EBITDA margins, but it will continue to remain in single digits, but there will be little bit of improvement. For example, if you compare South and North clusters, in North we are currently having EBITDA breaking even, so which will definitely improve, and South is definitely currently in a stable condition, and it will remain at the same level, like 6.5%. Since the summer season went up very well, so we will have like 20 to 30 bips improvement in South region, and North region will definitely be in low single digits.
Right, and Mr. Devarakonda, SSG growth outlook, it was around 12% in the fourth quarter. How are the initial trends looking like for the first quarter?
See, first quarter, as the base was very low. Last year, entire summer season got washed out because of unseasonal rains across India. As a result, definitely it will be quite impressive in the first quarter. Currently, I think we are expecting more than 15% SSG in the first quarter.
Okay, so the up to 15% is the SSG growth which is there for first quarter, of course on a low base. But apart from this, what kind of strategy we can expect for the expansion in the North India? Because you are trying to expand in the Western UP segment also, that Noida area as such. How is the progress looking like?
Yeah. We are carefully examining multiple opportunities. So, like Western UP is one of the options. Then Eastern India is another option. And in the next quarter, I think we are going to be operational in eastern part of India with Kolkata as the base. So that is going to be the first step in the near future. And of course, the expansion will be phased out, and we'll have our presence in UP as well. But initial focus will be in the eastern part of India with Kolkata as the base.
Okay, so Kolkata as a base for Eastern India, and that's definitely a very big market. Of course, we're looking at your business model. There is mobiles, there is large appliances and small appliances as well. But I want to understand a little bit about your premiumization, products which are there. There are a lot of MBOs are there. I have visited also a couple of your outlets in Hyderabad when I had traveled. I saw a lot of expensive gear in the audio segment, the kitchen segment. Just wanted to understand, how does this premiumization play out for your company?
See, right from beginning also, we have been focusing on premiumization. Like, we never dealt with entry-level products in any of the categories. And now the premiumization has reached the next level. Like, there are certain products which are intended, which are targeted at HNI clients. So those things are like kicking in. And we started importing certain brands which are exclusive for us in India. And if everything goes well, I think we will have decent contribution coming from this category.
Just wanted to understand the same thing. Now the contribution in the product mix, how does it change? Right now we have Electronic Smarts India right now, maybe 5 years down the line, how does your product mix or your product offering change?
See, the product mix will remain more or less same. For example, currently we are like about 50% of our top line is contributed by the large appliances, televisions, and home appliances. And about 40% is contributed by 45% is contributed by IT and mobile. So these categories, and that mix will remain more or less same over the next 3-4 years. Only thing, if some new technology comes in, then definitely that might add. But as of now, we don't see anything in pipeline.
And a lot of international brands and tie-ups is something which the company also does. Mr. Devarakonda, any other new brands which are expected to getting onboarded exclusively for you?
Currently, we have about 6-7 brands which are only in the home entertainment segment. So they are going to be available at our stores in the near future. So. And I don't remember exactly the names of those brands, but these are considered to be premium brands.
And last question, this is a bit strategic question for you, Mr. Devarakonda. So when you enter a new market, how do you fight off the competition which is already there with the local players? If you are coming in West Bengal, there is a Great Eastern is there, a lot of bigger names are there. So what's your strategy, to combat the local competition?
See, when we entered NCR also, we had competition. And last year, we have grown at the rate of 30%. So, and even the current year, we are expecting the similar rate of growth. So, the competition will always be there. We have to coexist. And our strategy is only to provide the best experience to the customers and also provide best support, mainly of post-sale. So, that is our critical... our KPI for our success.
Right. So customer is something which you put them in strength, and of course for the other stakeholders who are watching KYC. Mr. Devarakonda, it's always a pleasure to have you in our show at NDTV Profit, and best of luck for the future, sir. Thank you, sir.
Thank you.
So that's the management of Electronics Mart India. Interesting value retail play. Valuations are also quite cheap compared to peers, and now they're expanding new areas, especially Eastern India with Kolkata as a base. Interesting story. Let's see how this pans out. And always keep watching KYC and stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
US President Donald Trump declared that Iran has agreed to never acquire nuclear weapons, even as the details regarding the future of Tehran's nuclear program remain obscure. The US President also clarified on the $300 billion reconstruction fund to Iran. Nifty hovers near 24,000 levels while Sensex gained more than 300 points. Real estate, FMCG and IT really lead the gains today while metals and PSU banks are on a back foot. Aluminium stocks slump lowest in more than 2 months as US and Iran peace deal enters final phase. The agreement lays the groundwork for the presumption of metal shipments through the Strait of Hormuz, putting pressure on the stocks. HCL Tech soars after the company announced investment in homegrown artificial intelligence startup Sarvam AI. Street thumbs up and bullish brokerages and stocks. Swapping 2-day gain streak, General Insurance Corporation or GIC tumbles nearly 6% in early trade after the government launched an OFS to pare its stake in the state-owned reinsurer. Prime Minister Narendra Modi will attend G7 summit in France today. All eyes will be on his meeting with the US President Donald Trump on the sidelines of G7. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take a quick look at the markets at this particular hour. And yes, US-Iran peace deal is really auguring well for our Indian markets. 2 days in a row, and today Nifty 50 holding above the 23,900 level is really coming in as a good news. But one thing to remember is that the crossover to 24,000 levels has been seeing some resistance and therefore some gyration in the movement today. But while the key indices are really performing well, both Sensex as well as Nifty really gaining, it's not the broader market participation today. And in fact, the big worry for Nifty 50 is that banks, which really are the quasi-play into the economy of India, that is really lagging behind. So therefore, Nifty Bank is really not adding much, is in the red zone, though flattish in trade. And when it comes to the broader market, mid-cap universe, small-cap universe, that's really not participating with as much gusto. But what's really doing well in terms of the sectoral performance, let's take a look. And real estate is doing well. Media, which has been beaten down, is really doing well. FMCG, IT, that has really picked up because of the big deal of HCL Tech, which is really taking the overall sector also momentum, adding momentum to the sector. But big boy Reliance Industries, ahead of its HEM this week, is the top gainer at trade. Remember, 38 points being added on Nifty 50 by Reliance Industries alone. Apart from that, HDFC Bank has also come back in full gusto, while its Bank Nifty, which is really in the negative zone today. All right, so that's a snapshot of the market, but a quick take on what's really impacting the overall market. And remember, crude has a big role to play and a big factor on the Indian markets. So the US President Donald Trump says that Iran deal is all signed, and that Trump comments came during the talks with French President at the G7 summit. In fact, BBC quoted US officials as saying that the deal signed electronically. So that's the big update really coming in on the war front. Crude prices, remember, have softened because of the hopes of Strait of Hormuz now opening up, and that is really adding to the momentum in the Indian market and also giving the positive global cues for India. Achin Goel, who's the CIO and fund manager at Bonanza Portfolio, joins in now. Achin, pleasure to speak to you on NDTV Profit. How much of what you were penciling in and the sectoral and thematic play for the next few months and the rest of the year has really changed after the developments of yesterday of the peace deal, and now what is the scenario and the perspective?
Thank you, Nisha, again for having me. So, it's a very
broad market. One day you see one index, one sector going up, another day you see it's going down. So recently we saw a rally in the banking sector because of the swap concession given by the RBI, and today definitely Bank Nifty we see as a laggard. But if we look at a longer horizon, next 3 months, I would not say longer, but 3 months to 1 year, certain things we have to be watchful about are, probably the upstream oil companies, because if crude is expected to retain in this level, maybe some pressure can be seen on that front. At the same time, certain interest sensitive sectors like, maybe real estate, banks, I would say one has to, kind of start identifying some gems or build positions. I see that we may see good traction there, including realty. Another sector, which directly gets impacted by crude is aviation, automobile, paints, right? So I think this is another sector that one can look into and, start gradually building position for good gains in the coming months.
That's right. A lot of the sectors which had really seen the pressure are now seen recovering. But Achin, one estimate on how much time will it take for recovery, how much of the damage is already done, and what are you penciling in ahead of El Nino effects being fully known and the monsoon picture?
That is something one has to be watchful about. If you really see that so far, from 4th to 15th, the deficit is close to 50-60%. We would expect around 53 mm rainfall, but it's only 19. So it is something known to everyone, and we have to be careful about it. But is it going to impact drastically on the inflation? Probably not, because our food supply and storage are well distinct, but water levels are decreasing. So if I have to really see how it's going to span out, it will impact the inflation. At the same time, we will be having a huge inflow of funds in the form of the measures taken by RBI and government. So somewhere that ease of funds and liquidity will be available in the market to support in difficult times.
Right. So, Achin, if you really look at the scenario right now, for the short-term play of the recovery, you mentioned some of the sectors. How will you play the banking, overall basket and the financial services basket, where NBFCs have had a different theme altogether, but really connected to the quasi-consumption and financial services space? So, the entire basket, how are you going to play, especially with blue chip private banks and the large banks like SBI, which also attract quasi investment for the economy?
So, like I was saying, Nisha, overall banking and NBFC sectors look very positive to me. And a lot of lending activities and credit growth is expected to pick up. Deposits pressure is being eased, by the foreign lending and easing of norms. So if I look at this sector, I see there's a good growth potential now. But between blue chip versus small and mid cap, I always see more potential in the small cap and mid cap side. So if I have to choose between SBI and some mid cap small cap bank, I would probably go with that. Does not mean there's anything wrong with the private or large cap banks, but that's my personal preference.
Right. And Achin, how will you also play the alternate energy space now that crude prices are coming down, and they have been euphoric in terms of the valuation, the renewable energy space, the ethanol space, and the various other ancillary like the EV space. How will you play that in terms of the current valuations?
So, Nisha, if you will see, this theme of renewable energy and, alternate energy has been in play for, good 3-4 years now. If I give you a quick background, now solar energy expected to, 500 gigawatt, or in fact, renewable is expected to be around 500 gigawatt by 2029. We are already, I think, close to 150 gigawatt in solar, and of 500, around 300 is expected to be solar. EV is spanning out right now. Hydro, nuclear. So if I really look at alternate energy, one area that I am really looking forward, which is not crowded, would be nuclear energy, and not directly manufacturer, but also the supplier, EPC, manufacturer, transmission, waste material handler. So, these are the ancillary companies that I would like to, put my brains into.
All right, Achin, great thought there that nuclear energy and all its allied infrastructure stocks, they are the ones which are going to gain momentum in future. Thank you so much for joining us and giving us your expert take on the markets and the themes, Achin. Thank you. With that, we'll slip into a short breather on markets at 12. Come back for more market action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360, real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. You're watching Markets at 12, and remember that along with the equity markets, the money market is of equal importance. Rupee movement is extremely critical for the Indian economy. It strengthened slightly today, and anything below 95 is definitely a very good news. Remember the RBI's measures, first of all, to strengthen rupee, to get more foreign inflows coming in, especially in the debt side. And on the other hand, also remember that because of elevated crude prices, because of the war situation, crude is much more expensive because of rupee that had also weakened. Also, rupee strengthening will impact the FII inflows. Let's get chatting with Abhilash Koikara, who's joining in. He's the head of Forex and Commodities at Novama Professional. Abhilash, pleasure speaking to you on NDTV Profit. Of course, rupee movement is extremely critical for our economy, government, as well as for our markets. How do you see the rupee movement at the current level while many measures are taken and the biggest event of now sanity on the war front? If the peace deal is getting done, crude prices are coming down, with which rupee had been moving in tandem actually. How do you see the rupee movement going forward? It has strengthened today.
Good afternoon, Nisha, and thank you for having me on your show. So on the rupee side, we are mildly biased towards a positive rupee. We feel that the worst of the rupee is behind us. So for the lower levels, which we saw close to 97. And broadly, the range of the rupee should be between 92.5, 93 on the higher end for rupee. And probably we should protect, or kind of the 97 should get protected in the near term at least. A few factors which we feel why rupee should be traded with an appreciative bias. First is there are some structural changes which have happened, right? What were the reasons why rupee depreciated? One was obviously the balance of payment. So we clocked around $23 billion of balance of payment in last financial year. And the market consensus was that with the higher oil and outflows, we would probably see a $60-70 billion of balance of payment for FY27. However, as you kind of alluded to, the RBI measures, one, the FCNR beat, which would kind of bring in close to $50-60 billion in the next 4 to 5 months, as well as concessional rate of hedging for external commercial borrowing, which will result in higher overseas financing for select PSUs, should get another $10-15 billion in. And the lower oil prices, right? We have to be mindful of the fact that oil has corrected close to 33% from the top, or the near-term top, which we are seeing close to $120 a barrel. So all this put together, now our view is that we might see a flattish balance of payment, and if debt and equity market flows support in the second half, we can kind of move into a positive trajectory, which is a strong support for the rupee and to ensure that rupee depreciation doesn't happen in the future.
Right. So Abhilash, the point that you mentioned of 92, 93 levels of rupee, that's the level of rupee we haven't seen since the war really started. What is the timeline being set of fruition of some of the measures as well as the impact of war peace really coming in on these levels being hit by rupee? What is the timeline that we are looking at?
So we are looking in the next 3 to 6 months. So probably by this calendar year end, we should touch between 92 and 93 is our view. And if you look at the real effective exchange rate, right, of rupee, today we are trade weighted real effective exchange rate is close to 90. The levels were last seen in 2013 when we are part of the fragile five, right, or so-called fragile five at that point in time. So now the competitiveness of rupee, if this peace deal sanity sustains, rupee is very competitive both from an export angle, export competitiveness, as well as for the capital flows to come in. So because of that, we feel that in the next 3 to 6 months, we can see 92, 93 levels on the rupee.
And also, Abhilash, there were some unconventional measures that have been really resorted to by the central bank in order to arrest the fall of rupee. That was because of the unusual, circumstances of the war situation. Do you see the RBI in future unwinding that and reversing some of those measures, and or will it be a wait and watch and let it play out and strengthen the rupee and do? What is the outlook on the RBI's outlook on and the measures and action on rupee front?
Yeah, so see, RBI has been very clear, Nisha, that RBI is looking to correct the volatility of the rupee and not kind of define a level for rupee, right? So some of the measures which were brought in, that was because there was excessive volatility in the rupee and speculation, at least in the offshore markets. Now, some of the measures which RBI had brought in, they have already reversed, right? For example, exporters were given a time period of 15 months to get their proceeds in, which was earlier 9 months in, right? Now they are reset it to 9 months. So that means more exporters will hedge and more money inflow will come into India. So I feel that RBI will keep on adding measures to boost the rupee, because if you look at even the RBI's forward book, right, they have close to $100 billion of short forward position as on April. Right. So it's not that RBI is not taking measure. I think they will continue to take measure, but they will not click to a particular level. They will look at correcting the volatility or extreme volatility of rupee. So some of the measures like export remittances, they have already auto-corrected and got it back to the pre-war levels.
Right. So, Abhilash, many aspects there. But of course, rupee strengthening will be a good news for the economy. Thank you so much, Abhilash, for joining in. And he is from Novama Professional Client Group. That's all the time we have on this edition of Markets at 12. But do keep it with NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the profit market pit. You know that consolidation phase has continued as well, which we saw in the second half of the trading session, Sharad, yesterday. But the question is, taking the expiry into consideration and with the cues that we're picking up in terms of the US-Iran deal, what is the sense that you're picking up in terms of factors to watch?
Well, good afternoon, Hiral, and you are right. There is a sense of consolidation at play, and why it should not be. There is a technical cool-off also. Largely, we'll see a little bit of aberrations coming in, but remember the markets are likely going to be in a range bound. There's, of course, the most importantly, Nifty expiry is also at play. So last 90 minutes, you can have some more volatility coming in. Nifty Bank, let's see what's happening here. And just compare that with Nifty. Of course, a little bit of recovery is trying to come and trying to come at its flat positions. But the technical setup, of course, it had run up. So that sell-off is there and those positions are getting squared. Let's look at the key factors, in a market like this, which we are expecting a, kind of a range-bound consolidation. The 24,000 level mark, that is where the options data is suggesting a resistance is there. Nifty Bank, of course, the technical setup is on the weaker side. Let's see what else is there. Of course, a technical cool-off is there, and if possible, post the rally which we saw the last 2.5 trading sessions. Let's move on and see what else is happening. This setup suggests a further consolidation. So either side, you can see the Nifty Bank moving, but the variations don't be very high. That's what the data is suggesting. Medium-term technical setup still looks decent. It's a good setup, and of course markets will be looking for the next trigger for the up move. The buying momentum continues for both realty and FMCG. Realty pack for last 3 trading sessions have been the top gainers sectorally speaking. Also, let's talk about the other key factors, and macros also definitely comes in. Metals are seeing a sharp sell-off in trade, and this one big reason is a weak China macro data. So that is something which we'll be watching out for. And even dollar has strengthened a bit. Rupee is near its day's low level. Nothing to be concerned about. A little bit of technical cool-off is happening there as well. Dollar has stabilized ahead of the Fed's FOMC meet, which is on Wednesday. Most of the global assets have. So it's a little bit of pause. It's a technical pause. And let's see what happens in these important board meets. Apart from this also, if you look at it, the most momentum in the markets, if it comes in, is going to come in from any domestic related announcements. And Hiral, we had discussed about, some more government help coming in when it comes to, reducing the taxes on the FIs. That's what we have been discussing last week. Maybe something comes up from the government this week.
Lots to watch out for as we speak right now. But moving on, let's quickly look at our watch list. You have HCL Tech, Sarvam AI, bet is what you're actually looking at. HCL Tech has invested close to 1,400 to 1,500 odd crores, and this is with regards to where a 10% stake goes. You have L&T. Interestingly, the first target price that they've received above levels of 5,000, and that's what you're looking at. Metal stocks have been under pressure, and this is because aluminium prices have crashed in overnight trade, and that is having a bearing on names like Hindalco, Nalco, Vedanta. Moving from there on, Bajaj Twins, both of the counters are up 5 to 7% in the last 5 trading sessions. So what's brewing on that front? You have Tata Motors PV, which did have actually released their annual report where they're talking about the China luxury market actually actually seeing margin pressure because of that. Apart from these, you have a HDFC Life. That stock is down nearly 24% on a YTD basis. The question is this the time to bet on insurance companies because of the correction that has already come in? Devyani International as well as Sapphire Foods, both of these companies, the merger clearance on its way, so they're one step closer. Hence, both these counters are buzzing in trade. GIC, the government has launched an OFS. That stock is under pressure on the back of the discount that you're looking at. Arvind Smart, a new residential project boost worth almost 180 crore GDV that you're watching out for. You have a CLSA which is downgraded at Dixon. Bharat Gears is also buzzing in trade as we speak. Suzlon, Inox, all of these counters that are in focus. Along with the Dr. Lal Path, the stock has hit a 52-week high. Sonata Software, 9 times 20-day average volumes is what you're looking at. So these are the stocks that you're focusing on in today's session. But let's go across to Sharad to take the rapid fire with Devin Mehta of IDBI Capital.
Thanks a lot, Hiral, for that. Good afternoon, Devin. It's always a pleasure to have you at NDTV Profit. We'll start a rapid fire round. The first stock is L&T. Of course, a good technical signal coming in yesterday's session, and now broking upgrades have also started coming in as the Middle East issues are getting solved. What is looking on the technical charts, especially on a positional setup?
Definitely, stock is positive. One should buy on dips towards 4125 for the target of 4,440 levels.
Right. Apart from L&T, the Bajaj twins, Bajaj Finserv and Bajaj Finance, they were seeing a good reversals. And now also that momentum is showing in the BFSI space, at least from these names. Do you think there's a further up move here?
I think Bajaj Finance is more looking good on charts. Overall, the structure is positive. One should hold with a stop loss of 915. We can see Bajaj Finance to move towards 990 levels. Whereas Bajaj Finserv is slightly negative. It has a resistance around 1,810 levels. So we can see some profit booking at that particular level. Whereas Bajaj Finance looks good.
Right, and Devin, next stock is GIC. The stock is down back of the OFS news. Do you think this selling is, going to come off and some kind of a bottom fishing can happen? Any kind of, buy trade happening here, or you will stay away from this counter?
No, I think one should stay away from the counter. The overall structure is weak. One should try to exit on bounce.
Right, next stock is Dr. Lal Path Labs. I wanted to take your views on the charts, how things are panning out. Its stock is up 5%. And do you think there are more, legs to this rally?
I think the stock was up by near 1,800 levels as well. It has shown some profit booking, but the structure is positive. The way volumes are up, I think one should hold with a stop loss of 1590. It can again move towards 1800 levels.
Right, and Sonata Software, let's get that stock also on the screen, and stock is doing well. It's up almost 17%, a very big jump coming in. Good time to take a little bit of profits off the table?
No, I think the stock has given a good breakout above 300 mark. I think one should hold this particular counter with a stop loss of 295. If it closes today above 300, we can see stock moving towards 330 and 370 levels. The way it has moved higher with great volumes. I think one should hold with a trailing stop loss of 295.
Right, hold is the rating coming in for Sonata Software from Devin. But that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks suggesting?
Okay. Let's actually pick up what's trending, because yesterday you just had, I think, one of the Vedanta companies that was trending. Today you have a Vedanta Power. Interesting names, Ashok Leyland, Maruti Suzuki, which has joined the bandwagon from the Auto Pack, and CV as a theme. If I have to talk about Ashok Leyland, has been in focus over the last 2 trading days, because the entire CV basket from financiers to OEMs have been buzzing. Hindalco Industries, for obvious reasons, is in the news because you have aluminium prices which have crashed, and you have Ambuja Cement also, which is in focus today. Devin, let's look at Ashok Leyland, Maruti Suzuki, as well as Ambuja Cement. Anything that you like on the charts, or you have a strategy for any of these names?
I think overall all the auto counters are looking good from the recent move we have seen. Maruti is slightly facing resistance around its 200 exponential moving average near 13,900. If it holds above that, then we can see a good up move in Maruti, even Ashok Leyland is facing a slight resistance around 160. If it holds above 160, we can see some further up move in Ashok Leyland as well towards 172 and 178 levels. So overall, stocks are facing slight resistance, but if it closes above these levels, we can see some further up move in the auto counters as well.
Okay, so that's with regards to where auto names go. But thank you, Devin, for that. We'll quickly slip on to a short break. On the other side, we'll connect with Gaurang Shah of Geojit Investments for Fundamental Stock Check. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back to Trending Stocks, and of course we are talking about AI and IT stocks, and there's a big debate. It's always there, but seems like there is a twist in the story, and that twist is there is an acquisition by HCL Tech in Sarvam AI. To decode this and why this is important for large IT companies, or as we say service companies and AI, we're joined in by Jasmeet. Jasmeet, why this acquisition is important?
Well, as you rightly said, there has been always a battle around AI and IT and how IT will perform with the AI. So we have seen lately a lot of IT companies have acquired a lot of AI companies to fasten up the AI belt. Similar things done by HCL Tech as well. While HCL Tech invests nearly $150 million, that's roughly 1,400 odd crores to acquire 10% stakes in Sarvam AI. Well, Sarvam AI is a full stack Indian origin AI company that develops end-to-end from scratch in India itself, develops the AI LLM models. Well, this investment by HCL Tech will be used to do further research and development into this space. And what will HCL Tech, that becomes a key question for this particular acquisition. While for HCL Tech, it will be an expansion in the AI chain across its AI clients. Further, they will also develop a lot of regulated bodies across government and other bodies as well. While HCL Tech also plans on using the multilingual feature for its global clients as well. So all in all, we do see positive move in the stock at this moment, but it's a wait and watch of how does this turns out going ahead. But the interesting one, Sharad, to mark is the overall valuations. If we look at the key valuations paid for this particular acquisition is roughly 315 times of what the revenue is. The revenue for a company, Sarvam AI, stands at 45 odd crore, and HCL Tech has paid nearly 1,400 odd crores, making the overall price to sales at 315 times.
Thanks a lot, Jasmeet, for that, and definitely we'll look into this. Now we are joined in by Gaurang Shah. Good afternoon, Gaurang, sir. Jasmeet was talking about a very important acquisition in the AI space. Generally, for the large cap IT companies, we hear about buybacks and dividends. Does the story flip now?
Hi, Sharad. Thank you so much for having me on your show. Good afternoon to all your viewers and to you. A small disclosure as mandatory, Sharad, all recommendations that I'll be sharing with you this afternoon on your show, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Jyojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So up till now, we were worried about AI and how capable Indian companies are to match up or cope up with that ever-changing innovation, fast innovation in the AI. And now that you have HCL going ahead with this kind of an acquisition, the street is worried. One thing, let us be very clear, such acquisitions, such kind of mergers or takeovers will be the new order, according to me. And to keep them relevant, I think it is very important to reinvent themselves and get them into that new mold. As a disclosure, we do have a positive coverage on HCL Tech from a long-term point of view. My only say is, Sharad, that you need to have a little bit of longish time horizon when you eventually understand and decide to invest in IT-related companies.
To IT companies as we speak. In fact, Qatar LNG supply, an update coming in on that from Bloomberg, where they're saying that they've restored 50% of the LNG output in 1 month of Hormuz reopening. That's an important update because this has been one of the pressure points as well when it comes to LNG supply chain concerns, specifically when you talk about our country as well. But clearly, 50% LNG output has been restored in 1 month of Hormuz reopening. That's the latest that we're picking up so far. But moving on. Union Renewable Energy Minister Prahlad Joshi has actually flagged off that the issue of aging wind turbines in the country is concerning. And speaking at the Global Wind Day conference in Goa, he asked industry bodies to submit a detailed nationwide assessment of old turbines. And this could become an opportunity as well when you talk about companies who are into this business. First, let's listen in to what he had to say.
Since we have a large number of old turbines, including many of 225 kilowatt projects, I would like IWTMA and WIPPA WIPA to submit a detailed assessment within 13 days about the number of such turbines across the country.
Well, that's pretty interesting, talking about the government stance on these wind turbines. But what's the stock-specific impact, and is it positive or negative? We have Varsha to decode that. Hi, Varsha.
Well, positive, of course, for the overall sector, and hence, Suzlon and Inox Wind are also buzzing in trade. overall government wants to replace old turbines with modern machines, with higher capacity to generate more power, and India has a large fleet when it comes to the older turbines, and this is a huge potential to upgrade with the newer ones. As we all know that India aims at 100 gigawatt wind capacity by 2030, and the target will rises by 156 gigawatt by 2036, and repowering can add almost 75 to 80 gigawatt in next 3 years, which helps to solve the grid stability problem, and hence you're seeing Suzlon and Inox Wind in focus today.
Thanks a lot, Varsha, for that very interesting analysis on that. But Gaurang sir, a quick view on these players, the wind players, a fresh lease of life comes in, a positive news flow.
Absolutely, Sharad, and I think these should have been the policies when initially we started venturing into renewable energy, whether it is wind or whether it is solar. Now, with wind energy, the height of the turbine, the weight of the turbine, and the span of the wings, aging could lead to some serious accidents as and when they happen. So I think periodical inspection, and if that inspection finds something amiss, then doing all that you can to replace those turbines will be the order of the day. What are both the names? We have a positive coverage on Suzlon from a long-term point of view on the fundamental side.
Thanks a lot, Gaurang sir, for your time and your views. We are running short of time. That's all, folks, for Trending Stocks. From me, Hiral, and the entire team, which have put together this wonderful show. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems just.
Nifty hovers near 24,000, and that's the update coming in when you talk about markets as well. In terms of Sensex as well, you're seeing a little bit of uptick also come in terms of Sensex, in terms of leading gains, realty, FMCG as well as IT lead gains, while metals and PSU banks are on the back foot. Aluminium stocks slumped to the lowest in more than 2 months as US and Iran peace deal enter final phase. The agreement lays the groundwork for the resumption of metal shipments through the Strait of Hormuz, putting pressure on stocks. HCL Tech soars after the company announces investment in homegrown artificial intelligence startup Sarvam AI. Street thumbs up and bullish brokerages aid stock. Meanwhile, snapping a 2-day gaining streak, General Insurance Corporation tumbles nearly 6% in early trade after the government launches an OFS to pare its stake in the state-owned reinsurer. Good afternoon. Thank you so much for staying tuned in. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that's going to get you a check going as far as the world of commodities, news and updates are concerned. But first things first, let's talk about the markets then. And it looks like a decent day in trade when you talk about across the board, whether you talk about Nifty or Sensex, you're seeing gains come in. But even when you talk about a sectoral basis, something like an IT, FMCG, realty, oil and gas, all of those sectors in good shape right now. Metals, PSU banks, pharma and auto on the back foot as well. So that's something that you're seeing coming in. When you talk about the gainers as well, Sonata Software is buzzing away on the back of an NCLT nod for Encore IT merger. Fact, you do have some of those fertilizer companies that are buzzing away on the back of the government saying that the import dependence is set to ease. But that's largely the check going as far as market is concerned. That said and done, let's also talk to you about the sharp slide in global aluminium prices that is putting metal stocks under pressure. And mind you that this is one of the biggest losers in terms of sectors today. Easing geopolitical tensions in the Middle East have eased supply concerns as well, triggering a sell-off in aluminium and raising fresh worries over earnings for producers like Hindalco and Nalco. Parth is joining in with some more details before we get you some insights.
Sure, so the aluminium stocks are facing some pressure today with Hindalco down over 3.5% and Nalco down over 4.5% today. Also, so far in this June, both Hindalco and Nalco are down almost 15%. So a lot of pressure is what we are seeing in these. Now, the reason behind this is that the aluminium prices globally have dropped 4.4%. They dropped 4.4% yesterday to reach the lowest level since March 27th. So far in this June, aluminium prices have lost almost 10%. So this is the main reason why aluminium stocks are in pressure today. Now, the reason behind this fall in aluminium prices is that the peace deal that has been announced between US and Iran, which includes the toll-free opening of the Strait of Hormuz. And currently, Middle East produces around 10% of global aluminium. And now with the supply bottlenecks easing as well, the things are expected to normalize pretty soon. Now, in terms of impact on Hindalco and Nalco, both of these stocks are very sensitive to the global aluminium prices, as lower realization means lower revenue per ton of what is sold by both of these companies. Nalco will take a bigger hit because they have a pure upstream metal exposure, while Hindalco bleeds on their upstream business, while their downstream Novelis segment will offset some of those losses.
Absolutely, and thank you so much, Pat, for getting us a check going as far as some of those counters are concerned. Let's also get you some more insights when it comes to aluminium prices. Try and get a sense of what's going to be happening from here on. In fact, Dinesh Somani, founder of Pro IntelliTrade Services, joining us on the show right now. Mr. Somani, a very good afternoon to you. Today, for a change, want to try and understand what you think about aluminium prices. Quite the knock coming in and quite the change when it comes to the setup. How are you looking at it?
Well, definitely we saw a huge rally coming in aluminium prices because of the supply disruption in the Gulf countries. 9 to 10% of the aluminium is being produced at those levels, and because of the supply disruption in Indian MCX market, prices of aluminium moved up from 300 level to 395 level, more than 30% in less than 3 to 4 months. Now, since the Strait of Hormuz is about to open, the geopolitical tension are easing out, the warlock situation is about to get over, the peace deal is most likely to be signed by this Friday. So there is a concern with respect to the supply disruption. Now, from Middle East, the supply is going to resume, and that is causing the prices of aluminum to decline. Yesterday, we saw more than 5 to 6% of decline in the annual prices. Currently, LME aluminum is traded around 33.40. Probably it must test 30 to 50, $100 from here as well. But since it has declined a lot from yesterday, a pullback rallies from here to 10 to 12 rupees is expected. From there, the pressure is likely to resume further.
No, absolutely. And speaking of pressure, then, Mr. Somani, let's talk about oil prices. It's the longest losing streak this year that you're looking at when it comes to Brent as well. What are you penciling in? Do you perhaps pencil in a little bit of recovery going forward, and how are you looking at that?
Don't expect a recovery right now. As I said earlier, the major reason for the rise in the crude oil prices is only because of the 20% of supply destruction. Now, since these things are being easing out, there is going to be an immense supply of crude oil post-Friday. So that is what the market is factored in right now. We have seen the WTI crude trading almost at 80 level mark. Expect a $4 fall further into these prices, expecting prices to stabilize around $76. As far as MCX levels are concerned, I think a break below 75.50 will immediately lead to 72.20 levels, and from there prices are going to ease out.
No, absolutely, and thank you so much for highlighting that as well. Going forward, just wanted to try and understand what your view is in terms of the longer term as well, because when you talk about some of the forecasts as well, they're a little bit bearish going into the longer term. How are you looking at that as well?
As I said, the supply is immense, the demand is limited in terms of crude oil prices. The only reason for the rally was the 20% supply disruption, and now things are being easing out. I don't expect the geopolitical tension to escalate further. There could be extension of the peace talk. There could be delay in the signing of the memorandum, but I think overall things are going to ease out from here. Prices are going to stabilize around $74 to $76. We don't expect prices to cross $86, $88 from here onwards.
No, absolutely. I was hoping that you could give us a little bit of a timeline in terms of how many months you're looking at, and that was my question precisely. But let's also move on and talk about gold prices as well going forward, right? When you talk about gold, you've seen that change really come through in terms of the setup, how you're looking at gold prices as well, and what are you then penciling in, any levels that you're looking at as well?
Yeah, definitely. We have seen a low of 4030 in the COMEX gold prices. From there, we see a release rally of almost 8 to 9%. Prices are testing almost yesterday tested 4368 levels. There is a sharp correction from there onwards. I don't expect prices to fall below 40 to 40 levels from here. Upside, expecting a level of 4550 in a month or two.
No, absolutely. And also wanted to try and understand what you think about fresh buys right now, because, when you talk about investors who are already invested, it's a little bit of sigh of relief really coming through for them. But what about those who are waiting for fresh buys, waiting for the dust to settle in?
Yes, definitely. I think the dust has already settled in. For prices from $5,600 has almost declined to $4,000, a fall of almost 27 to 30%. I think it's a good level to accumulate for long term. Don't expect much downside from here. Maybe prices could stabilize for around a quarter from here in the range of 4,200 to 4,500. But overall, there is a good potential upside.
No, absolutely, and thank you so much for highlighting that potential upside as well as the timeline when it comes to what happens going forward as well when it comes to gold prices, and joining us on the show. So there you go, that's the update coming in. As far as oil prices are concerned, aluminium as well as gold also concerned. Let's also move on and talk about how the Strait of Hormuz that is expected to reopen after US and Iran sign the deal as well. You do have top officials as well telling NDTV Profit that oil supplies may take weeks to normalize. In fact, Sesha Sen is joining in with some more details on this one.
India is watching closely as a potential US-Iran peace deal raises hopes of easing global energy tensions. Now, a senior petroleum official, however, said that the normalization of oil flows could still take weeks even if the agreement holds. Now, once the deal is signed, the reopening of the Strait of Hormuz is expected to potentially allow the crude, LNG as well as petroleum product shipments to resume in the coming days. Industry estimates, about nearly 180 million barrels of crude and refined petroleum products remain stranded in the Gulf, along with more than 1 million tons of LNG. Now, the loaded tankers will start moving as and when the strait reopens. However, most details of the agreement are still unclear, and India is definitely closely tracking developments given the region's importance to its energy security. In markets, oil prices have fallen to a 3-month low of about $83 per barrel, though they remain about 20% higher than pre-war levels. Now, officials also said that prices may also not immediately recover to pre-war levels, given that almost 10 to 11 million barrels per day of production has been shut in West Asia, besides which some facilities have also suffered damages. Now, before the conflict, the Gulf accounted for roughly 40% of India's crude imports, and that clearly underscores what is at stake as supply routes begin to reopen.
No, absolutely, and thank you so much for getting us all of those details. Time for a very quick break. More news and updates on the other side.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to put the spotlight on the G7 summit where all of the action right now is, and you do have all of the world leaders who are assembled there, right from French President Emmanuel Macron in Evian-le-Baye, and Macron welcoming US President Donald Trump, as you can see on your screens as well. You do have Zelensky, Egyptian President Abdel Fattah al-Sisi, as well as UAE President Sheikh Mohammed bin Zayed Al Nahyan and Qatari Emir Sheikh Tamim bin Hamad Al Thani as well, ahead of a work session on the Middle East. As you can very clearly see on your screens, all of those leaders are really gathered there in conversation, and all of those updates really something to watch out for. All of the flags that you see on your screens, those are the countries that are assembled in front of you, and that conversation, anything and everything that comes out in by the way of commentary is going to be something to watch out for. With speaking of something to watch out for, let's also talk about some of the stocks that are buzzing away in trade. In fact, Parth is standing by with that update.
Right, so there are three stocks that are in my watch list currently, starting with General Insurance Corporation, where the government has launched an offer for sale to sell up to 5% stake in the company. The floor price for this issue has been set at 352 rupees per share. The base issue size stands at 1235 crore, while the total OFS size may reach up to 3087 crore if government proceeds to exercise the oversubscription option as well. The non-retail bidding has started for this OFS today, while the retail bidding will be starting tomorrow, that is the 17th of June. The second stock is Arvind Smart Spaces, in which the company has added a new South Ahmedabad residential project. Now this project is spread across 58.25 acres with a sellable area of 25 lakh square feet, giving them a top line potential of 180 crores. It follows a joint development model which limits their capital deployment and also strengthens their Ahmedabad-based growth pipeline. The third one is HCL Tech, where the company has invested $150 million for a 10.46% stake in Sarvam AI. This is the first major AI investment by an Indian IT major company. And if we have a look at the brokerage reports regarding this matter, then Morgan Stanley maintains an equal weight rating on HCL Tech with a target price of 1410 rupees, while Nomura maintains a buy rating as well with a target price of 1600 rupees per share. This acquisition of a stake in Sarvam by HCL Tech will help them build industry-specific AI solutions globally.
Absolutely, and thank you so much, Parth, for getting us a check going as far as some of those counters are concerned. Let's also move on and get you an interesting update. The government's divestment program is off to a strong start, with Q1 receipts expected to cross the 15,000 crore mark as well. A series of PSU offer for sale transactions have contributed the bulk of collections, helping really strengthen non-tax revenue receipts. And the government is also progressing with the strategic sale of IDBI Bank, while a stake sale in LIC is expected later this year as well. So that's something that you're looking at as an important update. But with that, we're completely out of time on this edition of Lunchtime Trades. Thank you so much for tuning in.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook. This is where the future shows up first.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. Now, if you look at the markets first, the Nifty has been gaining for the third consecutive session, but 24,000, that continues to remain a big resistance for the benchmark index. Even when it comes to the Nifty Bank Index, that has been largely consolidating around just up 40 odd points in trade, just 0.08% up in trade. And today's gains are largely led by only two names when it comes to the benchmark. It's Reliance Industries, which is contributing around 38 points, and then there is HDFC Bank, which is contributing close to around 34 points in the rally when it comes to the Nifty 50 index. Among the sectoral indices, Nifty Realty continues its upward trend. Nifty IT up around 1% in trade, largely because of HCL Tech. And on the losing side, we have Nifty Metal Index, which is down nearly 2% in trade on the back of weakness that we are seeing in aluminium names, and that is because of the fall that we had seen in the prices of aluminium. But when it comes to Nifty Small Cap Index, yet another day of gains that we are seeing. The index is up around 0.1% in trade. But Varsha, can you take us through which are the key stocks that have been buzzing when it comes to the small cap names here?
Well, let me put up Rashi Peripherals. We have seen highest volume since listing in Feb 2024. Let's see what that stock is doing. The stock is up almost 15%. You have Concord Enviro Systems also buzzing on the back of order win of around 16 crore. The stock is up 13%. Magellanic Cloud is also in focus today. Fabtech Technologies have secured 31 crore order for veterinary vaccine facility project. Let's see what that stock is doing. Is up almost 11% in trade. You have PDS also, came out with an investor presentation laying out the growth vision that they have for next few years. Is up on the back of this, is up almost 7%. On the loser side, though, you have Moti Sons, which is sulking in trade. You have ACPC also. The Moti Sons is down almost 12%. SEPC is also down almost 3%, and Hindustan Oil is also sulking in trade. But one stock which we want to throw a spotlight on is of course Shriram Properties. Now this is on the back of the JDA that they have signed. But to speak more about this, we are here joined by Gopal Krishnan, who is Executive Director and CEO at Shriram Properties. Sir, welcome at NDTV Profit. Always pleasure to have you. Just wanted to understand the JDV that you have signed, which gives you the gross development value of around 600 odd crores. If you could, give us more details on that, and how aggressive is also your business development pipeline for similar JDVs in 2027?
Yeah, good afternoon and thank you for taking me online. So we signed a JDA for about 9.1 acres of land in North Bangalore. GDV of about 600 crores is the gross development value. I think we should be able to launch this in 2026 itself. and hopefully be able to deliver in 3 years' time. So that's the kind of acquisition that we completed. With this, we've done 3 transactions during the year, aggregating to 1.7 million square feet of developable area and about 1,800 crores of development potential, GDP of 1,800 crores. In addition, I think our pipeline is very aggressively growing. We're very confident of consummating 3 other transactions spread across Pune and Bangalore. Actually, 4 transactions spread across Pune, Bangalore, and Chennai, adding up to almost 7 million square feet, almost 6,000 crores of GDP to be done, to be accomplished in the next 2 to 3 months. So I think that's the kind of potential that we have. These are at advanced stage of conclusion, these transactions. So we hope to be able to consummate almost 7 million square feet going forward during the next 100 days, and about 1.7 million already done during the year. That takes us to about 8 million square feet with about 7,000 plus crores of GDP against our annual target of about 8 million square feet for the current financial year. So we should hopefully be able to achieve our full year guidance during first half itself is the expectation that we have.
Understood. And you also mentioned that this will strengthen your, Bangalore pipeline. How much of future growth are you expecting from the city?
So Bangalore has been a core market for us always. And we believe Bangalore will continue to account for about 40% of our overall pipeline. And this year, FY27 itself, against 7 million square feet that we are supplying for launches during the financial year, FY27, I think nearly 40% is coming from Bangalore. The rest is equally spread between Kolkata, Chennai, and also Pune. So we have a well spread launch portfolio for this year. And overall pipeline wise, if you look at, I think we will continue to have Bangalore accounting for about 40% of our overall pipeline going forward.
Right. And also, you're expecting the launch in this year itself. What kind of pre-sale visibility are you seeing when it comes to this market?
So in Bangalore, our team has done a good job. Most of our recent launches have been sold within 2 to 3 months of launch. In fact, the last launch that we had in Anekal in Bangalore, we have we launched it in about 4 months ago. Today, we are almost fully sold in that project. So that's the kind of velocity that we are seeing in Bangalore markets. That's the strength of Shriram brand and as well as the strength of the operating platform that we have built. So therefore, we are very confident of selling this new project within a year of launch and hand over completed project to customers in about 3 years from the launch timeline.
Right. And also, sir, you are also guiding 3,300 to 3,500 crore of sales. What gives you confidence despite, we've seen the approval delays in FY26?
I think those lessons are behind us. I think we have learned a few lessons from there and accommodated those learnings into our planning process as we go forward. I think we are very confident of because, as I said, we have about 7 million square feet we are supplying to the launch process. 10 or 11 projects in the pipeline at various stages of approval. And we believe, based on the progress so far, it gives us a comfort and confidence that we should be able to sail through comfortably, unlike in the recent past. Also, we have a launch which is spread across different cities. As I said earlier, 40% is Bangalore, rest is spread well between Kolkata, Chennai, and Pune. Therefore, the approval risk is also de-risked, since given the geographical spread, we don't see a significant challenge in front of us. So overall, I think we are very confident about achieving our guided volume of 5 to 5.5 million square feet for the current fiscal.
Okay, so just wanted to check the 3,500 crore guidance that you have given, that's for FY27, right?
Yes, sir.
Okay, and what percentage of FY27 launches already have approvals in hand versus pending?
We have a couple of projects already approved out of the 10 launches that we have.
Okay, so remaining out of the 10, only two of them have got approval, while 8 of them are still pending, right? But you're pretty sure that that will come in during the year.
Yeah, there are two reasons, right? One, they are still early enough in the game because they are meant for Q3 and Q4 launches. Also, the remaining launches are spread in Pune and Chennai and Kolkata. So Kolkata is also already in the process of getting launched. So I think we have a very good comfort on the launch visibility as we go forward.
Right, and also, sir, you know, in your con call, you mentioned that margin expansion won't come from price hike. Then what are the key levers to improve the margins from here? Because FY26 EBITDA was flat, you know, due to a cost escalation. Just wanted to understand what kind of margin improvement can you see in FY27 and what will be the key drivers for that?
Margin expansion can happen with the scale improvement, because the economies of scale is what is going to drive the margins going forward. On a medium-term basis, we would stabilize our EBITDA margins in the mid-20s and our PBT margins in the 10-11% range as we go through. So that's our aspired or targeted stabilization level, and we are on track to reach that kind of number. Speaking specifically about growth in FY27, we see a 20 to 30% growth at different levels of P&L in the current financial year, as we have indicated earlier.
Right, and for the Pune markets, you sold almost 300 units versus 850 units annual market absorption. How scalable is this success in Pune, and will Pune become a core geography for you as well?
Yes, I think we are very confident, very positive about Pune. It is scalable. The market, the share that we highlighted in the earnings call was about the particular micro market as well. And we have now got 3 other projects at the different stages of approvals and closure. And these are in a different micro market and more closer to the software corridors. So we should be able to scale up our volumes. And at some stage, we believe Chennai and Pune will compete with each other from a core market perspective in terms of which one becomes the second largest contributing market for us. For now, we are betting on both of these markets, both Chennai and Pune. So Bangalore will always be the 40% plus kind of volume for us. The rest is basically between Bangalore, Chennai and Pune. Kolkata will follow, and Kolkata we are obviously accelerating our monetization, so we'll have more launches coming up in Kolkata as well. So I think all 4 markets will feed strong growth for us, and that's a confidence on which we have guided a 20% plus kind of growth in top line, the volume, and in a P&L side between 20 and 30% growth at different levels of P&L.
Right, all right. Well, thank you so much, sir, for joining in and having a conversation with us. Pleasure to have you on our show. Thank you so much. Well, this was Shriram Properties expecting 3,300 to 3,500 crores of sales in FY27. But small cap heat continues after this break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. You're watching Small Cap Buzzers. Now, before we move on to our next small cap stock, let's get in Jasmeet to understand what's been buzzing on the FNO side of trade.
Well, Samir, thank you for that. It has been a good day for markets today, third consecutive day. If you look at the key stocks buzzing in today's trade, we have HCL Tech and Reliance buzzing there. HCL Tech on the back of the acquisition. Further on the negative side, we also have Tata Steel and Maruti down about 1%. Now, if you look at the FNO side of the business, we do understand that the long unwinding is happening for the PG Electroplast and Suzlon getting about 7.5 to 4% in today's trade. Now, when we look at the short covering, we also have stocks like Tata Consumer, which we see short covering given they were buzzing into it yesterday, the entire consumer pack. We also have access to Lombard about 2%. But when we look at the overall long unwinding, we have stocks like Solar Industries and Uno Minda down about 1.5 to 3%. And lastly, when you look at the short build-up, we do have aluminium stocks down about 3 to 4% on the back of that drop in the aluminium pricing that we have seen on the back of the easing of the geopolitical tension. And these are the FNO stocks that has to be on the radar for the FNO market.
Right. Thank you so much, Jasmeet, for all the details. Well, moving on, let's pull up chart for Concord Enviro System. The stock is buzzing on the back of, order win. Is up almost 12%, but we have Parth to give us more details on that.
Right, so Concord is a waste and wastewater treatment player with majority of its focus on zero liquid discharge solutions. If you have a look at the stock performance today, then it has surged nearly 14%, which is its biggest single day gain since it was listed on December 2024. It is also the highest ever volume day for the stock since Jan 2025. Now, the reason behind this up move is that their subsidiary ROChem has bagged a 16 crore steel sector order, which is to install waste treatment and zero liquid discharge system within a timeline of 12 months. Now, not just this order, in fact, recently the company has won two major orders as well. On 29th May, they won an order of 126 crore, and on 2nd June also, the company won an order of 16 crore. So, a lot of order wins is what we are seeing in this counter. Now, moving on to the future growth drivers, the FY27 order intake target stands at 1,000 crores with their bid pipeline currently at 3,000 crores. The management is expecting solar, CBG, RO Serve and O&M to remain the key growth drivers for the company going forward.
Thank you, Parth, for that information on Concord Enviro. Well, that's all we had on the show today on the Small Cap Buzzer. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome, you're watching Ask Profit, the afternoon edition. I'm Mahima Vacharani and this is a show that gets all your stock-related queries answered. If you've watched us daily, you know the drill. Try to call us or send us your query on the WhatsApp numbers that are flashing on your screen up there. With regards to where the markets go, the Nifty 50 is almost at its day's high point, up by about 0.5 odd percent. The VIX, however, has spiked up since we last spoke, up 6%, so that indicates volatility. The Bank Nifty now, still in fact trading flat around the 57,100 odd levels, 190 odd levels. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are doing well. You have, of course, your consumer names, HCL Tech, etc. doing fairly well, but Hindalco, JSW Steel, so metal names are tanking and seeing profit booking. Let's try to pull up the mid cap 150 and the small cap 250, holding up, but have cooled off from its day's high point. For the mid cap 150 trading 0.2% higher, underperforming the benchmarks, and so is the small cap 250 up by about just 0.2 odd percent. So that's with regards to where the markets go. Let's start taking in your queries, and to answer them we are now joined by Narendra Solanki, who is the head fundamental research at Anand Rathi, joining us now, and Kunal Shah, senior technical and derivative analyst at Mid Asset, also joining us now. Welcome to both of you gentlemen, and a very good afternoon to you. The first question that we have is on FMCG names. Rakesh Gupta from New Delhi is holding 60 shares of Britannia and 100 shares of HUL. Wants to know, and also Nestle, by the way, wants to know if he can continue to hold this considering the monsoon is below expectations. Narendra, your view on this one?
Yeah, good afternoon, Mahima. Yes, see, we have a very long-term and constructive view on the sector. But having said that, there are two things you need to watch. One is the inflation numbers. In latest quarter results, what we have seen is that there has been some gradual volume recovery, but it is on a case-by-case basis, and it is patchy across the sector. So some companies are showing good numbers while others are struggling. Plus, there has been some pass-on of the rising costs of raw materials, but it's not a complete pass-on. So again, we have to see how different companies strategize on that. Now, coming to the monsoon, right now, whatever we have seen on the reports front, the monsoon is already delayed and are expected to be below normal. And let's wait for another week. I think we are hearing that by 20th, the monsoon would be kicking in. So that would be a key important trigger to track in terms of for forecasting the recovery in terms of volume. So I think on short term there may be some volatility in the sector because of these concerns. But yeah, if the person has a horizon of 1 year or more, then I think the sector is valued decently. And if the recovery comes, then the overall growth would be coming back to the sector.
Okay, so that's the view on FMCG. One more query on an FMCG name itself, Kunal. Mrs. Bector's Food. Krishna from Bengaluru wants a medium-term view on this one. What are the charts indicating?
Yeah, I think definitely Vector Food has witnessed some good correction and now it is showing some exhaustion at the lower levels. So from a short-term to medium-term perspective, continue to hold it. One can keep a stop loss of 173 on the downside and look for targets of 205 on the upside.
Okay, all right. The next one that we have is on HCL Tech. Priyanka Asher from Mumbai is holding 365 shares, bought at the levels of 1355. Wants to know from a long-term perspective, is this a good bet? Narendra, considering the Servam AI acquisition that they've made, we've seen an uptick of 2.5% on the counter and it's upheld that throughout the day per se. But how are you viewing this acquisition and is it a good hold?
Yes, definitely. It's a very good move, and it shows the confidence of the company in terms of investing in an AI company. And this is the first larger company when we are seeing some investment happening in the AI, although a bit late. But yeah, definitely a positive sign. Positive sign, and it also shows the optimism of the management in terms of taking on hands-on approach on the investments front, and along and in the sector also, what you see, there has been very low R&D investments happening in the Indian tech sector. So I think this shows the tide is turning, and it is sentimentally very positive for overall sector and for the stock. So we have a positive view on the stock as well, and we have a buy rating on this.
Got it. Okay, so that's the view coming in on HCL Tech. The next one that we have is on Vatek Vobak, 200 shares, bought at the level of 1170. This is Harijit from Mohali. He says that he's sitting on profits. The current market price, let's try to pull that up, 1765, up 8% today. Kunal, should he book profits, continue to hold? What are the charts indicating?
I think definitely continue to hold from here. Say 1700 was the earlier swing high resistance that has been taken out, and on the monthly charts also we might see the fresh highs coming in. So overall it can go towards the mark of 2000, 2100 in the very short term.
It's time for a rapid fire round. Narendra and Kunal, try to keep your answers as short as possible. The first one that we have is on L&T. Our viewer has been holding since the price levels of 2100. Kohinoor Ghosh wants to know whether he can continue to hold this for a year or so. Narendra?
Again, right now we do not have any active coverage, but looking at the overall sector, we have a very positive view. So the person can hold.
Okay, GMDC 125 shares is what Pramod from Bengaluru has bought at the levels of 635. From a slightly long-term perspective, what are the charts indicating, Kunal?
Hold with a stop loss of 585 on the downside.
Okay, Dixon 12 shares bought at the levels of 12,150. Can I continue to hold this from a long-term perspective? Dilip from Kolkata is asking this. Narendra?
Yes.
The next one is on United Spirits. What's the 12-month target for this one? Our viewer Gautam from USA is holding 1,600 shares bought at the levels of 1,007. Kunal?
Continue to hold, can go towards 1,400.
Okay. The next one that we have is on Wockhardt Pharma. Parag from Mumbai has bought 25 shares at the levels of 803. From a short-term perspective, is this a good hold, Kunal?
Yeah, hold with a stop loss of 1782 on the downside.
Okay, the next one that we have is on NTPC. From a 6 months view, is this the right time to enter, Kunal?
Yeah, definitely. One can enter at the current level.
Vari Energies, from a slightly long-term perspective, is this a good bet for a long-term perspective? Dipti from Chennai wants to know. Narendra?
Yes, definitely.
The next one is on Hitachi. Our viewer wants to know from a slightly short-term perspective of 6 to 8 months if this is a good hold. Hitachi Energy, Kunal, is what our viewer is talking about. Mahalakshmi from Hyderabad. Your view on the charts?
Yeah, I think overall we have seen a very good run-up into the stock. If it breaks 36,000 on the upside, then probably one can go on the long side.
Okay, the next one that we have is on metal counters. If this is the right time to enter 50k into metal counters, would you recommend that, Narendra, considering we've already seen such a good run-up?
Is it about sector or stock?
Metal counters, any metal counters.
Yes, definitely. Metals, we are very positive on, especially we are positive on non-ferrous metals like aluminum and copper. So our client can invest in the stocks within these sectors. We are positive on Hindalco in terms of aluminum.
Got it. Okay, so that brings us to the end of this first rapid fire round. Time to slip into a very short break, but don't go anywhere. We'll be taking more queries on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors. Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome back. You're watching Ask Profit. It's time for our second rapid fire round. Kunal and Narendra, you both know the drill. The first one is from Anuj, who's writing us from Delhi. Sirma STS Polycab, where is the charts looking more attractive, Kunal?
I think from the current levels, both are not looking attractive. The risk to reward ratio is not favorable.
Okay, NetWeb or MTAR Tech, any of these that you like on the charts?
NetWeb looks good. One can go long from the current levels for 3 to 4% upside.
Okay, the next one is on Reliance. 250 shares is what our viewer has bought from a long-term perspective. A good hold, Narendra?
Again, not in coverage or neither in active recommendation.
Okay, the next one is on Varun Beverages. Bought at the levels of 453 from a long-term perspective. Continue to hold, book profits. What would you recommend, Narendra?
Can continue to hold.
Okay, the next one that we have is on IRFC. Our viewers bought it at the levels of 132. 1950 shares is what Tushar from Bengaluru is holding. Continue to hold, Kunal?
Exit on bounce.
Okay, Ola Electric, 500 shares bought at the levels of 63. Book loss, continue to hold, Narendra?
Again, no coverage on the stock.
Okay, the next one that we have is coming in on Procter & Gamble Health and Hygiene. From a slightly short-term perspective, is this a good hold, Kunal?
Yeah, continue to hold.
Okay, the next one is on Kalyan Jewellers. 200 shares bought at the levels of 402. From a 3 to 6 months time frame, what are the charts indicating, Kunal?
I think already the stock has witnessed a sharp correction, so there could be a pullback towards 440 on the upside.
Okay, Titagad. Aniket from Karnataka wants to know if this is a good buy at the current levels. Narendra?
Yeah, no coverage on the stock, but we really like the sector. So based on the sector, you can take a call.
Okay, the next one is on MMTC. A good buy for the next 12 months. Venkatamani from Bengaluru wants to know. Kunal?
See, MMTC has also witnessed a good run-up, so continue to hold.
Okay, the next one that we have is on BEL. 10,000 shares bought at the levels of 453. Rao from Vijayawada wants a 6 months view on this one. He is sitting on heavy losses. What is your recommendation, Kunal?
See, BEL, I think one defense stock which you continue to hold. If he has a short-term view from here, If it closes below 395, then exit your long.
Is this a correct time to buy PG Electroplast from a long-term perspective? Chandrasekhar from Hyderabad wants to know. Narendra?
Yes, can buy, but the investment horizon should be at least more than a year.
Okay, Newland Laboratories, is this a good time to buy at the current market price from a short-term perspective? DGK Raju from Vijayawada is asking this. Kunal?
No.
Okay, the next. All right. Okay, the next one that we have is on Gujarat Gas. Sarvir Madhava has bought it at the levels of 415. 100 shares is what he's holding. Continue to hold. Average, Narendra?
No coverage on this stock.
Okay, ITC is the other one from a long-term perspective. Is this a good time to enter, Narendra?
Yes, definitely can enter, but as we just have talked about the FMCG sector, it may take a quarter or two for the sector to show performance.
Got it. Okay. With that, we are completely out of time on this edition of Ask Profit. Kunal and Narendra, thank you so much for taking out the time and helping us answer all those queries. But viewer, it's time to slip into a very short break, but don't go anywhere. We'll be back with India Market Close on the other side of the break.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. He has been tracking markets for over a decade, spots the trends, before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia, and it's a decent picture, at least for the benchmark Nifty 50. What you're seeing on the screen, of course, is the intraday chart for the Nifty 50. We're at the high point of the day, and keep a close eye on the level, because 23,990, we're testing that 24,000 resistance. We're yet to break past that and hold. The next 1 hour is going to be absolutely critical here.
Absolutely, and that's where the concerning area is right now. If we close above 24,000 levels, then yes, there is some positivity, but otherwise that consolidation phase, it seems, will continue, because this is where you're seeing that highest amount of resistance which is coming in at 24,000, right? What is interesting is with regards to banks, if you pull up Bank Nifty and if you have to compare the PSU space versus the private banking space, in the last 1 month, it's the private banks which are playing a catch-up, because in the morning when I saw 23% is the kind of returns that you've seen in terms of PSU banks versus negligible returns in terms of private banks as well. And that's where the catch-up is probably. The other thing what is interesting is the contributors. Look at the contributors, Alex, today.
Before we do, let's pull up the heat map for the Nifty 50, because 29 odd stocks in the green, or 30 stocks in the green right now. And in fact, those contributors that Hiral was just referring to will be evident in just a bit, because look at this, right? Reliance Industries with gains of about 2% or so. In the second line somewhere, you will see HDFC Bank. There you go.
Little over
1% or so. So these two.
Infosys around 0.7%. So good contributors.
Very good contributors. At the bottom of the screen, you'll see Hindalco right at the bottom, and that's the metal pack as a whole. And we'll talk about that in some more detail.
And you have JSW Steel, Tata Steel, that entire metal pack which is seeing profit booking today. The other thing is you have Indigo, which was seeing gains over the last couple of days. That stock has come off as well. Likewise, with regards to Tata Motors PV, they did come out with their annual report where they've cited a couple of concerns in terms of margin pressure on the back of the Chinese market, and that's the reason why that stock is down 0.7 to 0.8%.
But here, State Bank of India in the public sector banking space, what Hiral was just referring to, that's evident for the Nifty 50 as well, where you're seeing a pretty heavy name on the benchmark causing a little bit of a down downer, but pull up the contributors chart that Hiral was just referring to, and you will see HDFC Bank and Reliance Industries right on top. Bajaj Finance has actually made quite the run from Friday onwards.
Bajaj Finance and Finserv, both of them, 5 to 7% is the kind of up move that you've seen on both these counters over the last 5 to 7 trading sessions. But categorically, metal space here on the downtake, SBI from the PSU banking space. HUL is also somewhere in the limelight. It's interesting to see a Reliance Industries player catch up in today's session. 35-40 points is the kind of contribution coming in there. Broader markets, you know, that's why you're not seeing that kind of action today. I think that it's trying to come up. But if you see from the day's highest levels, quite a bit of a downtick coming in there. And that mild recovery that we are seeing, 0.3% here.
For the small cap index as
Likewise, I mean, in fact, the recovery in the small cap index is much lower. Let's look at the advanced decline ratio, because that was somewhere pleasing when we started off the trading session today. And there you go. I mean, it's kind of become even Stevens from where we started off.
Yeah, certainly. And the other factor that I do want to highlight is the VIX, because over the course of the last couple of days, you've seen a cool off. And today in particular, you've seen a significant drop in the volatility. We're now trading at 13.4.
This is very encouraging. You know, any levels below the level of 15 in terms of VIX is telling you that the cautiousness in terms of markets is just going away. So the sentiment, as everyone has been talking about, is very positive right now in terms of markets. The only thing that is missing is action.
Yeah, and lastly, just pull up the sectoral indices, because I want to see what's leading the screen right now. You have realty, which a lot of people are calling the barometer for sentiment in the equity markets. Whenever the equity markets do well, you will generally see this cohort of stocks do well as well. IT on the back of HCL Tech, and there's quite a bit to talk about with regard to HCL Tech and the Sarvam AI fundraise, and that is leading the market higher as well. But oil and gas through Reliance Industries and a couple of other sectors doing okay. Metal at the bottom of the pack, and healthcare and pharma, a second day in a row where you're seeing underperformance.
If you look at the sectors, the ones, Alex, which actually did see a run up in those last 2 to 3 months during the times of war, are the ones which are seeing profit booking. So it seems that people are actually just trying to take money off the table and now trying to find opportunities at lower levels where they can invest in. Because see, look at defense. That was one of the sectors which did see a good run up. Auto, pharma, PSU banks, and the metal pack. So it's an interesting I would say circle that we are seeing right now.
Yeah, you want to put everything in context and then we'll jump in.
Let's look at that. I mean, third consecutive session of gains is what you're looking at in terms of Nifty 50. And this is ahead of the weekly expiry. And as Alex and I were mentioning, 24,000 does remain the crucial hurdle that we want markets to cross. Gains largely led by Reliance Industries, HDFC Bank, and you have the metal index, which has been losing the most owing to weakness in aluminium names specifically, and you have the steel companies also, which are adding to that kind of pressure. Wix, again, declined to the lowest level since February 2026, so this is one of the positives. And now a decisive close about 24,000 or 24,100. That is something that we will be eyeing, because that could probably trigger a move towards 24,300 to 24,500. The strategy that people are preferring right now is buy on dips. So at lower levels, you're seeing that buying interest which is coming in, as long as the key support levels are holding up. Talking about Bank Nifty, yes, it is consolidating. However, the PSU banks weighing are the ones which are weighing on the index. And you're talking about that immediate support, which is resting at 57,110. And the base is seen near 56,950. A clean clearance about 57,450 will then open the path directly towards 57,638 and 58,000. But for that to happen, you will really need the private sector banks to participate, because that's the space which has been lagging, and it's mainly the PSU banking space which has seen a run up. Even if you have to look at the last 1 month, your private banks have tried to play a catch up in the last 1 month if you have to look at the private bank chart as well. So that's what we're looking at, Alex, overall.
This is significant, right? It has to do with Dixon, and we've got exclusive information coming through with regard to the Dixon Vivo joint venture. There is an update that has come through from the Interministerial Committee that was looking at this proposal. And let's go straight across to our bureau chief in New Delhi, Shrimi, who's picked up this exclusive information, joining us on the phone line to tell us about this. Shrimi, significant update here. Tell us about it.
Absolutely, Alex. As government is likely to approve the proposed joint venture between Dixon Technology and Chinese smartphone maker Vivo, and this is according to sources familiar with the matter. An interministerial committee which comprises of METI official, Ministry of Home Affairs and other concerned stakeholders is understood to back the proposal at a meeting held on Saturday. And in fact, the recommendation has gone, which will now move through the prescribed regulatory process before a final approval is granted. But that is more of a procedural. The nod has already been given during the Saturday meeting of this, during the interministerial meeting. So do note the fact that the approval process has taken a longer than expected, partially due to the regulatory scrutiny around the Vivo India. And company has been under investigation by the Enforcement Directorate over alleged violation of foreign exchange and anti-money laundering regulations. And Vivo has been denying the wrongdoing and said that they are cooperating with the authorities. But this development is significant for Dixon because they have been talking about it and previously also indicated that Vivo partnership could add 20 to 22 million smartphone units annually over time and materially enhance its manufacturing scale. So big development. However, we reached out to Dixon for the official comment, but they declined to comment on the latest development.
Yeah, absolutely. Shrimi, thanks so much for joining in and giving us those exclusive details. Pull up the intraday chart for Dixon, and it is now trading with gains of about 0.8%. And you can clearly see the spike after the information came to light. There's a spike that is ongoing right now. So let's get in our experts. We've got Akshay P. Bhagwat, who is with JM Financial, as well as Sunny Agarwal of SBI Cap Securities. Sunny, I'll come to you first. A significant development from the perspective of Dixon Tech, because this has been in the works for some time. And if it does come through, as Dixon has pointed to earlier, it could lead to the addition of 20 to 22 million units annually over a period of time. How do you rate this?
Good afternoon, everyone. Good afternoon, Alex. I think definitely a big development for Dixon. So we all know that for FY27, the company has guided for a flat volume growth as far as mobile count is concerned, and 10 to 12% kind of value growth purely driven by increasing ASP on the back of recent rise in the memory prices. So JV with approval of JV with Vivo will definitely add a big kicker in terms of volume growth for Dixon, and that should lead to a re-rating. Anyway, in the second half, we will see that camera module, or for that matter, display module, will start going on stream, and that should be again a big kicker in terms of margin going forward. To some extent, FY27, we will see 50 to 60 bips impact because of the drying down of PLI benefit. However, FY28 may again see a margin recovery. So again, because of this approval, maybe second half of FY27 seems to be better place in terms of volume growth on mobile front, and then FY28, because of the backward integration, again margins should expand. So obviously a big development for Dixon in case this approval goes through.
Call though, if you look at the EMS space and you look at the players involved, Sunny, then apart from a Syrma SGS, there has been a relative underperformance. Is this the springboard that Dixon would need to once again recoup some of those losses and reach those heady levels that it saw earlier? And what is the call on Dixon?
Yeah, definitely. I think as of now, assuming that Vivo approval is not in place, Dixon is trading closer to its fair value, 12,500. But in case there is an Vivo approval and FY27, in case they are able to capture some volume during FY27, I feel maybe 10-15% kind of earning upgrade can be seen as far as Dixon is concerned. And commenting about other EMS players, obviously Syrma SGS has been a strong outperformer, and rest of the individual companies had their individual issues. Like Keynes didn't deliver on the cash flow side. Amber, we have seen some margin pressure because of escalation on the raw material side. But again, I feel EMS as a space is well placed structurally from a long-term perspective, as this entire sector continue to grow at north of 20-25%. And within this space, obviously, Syrma continue to remain the top pick, followed by a number where we feel fourth quarter was one of the blip in terms of margin pressure, but long-term outlook continue to remain robust as far as number is concerned.
Okay, So that's an interesting take coming in there. Probably a re-rating candidate that could be on the cards. Akshay, good afternoon. Hiral here. If I have to look at the charts as well, in the last 6 months, that stock is down nearly 11 to 12%. However, from March lows, it's trying to play some bit of a catch-up. Basis the news that has come in and what charts are telling you, do you think there could be further momentum here, or are you seeing further weakness?
First of all, good afternoon to all. So for the stock Sirma SGS, that's what you mentioned.
No,
the
Dixon
stock,
Tech. Dixon Tech is what we are talking about.
All right. So Dixon Tech, I think, is just trying to digest the news as it has come, but all is good till it trades above 11,800. That's an important level you need to mark if you're trading for today or for tomorrow. Probably if today's closing is about 12,000, then you can look forward for targets till 12,400 or 12,500 from a momentum perspective. So continue your buy positions with strict stop losses below 11,800.
Okay. All right. Gentlemen, it's now time to look at our stock of the day. And it is one of the top gainers on the Nifty 50, gaining about 2.5%. Pull up HCL Tech, because that's the big news item of the day as well. The Nifty 50 back above 24,000 or very close to that mark. So keep one eye on the benchmark Nifty 50 as well. HCL Tech, by the way, trading with gains of about 3.4% at this point, at the high point of the day. And this is after the company has led the funding round for Sarvam AI, India's premier sovereign AI offering. Let's go across to Jasmeet to understand from HCL Tech's perspective why this is possibly a pretty strategic move that could lead to tailwinds down the line. Jasmeet?
Well, Alex, thank you for that. As rightly said, this is something which will be in focus on the back of how it will have an impact, cross impact on HCL Tech. Well, just to give you a brief about overall IT pack, they have been acquiring a lot of AI companies on the back to win that AI race and to fill the gap in wherever they lack. Now, this is an interesting one, given that HCL Tech is the first one to invest in Indian AI company, that is a sovereign LLM model itself, which is in focus, and that's why the stock is gaining about 3-odd%. Let's quickly understand the details of the particular acquisition. While HCL Tech leads the overall strategic investment round for Sarvam AI and invests nearly $150 million. That roughly forms 1,400 odd crores and increases its stake to 10-odd% in this particular entity. Now, when you look at the overall valuation of this particular counter, post-money, the valuation for Sarvam AI goes over $1 billion. It's at $1.5 billion. What's interesting to mark here is the overall valuation. The valuation that the company is paying for this particular acquisition of 10-odd% is roughly at 315 times for the FY26 revenue, which stands at roughly 45 odd crores. So there is a risk for this particular acquisition, but it's something to watch out of how does the overall top line patch out going ahead. While if you look at the overall funding, why this has been made, the Sarvam AI will be using the particular funding to accelerate its research and development and to invest further into the models and make it better. Now, how will this help overall HCL Tech? That's something which will be a key focus. Starting with the first point, we have seen the investment will be funding research and development, what HCL Tech is investing. But for HCL Tech, this particular investment will lead to overall development of AI models. Further, it will also help company to gain more order in terms of the government and regulatory. It will also develop industry-specific languages, given Sarvam AI has a lot of language LLM tools which will be used by HCL Tech to make those accessible to the global clients. Further, to accelerate the sovereign AI for government and regulatory bodies. Let's quickly understand what are brokerages telling about the same. While we see the brokerages have been divided, but still positive and bullish about this particular acquisition. While we have Morgan Stanley, which maintains equity on particular counter with target price of rupees 1410. Now, they said the overall investment in sovereign AI may provide a strategic advantage for the company, given they're first moving into this overall LLM space. Further, they also make a note that this may offer sovereign AI edge with government and regulatory firms, which will be a key advantage for the company going ahead, and we might see few government order wins for the company as well. Now, when we look at the other key aspect, we also make a note that with the minority stake, it's still the impact on this particular entity becomes limited, given though Sarvam AI becomes a big tomorrow, but still HCL Tech just holds 11% stake, which will be a key focus. Further, the current investment could turn obsolete also, given if the overall top line doesn't become the FY24, Sarvam AI had zero revenue. Then in FY26, they marked the first revenue of 45 odd crores. So the risk of obsolete becomes a key concern to watch out for. While I also have other brokers note Nomura on this particular counter, which maintained by with a target price of rupees 600 odd rupees. They say this is first of its kind acquisition and quite unusual than what we have seen earlier. While they also make a note that this will leverage and expand Sarvam's multilingual AI capabilities, which the Sarvam is known for. Further, when we look at the key valuations, HCL Tech currently trading at 5-year low valuations, this particular counter, though we did see that the overall Q4 was strong for the company. Now, when you look at the overall buy call, the company has 15 buy rating, that's roughly 33%. Even the brokers in terms of the buy rating are divided, where we have 15 buys and rest are sell and hold calls. If you look at the return potential of this particular counter is 24%, while this comes in after the up moves of today's trade. Now, it's a wait and watch of how does the overall AI equation pans out going right for this particular counter.
Okay, thank you, Jasmeet, for that, and that stock is almost at the day's highest levels. Sunny, how are you looking at a HCL Tech in terms of the acquisition that they have made in terms of Sarvam AI? I mean, do you think there are tailwinds for a HCL Tech over here? Because a lot depends on how Sarvam AI actually performs and delivers overall.
Definitely, I can link this to a similar investment which Info Edge did in 2011-12 in Eternal, when nobody used to talk about food delivery and quick commerce, and now 10-15 years down the line, that has created humongous wealth for Info Edge. Obviously, a small bet from an HCL Tech perspective in terms of LLM or SLM model of AI is concerned. But I'm sure definitely they would have some option to increase the stake in case there is an success which they see in terms of monetization of Sarvam AI as a platform. So I think it's a long-term bet. Let's see whether it turns out to be a good investment for HCL Tech. But definitely it's a strong indication that now even traditional IT services company are seriously thinking about diversification of revenue and are willing to bet on AI-related business model. And just to remind you, HCL Tech was the first company to start reporting separately AI-related revenue and its opportunities going forward. So I think definitely positive in long term. Anyway, valuations have also turned comfortable post recent correction in IT stocks. So it's a long-term bet for HCL Tech, and hope that FY28 will be a better year in terms of growth, as we all know that FY27 HCL Tech has guided for 1 to 4% kind of growth, which is slightly on a muted side looking at a current valuation.
I do want to point out once again, before we get to the conversation on metal, the impact on Dixon Tech, because the market looking very closely at this deal. Srimi, our Delhi bureau chief, bringing you exclusive information. If you're tuning in for the first time right now, you probably missed it. So take a look at that, right? Some of those lines at the bottom of the screen. The government likely to approve the Dixon Tech Vivo joint venture. This was in the works for some time. It has a significant bearing on the revenues and the potential for business for Dixon in FY27. Most importantly, Dixon had said that the Vivo JV could add as much as 20 to 22 million units annually over a period of time. And this is something that the government was reviewing over a period of time because of issues that had been highlighted for Vivo, but that has come back to the table right now.
And even if you look at the revenue contribution, you're talking about a large chunk
increase
that could be coming in from this JV as well for the likes of a Dixon. And volume growth is what you've already mentioned. And they've said that if approved, the partnership could actually boost Dixon's growth by almost 45 to 50%. Versus the current 15 to 17% that we are seeing for a Dixon. And this is organic growth that we're talking about without it. So 15 to 17% is the organic growth when it comes to Dixon Technologies. And this JV could boost it by 45 to 50%. So that's the numbers that we're talking about. And that's the exact reason why you're seeing this kind of a surge that's coming in terms of the stock price as well at the day's highest levels. I mean, I think there is no stopping right now. 2.7% up move coming in on a Dixon Technologies. And an interesting story.
Which is quite significant. So if you consider, of course, it's a liquid counter, but it's not the easiest to trade as well, right? It's 12,300 rupees a pop. So considerable volume spike as well in this particular counter, gaining as much as 2.7%. Now, on the other end of the spectrum, though, Hiral, stocks that are not doing particularly well in trade today, and those are the aluminium pack, right? And you have Hindalco, that's the worst performer on the benchmark Nifty 50, and you have Nalco that's underperforming as well, even more so, down about 4.3%. This has to do with the move in the underlying commodity, aluminium prices cracking overnight. We will speak very shortly on what the implications are for these companies. But before we do, let's give you some context. And Parth's joining in to tell you about what the performance has been over a 3-month period, not just right now. So what are the trends that you're seeing?
Absolutely. So it's very surprising, first of all, that broader market has done well, but today the aluminium stocks are in pressure. If we talk about the stock performance, then Hindalco has fallen 3.5% today, while Nalco has fallen over 4.5%. both of these counters have corrected over 15% in June. So this is not just a one-day thing. It has been going on in the last 10 to 15 days as well. If you have a look at the reason, then the main reason behind it is the crash in LME prices, aluminium prices. Overnight, these prices dropped by 4.4% to settle at $3,379 per ton. This is the lowest level that they have seen since March 27. Also, the prices have cracked nearly 10% since the start of this month. So this is the main reason why these aluminium stocks are in pressure today. If you have a look at the reason why these aluminium prices have corrected as well, then the main reason comes out to be the US and Iran conflict that has almost come to an end right now. Trump has said that they will be beginning a toll-free transit throughout the Strait of Hormuz. So that is going to ease the supply bottleneck that we saw previously in raw material prices, and this is the key trigger why aluminium prices have fallen down. Also, the weak macroeconomic data that we have seen from China's side, China being the largest consumer of aluminium, this is putting a pressure on the prices as well. Not just that, even the dollar that has stabilized, because majority of the metal trades happen in dollar terms, and when traders are buying from other currencies, they feel a lot of pressure when dollar remains strong. So that is also another reason which is causing the aluminium prices to fall down. Coming to the impact on Hindalco and Nalco, both of these stocks are very sensitive to the global LME aluminium prices. This is because when aluminium prices come down, it results in a direct revenue loss per ton for both of these companies. Comparatively, Nalco is the one that is hit even worse, because they are a direct upstream play in the aluminium business, while Hindalco gets a little bit offset. Hindalco is able to offset its losses a bit due to the Novelis exposure which they have. Lastly, moving on to the analyst recommendations, around 11 analysts have a buy rating on Hindalco with a return potential of 16.8%, while 3 analysts have a buy rating on Nalco with a return potential of 13.2%. Valuation side as well, Hindalco trades at a premium to its 5-year EV by EBITDA, with Hindalco's EV by EBITDA 5 years standing at 6.05 times versus current of 6.54 times. And in terms of Nalco, we saw current EV by EBITDA at 7.35 times versus 5-year average of 6.14. So a premium is what we are seeing in both of these counters.
Yeah, I mean, valuations are expensive, but there is further upside that remains from what analysts make out of it. Thank you for that. Rakesh Arora joining in as well. Rakesh, good afternoon and welcome to the show, and thank you for being patiently waiting. We did have a breaking news in terms of Dixon JV being approved, and hence we had to keep you on wait. This is Hiralia. My question to you is, with what's happening across aluminium companies, 2 aspects. A 10% correction is what we've seen in terms of where LME prices go. And to add to that, if you have to look at aluminium as a space, there is a structural deficit where everyone is looking at another 2 years where the deficit could go on. Taking these 2 aspects into consideration, how are you seeing the aluminium prices move from here on, and the impact that could come in terms of companies like a Hindalco, Nalco, Vedanta?
Okay. So good afternoon. There were 3 factors which were leading to rally in aluminum prices. First, obviously, is what you mentioned. There was low inventory into the system, and there was deficit globally. Number 2 was, there was a demand tailwind from the AI-led, construction of data centers, etc., which are, kept base metal intensive. And number 3 was, the Iran and US war, which disrupted a lot of capacity in Middle East. Now, the third overhang is gone. The Iran and US war is history, and market is adjusting to that. Number 2, AI, there are certain questions being raised, and maybe that AI investment went way beyond much faster than what people would have expected, and maybe there's a little bit of slowdown there. And number 3 is the demand supply. There was low inventories, but now as I see, we are expecting large capacities coming up in Indonesia, And also, China has been producing at full throttle at their 45 million ton ceiling, which they put in 2017. And inventories are running up because China's economy is, kind of slowing down. So the inventory in China has reached more than 1.3 million ton of aluminium. So all these three things are pointing to that we have hit a ceiling on aluminum price. What is the fair price? According to me, it is around $26 to $2,700. So yes, it has corrected around 10%, but commodities can swing 30-40%, and so there's still a lot of downside to aluminum prices.
Yes, I understand you're talking about $2,800 per ton. I was just reading a couple of analyst reports where an average, what I'm looking at, is $3,200 to $3,000 per ton over the next 2 years is what they are baking in. There is a major differential coming in there. Do you see prices bouncing back to those levels then?
So, very short term, it's difficult to forecast. But second half of 2026, we are seeing almost 0.8 million ton of new capacity in Indonesia, and that would put a lot of pressure. Another dynamic that you need to see is that when you look at the raw material for them, which is alumina, those prices crashed from $800 to $300 a few months back, and now refusing to go up from there. So the cost pressure is hardly anything from the raw material side. There was some cost pressure from the energy side, which is also receding. So I don't see we will revisit the highs of aluminum of 3,500, 3,600. Analysts do tend to follow the stock price, and they have been increasing their assumption of aluminum, prices to $3,200. But any, global research house would have long-term forecast of around 2,700 only for aluminum. So, these analysts will follow the price back downwards also.
Rakesh, hi, Alex here. I'm going to slip in one more question. And from the macro side, right, generally you would say, and traditional wisdom tells you, that a steepening rate in the US, which is expected to take place, if not in the next 6 months, then over the course of the next 1 to 1.5 years, would lead to a stronger dollar, and eventually commodity prices will be curtailed. Would you hold with that traditional wisdom, or are the demand supply dynamics with this whole AI infrastructure going to lead to a different experience?
No, I think there's no shortage of aluminium globally, and there are a lot of capacities coming up. So I don't think the conventional theory of a stronger dollar and weaker commodity is going to get disrupted anytime soon. So that is bound to actually play out. So I'm with you on that.
Finally, how would you play, if at all, the metal space? What is your preference in pecking order?
So, the stocks have just started correcting, meaning like yesterday I was discussing on another channel about Vedanta Aluminium. The fair price that we thought was 432. Even after correcting 10% in last 2 days, it's still way beyond that. So, and the beer valuation is like way below that. So we are far away from, this correction. So I would suggest investors to, use any rebounds to really, exit and get into sectors which are looking much more attractive.
And what would those be? What would those be in your opinion?
So you have been talking about IT. IT is a tactical buy. Then there are, private banks which are looking, extremely cheap. So one half of the market is not really working, and maybe it is time for those stocks to come back.
Those are interesting names that you're talking about, because IT has a very divided view, Rakesh. But it'll be interesting to have a discussion with you on IT now that you're talking about it. But we will again connect with you on a later date to discuss IT as a sector as well. But thank you so much. Always helpful to take your views. So book profits in terms of metal names where you can. That's the word coming in from Rakesh Arora. We'll quickly slip into a short break. On the other side, we'll get you top buy today and sell tomorrow picks as well. Please stay tuned to NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of real.
Welcome back. You're watching India Market Close, and it's turning out to be an action-packed one. Not just because the equity markets are buzzing and you have the Nifty 50 very close to that 24,000 mark, but what you can see on the screen to my left, which is Brent crude, which has cooled off even further, down about 2% right now, and heading towards that $81 per barrel mark. It's a significant update. And just a couple of weeks back, Hiral, we were trading around the $100 per barrel mark, and the spot crude and physical market crude was actually higher than that point. So from India's perspective and the balance of payments perspective, it's actually a very significant update. And of course, this is something to watch from the perspective of the rupee as well. So pull up the rupee. It has moved further. It has appreciated just a tad bit. 0.6 or thereabouts. So pull up, 94.57. Yeah. It's moved further towards that 94 mark. Not too long back was at 97. So it's already moved a significant amount.
And you will have the OMCs which continue to remain in focus. So, I mean, HPCL, BPCL, IOC. What is interesting is that in spite of crude cooling off right now, you're seeing a ONGC which is buzzing in trade as well. You pull up a ONGC on the screens and you'll see the kind of gains that are coming in. That stock is at the day's highest levels, 2% up move coming in. And obviously the marketing margins in terms of OMCs, as Somit has been pointing out since 2 days, that they would be improving from here on. So interesting moves coming in there. But I think one story that we should not be missing out right now is with regards to Dixon. We'll come back to that. Just a quick address in terms of Meesho as well. 2.4 crore shares. 3 block deals have happened on this one. Sellers are not to be known, neither the buyers. And that stock not seeing major moves, but 0.9% lower. It did see that sharp spike coming in there on the, sharp dip coming in there on the back of the block deal that has happened. But that's a large one. 2.4 crore shares is what you're talking about. But moving on. Dixon Technologies, that's the story of the day, where, you know, the JV is something in terms of Vivo is getting its regulatory approvals. That is on the cards, and this is what my colleague Shrimi is picking up from her sources, the stock at the day's highest levels. Renu Bed Pugalia, Senior Vice President at IIFL Capital, joins in. Renu, good afternoon and welcome. This is Hiral on this side. You know, we're talking about Dixon Vivo JV, where a lot of hurdles that I'm assuming they have had to cross to reach this stage. This is not final, but this is what sources are indicating. Once they get the final approval, what would this actually mean for Dixon Technologies? Because the stock is spiked. If you could help us understand in terms of volumes, in terms of revenue contribution, and whether the stock could see a re-rating.
Sure. Thank you. So Vivo JV has been in pipeline and has been talked for almost now 9 months. From business perspective, management had earlier indicated that once the government approval is there in place, within 2 to 3 months, the JV would be operationally rolling out business volumes. So management had guided for close to 33 million units, which is flat smartphone volumes for fiscal 27. And if we have the JV approval coming in, assuming by second half we kickstart the business volumes, that should easily add up between 5 to 10 million units to annual smartphone volumes for them between second half of this year. So clearly smartphone business, which was looking flattish to marginal decline for them for the current fiscal year, will see growth. And more so by fiscal 28 for a full calendar year, we see them achieving close to the 55-60 million handset mark, which they were targeting along with the Vivo JV numbers coming in there.
The implications, Renu, and good afternoon, this is Alex here, for the financials then, because you would have built in your estimates based on that flattish mobile handset volume, right? So that 5 to 6 million addition would have an implication, and more so for FY28. So what are you building in?
So for 27, we had already built in about 4.5-5 million units. So I think most analysts and investors will have some base numbers already in their assumptions. For fiscal 28, we had factored in just about 12 million units from here. So if we see the full volume ramp up, that would drive an incremental upside for the business. But more so, I think from a sentiment perspective, as in when we see the announcement, this will at least address a long-term overhang on the stock, overhang which has been there now for almost 3 quarters. So there will be better visibility and clarity on the business volumes and the market share that we're looking up for Dixon.
Renu, I would want your call as well in terms of what is your rating on the counter and your target price, because this morning itself you had a CLSA note which did come in and they had downgraded the stock to an underperform from a hold, and what they were indicating is that the positives in terms of Dixon are already priced in. High memory prices is something that they were seeing as a negative. Delay in backward integration is something they looked at it as a negative, and they were expecting growth to decelerate in the medium term. And they said that the risk reward was unfavorable for a Dixon. To counter that, how are you looking at, what's your call on the counter?
So we have an ad recommendation on the stock. Our target price is actually nearing the current CMP itself. But if the JV approval comes through, then I think we will have a positive tail impact on the numbers. With regards to other developments, it is broadly memory prices have been up for almost now 15 to 18 months. So this has already been baked in the numbers, forecast and the stock price. I would say market also has been expecting, at least for the last couple of weeks, announcements and progress on the JV side. So formal announcements may actually see some profit booking from investors also who are looking from a shorter term perspective. But from a medium term growth perspective, I think once given the oil price have also started to stabilize, plastics and input cost over the next 2 quarters will start to taper off. So to that extent, the margin headwinds will ease. Backward integration benefits from mobile PLI ECMS scheme should start flowing in from the 4th quarter of the year. So I would say the negatives or the concerns have already been known and there in the market for some time. Yes, the near-term 1st quarter, probably 2nd quarter also would be weak. But thereafter, we expect performance to improve. So, which is where we have an ad recommendation on the stock.
You have an ad recommendation on the stock. All right, Renu, thanks so much for joining us for that quick perspective. Pleasure speaking with you as always.
Sure, thank you.
All right, let's cut across straight to Donald Trump, President of the United States, speaking at the G7 meet. Listen in.
Almost $19.1, $19.2 trillion invested in the United States. The record was 10 years ago from another country when it was hot. But we have the hottest country in the world right now. But Qatar's been a great investor. We really rekindled ourselves when I met with you last year, a year ago, probably 13, 14 months. That was a good trip. And
it was May.
So
May, last May, I think.
Yeah,
I mean, a year. Yeah.
That was a great trip, and we established. We've been friends for a long time. We've known each other for a long time, but Qatar is investing tremendous amounts of money in our country, and we appreciate that. Our country is we're building more factories, AI. We're leading AI by a lot. We're building automobile factories. We're building more than we've ever built in the history of our country. No country is ever doing what we're doing right now. No country has ever been able to do. And those factories will be opening over the next year and a half. Some are already open very soon. The pharmaceutical companies are coming back. The car companies are coming back from Germany, from Japan, from so many other places, Mexico and Canada. They're all coming back. We lost them foolishly years ago because we had presidents that didn't really know what they were doing. They should have never lost them. But they're all coming back in beautiful, brand new, gleaming factories. In fact, there are a couple of big old plants. And I said, are you going to use that plant? And they said, no, we're building brand new. They're knocking it down. Everything's built brand new, beautiful. It's jobs. And the auto business, we're going to bring back probably, we lost 57% of our automobile business. I think we're going to bring it mostly back. And for chips, we were the king of chips, and then it got stolen from us. We went from being the king to having basically no chip business. the CHIPS Act that was done by Biden.
All right, so we'll keep bringing you updates over the course of the day from that G7 summit. But in the meanwhile, let me go across to my colleague Somit Sarkar, who's joining in with all the chatter from the dealing rooms. Somit, very interesting updates coming through on Dixon earlier today and the stock impact there as well. But what are the individual counters that you're focused on?
Well, the first name is on Trent. Now, what dealers are indicating here is that one of the analysts of an MNC broking firm is pushing sell calls on the counter, and this is largely because their channel checks are indicating that the Q1 sales for Trent could be on the weaker side. So keep an eye out for this counter. The stock was up around 5% yesterday in trade. For Reliance Industries, there are buy flows on the DI desk. Dealers are expecting Jio IPO announcement to come in anytime soon. On June 19, do remember that Reliance Industries will be holding their annual general meeting. For JSW Infra, the fundraise is on card, and this is largely because to dilute the promoter holding. But what dealers are now indicating is that GQG could be an anchor investor in this fundraise of JSW Infra. For Shyam Metallics, there are buy flows on the PMS desk ahead of the analyst meet. Dealers are expecting strong commentary to come in from the management side. And lastly, when it comes to Laurus Lab, wild moves are something that we are seeing. The stock was down nearly 3% at one point of time, and this was largely on the back of a buzz of a block deal coming into the market. But what now dealers are indicating is that the block deal size will be very small, and hence we are seeing this recovery coming in the share prices of Laurus Lab. So keep an eye out for that counter as well.
All right, quite a few buzzers there. Thanks so much, Somit, for bringing us those details. Keep an eye on all of the stocks that we've that Somit has just highlighted for you. Nagaraj Shetty, technical analyst and derivative research analyst at HDFC Securities, as well as Avinash Gorakshakar, who's founder and head research at Avinash Mentor Research Services, joining us right now. Gentlemen, thanks so much for taking the time, and apologies for the delay. It's that kind of afternoon. News is breaking thick and fast. But let me come across to you, Nagaraj. We're holding very close to that 24,000 mark, but failing to cross it. What are the trends that you're seeing for the benchmark Nifty 50 and relative underperformance for the Nifty Bank today?
Hi, good afternoon, Alex. Yes, Nifty has been showing sharp momentum over the last few sessions. I think the trend reversed up on the and I'm expecting Nifty to surpass above the 24,100 levels very easily in the next 1 or 2 sessions, showing some minor consolidation at the hurdle. Eventually, we could see Nifty breaking above the 24,100 levels and reaching towards 24,500 in the near term. As far as Bank Nifty is concerned, Bank Nifty was outperforming, in fact, the Nifty over the last many weeks, showing some consolidation. That is cannot be said as an underperformance, but just a breather pattern is forming at the higher levels at the hurdle. I think this is just a temporary pause before the further upside in the near term. So next upside levels to be watched around the 58,500 in the near term.
Okay, so that's with regards to where Bank Nifty goes as we speak. But you know, in terms of Bank Nifty as well, if you can help us understand any picks that you have overall in terms of markets, because you're seeing some bit of momentum that is coming in, Nagaraj.
Nifty frontline and mid-cap PSU banking are looking very positive. If you take up PSU banking bets like a Bank of India, Canara Bank, and Union Bank, they are looking very positive at the lower levels. They have bounced back very well, forming some basis PSU banking stocks in the near term.
Got it. We seem to be having a little bit of an issue with Nagaraj's frame. But Avinash, let me come across to you for a view on what you're seeing today that is looking interesting, because there are a few pockets where there is significant underperformance. But if I specifically ask you about the financial space and what we're seeing and what we marked at the start of this 1 hour as well, which is that the private banking names are doing better seemingly than the public sector banks. Would you buy into that right now? Would you wait on the sidelines in the financial space?
Good afternoon, Alex. I think private banks, we like Axis as well as ICICI Bank. Of course, there are smaller banks like Federal Bank, IDFC First. I believe, the banking sector would be a key beneficiary once the geopolitical situation gets completely, corrected. And most importantly, I think credit growth has been very strong. I think banks are not seeing a large deposit growth. But I think in terms of the quarterly performance, maybe the Q1 numbers may be a slightly tepid number. But in the second half of this financial year, Alex, I think some sort of stronger growth could be expected. My sense is that even the PSU banks could be looked upon, something like an SBI or a Canara Bank. these are banks where the asset quality has improved significantly. The balance sheet is healthy. So I think apart from the banks, we have been telling our clients to look at good quality NBFCs. I think Bajaj Finance is one company, Shriram Finance, which largely supports and finances commercial vehicles, could be also an interesting bet. So all said and done, the financials, including banks and NBFCs, should do well. And I think structurally the story and the theme looks promising for the next financial year.
While we're on the subject of the banks, we've got exclusive information coming through on the bottom of the screen, and this has to do with HDFC Bank. Now, you will know the context. The context, of course, is that the former chairman, Atanu Chakraborty, split ways with the bank in not the best circumstances. And to fill in that gap, you had Keki Mistry that came to the fore and was appointed, of course, interim chairman. What is happening right now? And sources are telling NDTV Profit that the former deputy governor is among the names that are being considered for HDFC Bank's chairman post. Shrimi, with the second big break of the day today, it's a day of hits for Shrimi today. Shrimi, what are you picking up?
Well, thanks, Alex. Very kind of you. So what we are picking up from people privy to the development is that the former RBI DG Rajeshwar Rao is among the names being considered for the top position of chairman at the bank. And the bank is expected to shortly submit its recommendation to Reserve Bank of India for approval. And in fact, Rao is one of the front runners for the chair role. And he is understood to be among the candidates under active consideration is what indication we are getting. Appointment comes at a crucial juncture of HDFC Bank, as we know that lender is currently awaiting the finding of an external legal review commission after the Atanu Chakraborty resigned in March, citing governance concerns. So that report is also expected, probably the end of this week or early next week. The review is, of course, expected to examine issue on the governance processes, etc. But against the backdrop, the selection of bank's new chairman assume added significance as the board seek leadership stability while navigating the ongoing governance scrutiny. And of course, the tenure of interim chair Keki Mistry is set to end on June 18th, Alex. And sources indicating that Mistry may receive an extension until a new chair is appointed and receive the necessary regulatory approval. As the RBI regulation says, the appointment of chair of a private bank requires approval after the board finalizes its recommendation. So we need to definitely wait because a lot of action is coming since the tenure of the interim chair is ending, and then the bank is ready with some name recommendation of Rao as well. And we have sought, comments from HDFC Bank which remain unanswered. Also, we tried reach out to Rajeshwar Rao for comment, but he did not elicit a response.
Right. Thank you so much, Shrimi. You're on a roll today. I mean, a story after story is what we're picking up from Shrimi Chaudhary. So that's with regards to HDFC. Avinash, any view? I mean, former RBI Deputy Governor Rajeshwar Rao, he could be one of the names being considered for HDFC Bank chairman post. That is what Shrimi has been picking up. What do you make of this? I mean, how do you see the fit in terms of where the bank is progressing?
No, I think, Hiral, definitely this is definitely a positive news flow. I think if it does happen, I think the markets will definitely be happy. But I think more importantly, the markets would be looking at key data points, what kind of deposit growth, what kind of, asset quality, and overall, what kind of growth momentum comes back to the bank. I think Q4 was not very great. And I think at least partially, the markets will be contented that at the chairman levels, definitely a mature and a very senior person would be inducted. But I think finally it's going to be the number and the data performance. So I think we keep our fingers crossed. Hopefully, if the numbers are also much better than what the street expects, then I think you could expect a good bounce in the HDFC Bank stock.
Yeah, absolutely. So certainly one to watch out for. Remember that HDFC Bank has been a rank underperformer. Pull up the year-to-date chart and we'll see where it is at, and the one-year chart as well for HDFC Bank. 784 right now on the ticker. This year itself, the stock is down as much as 21%. Pull up a one-year chart for HDFC Bank and it is, well, down as much as 19% or thereabouts. Quite a bit of that damage or capital erosion has taken place this year as well. Now, a group of stocks that is buzzing in trade today on the back of news flow is the windmill companies or renewable companies that have to do with windmills, and that's because Union Renewable Energy Minister Prahlad Joshi has flagged the issue of aging wind turbines in the country. And he was speaking at the Global Wind Day conference in Goa, and he asked industry bodies to submit a detailed nationwide assessment of old turbines. Listen in.
Since we have a large number of old turbines, including many of 225 kilowatt projects, I would like IWTMA and WIPPA WIPA to submit a detailed assessment within 13 days about the number of such turbines. आप सुन रहे हैं तंती जी? Across the country.
Okay, so, this becomes beneficial as well. Nagaraj, if you have to look at both of these counters, because fundamentally, yes, you could see order wins that could be coming in, but on the charts, are you seeing any strength on a Suzlon or an Inox Wind?
I think it looks like Inox Wind showing some bottom reversal. On chartically declined a bit from the higher levels. I think worst period seems to be over for this Inox Wind, and 80.78 is going to be the strong support. The last 2 weeks candle pattern is indicating some revival is on card. I think some more evidence is expected, but I'm expecting this pain for this Inox Wind seems to be over, and more upside is likely in the near term.
Okay, so that's with regards to where wind turbine related companies go. But another stock which is in focus is a Coforge as well. And more than what's happening in terms of the stock price, because your entire IT pack is up in trade, 4.5% up move on a Coforge. Its investor day is what is ongoing. And they've highlighted $5 billion revenue vision by FY30 and $2.4 billion by FY26. In fact, the company remains focused on AI expansion as well.